women leaders were actually better at controlling the deaths from COVID-19. Do you think out of this pandemic, we'll see more countries be willing to elect female leaders?
When we look at women leaders, we tend to project on them baggage that they shouldn't bear.
Women are given an opportunity when no one else wants to do the job.
Women had a very clear objective. They wanted to save lives.
The women leaders, if you look at their careers, have also built up a level of trust.
In fact, women have to be better at communication in order to be elected as leaders, whereas this doesn't hold true for men.
We need to get those sexist stereotypes out of our head and give women a fair run for leadership.
Trying to change the stereotypes about women is not only the business of women, but men have to be part of it.
From London and New York, good morning to you all. It's Friday morning. I know many of you have not slept over the last several days. For our audience worldwide, we're live on Bloomberg TV and radio alongside Tom Keane and Lisa Abramowitz. I'm Jonathan Ferro. Here's the price action. In 60 minutes, you'll have a payrolls report. I have no idea how long you'll look at those numbers, but it comes out and we'll do it for you right here. Euro dollar going into that. Firmer, higher euro, stronger. 118.73 up 0.4%. Yields creep up just a little bit, but what a rally we've seen over the last 48 hours on a 10-year to 0.7731%. And in equities, down 28 points on the S&P. We shave about 0.8% off the S&P 500. Quite a run. A rally on Monday, Tuesday, Wednesday, Thursday with a different flavour. Growth equities, Tom. Big tech coming back in a huge way following that election.
You sound like The Cure there. Tuesday, Wednesday, Sunday, Monday on my mind, whatever that song was years ago. John Ferro, I'm looking at gold. Let's not forget gold up $50 over the last number of days in this rally, 1953 an ounce. We need an update. Emily Wilkins with us. She is of the Biden camp in Wilmington, Delaware. What does the morning look like for the Biden team, Emily?
Well, the sun is coming up over Wilmington, Delaware, and I think the Biden campaign has to be feeling pretty good right now. For the last 3 days, they've been having an optimistic and positive message, but they have also urged patience. They have urged Americans to wait. They have urged Americans to remain calm, but all that waiting might finally pay off today if we see the results from Pennsylvania or Georgia or Nevada or more networks call for Arizona.
Emily, given the fact that we're likely to get calls for recounts, legal challenges, et cetera, what is the threshold for Joe Biden to get on that stage and declare victory?
That's a wonderful question, because we've already seen some of these lawsuits that the Trump campaign has filed be thrown out. And at this point, they haven't really brought forward a lot of evidence that there is fraud in an election. That could certainly change. We could wind up having a big lawsuit. I think one of these things to look for is how many states wind up getting called today. I mean, if Biden gets Nevada called for him, then he's at 270 with Arizona. If he gets Pennsylvania called for him, then he's well over 270. So the more states, I think, that kind of contribute to pushing Biden over the 270 line, the harder it's going to be for the Trump team to pose actual credible legal challenges in all of these states.
I mean, I think it's really important to keep saying the following, that there are still narrow paths for a whole range of outcomes, including Mitch McConnell losing his majority in the Senate. And Emily, I want you to speak to that, because a lot of our listeners, our audience right now in this market are thinking about the prospect of maybe the blue wave in some way could still be on the cards. There's a narrative right now of divided government, and that's what the market's been trading on. I assume that's what I'm told over the last 2 days. Emily, can you talk to that? What is going on with Congress, in the Senate, with the voting, especially in Georgia?
So I might not call it a blue wave, maybe like a blue mist is that what I've heard might be a good one for it? I mean, at this point, we've got 4 races that are left uncalled. The ones in Alaska and North Carolina are trending toward Republicans. That brings us to the 2 in Georgia. Big if, Democrats can pull off both runoffs, then we will go into the next Congress with a 50-50 tie in the Senate. If Biden has the White House, that means that Democrats have a slight upper hand, but it's incredibly slight because remember, that means that they can't lose a single senator or any vote to get things done. So that ambitious Biden agenda that we saw, the health care reform, the major climate bill, all of that was probably going to have to be scaled back a little bit if we're looking at a Biden administration and right now kind of the best case scenario, a 50-50 control of the Senate.
Emily Wilkins, thank you so much. In Wilmington, Delaware, with the former vice president, and we'll see an eventful Friday. Surveillance Correction, It's Friday, I'm in Love, is the Cure song that we were talking about earlier.
It's a great song.
Was waxing poetic
in my head.
Earlier on. Right now, we turn to jobs. It's odd days. The Fed meeting yesterday, were we focused? Was Chairman Powell focused? This labor economy, how can we be focused given this politics? Ellen Zentner of Morgan Stanley is focused. Ellen, I don't buy the idea of an under 8% unemployment rate. Is the unemployment rate of this nation under 8%?
No. But that's the narrow measure, as you know, Tom, that's more widely reported. It's got the longest history.
What is our unemployment rate?
Well, under there's the statistical errors that put that 7.9% that's currently on the books is really 11.2% roughly. And then you've got underemployment, which is higher than that. So anyone that would like a job but doesn't even look right now, and of course there are a lot of those given the issues out there with COVID, some businesses shutting back down after having opened up, nervously eyeing what's going on in Europe, where that underemployment rate could rise rapidly. And we just don't know. We're going into what could be a winter of discontent as we all move back indoors. And so I don't think we should be surprised if after today's report, because I do think job growth was still strong in October, if these metrics don't worsen over the winter.
So let's talk about what you're looking for in today's jobs report to get a sense of just how much the labor market could worsen or at least deteriorate in terms of improvement if we continue to see the kind of virus spread that we are seeing right now in the United States.
Yeah, so it's a good question. So the number that we're expecting is quite a bit above consensus. Consensus around 600,000. We're looking for 900,000. And that's a big number. It's still a lot slower than where we were. It's a lot slower than the 3-month moving average. This is something that Chair Powell had underscored as well. But we're continuing to bring jobs back to the labor market. We'd like for it to be at a quicker pace. And, of course, you would expect that pace to slow down quite materially over the winter, especially if more of the service sector is having to retrace some of the opening. And so you can fall into the area of 300,000 or lower, depending on how bad the winter might get. And that could be enough to send the unemployment rate higher after tracking lower this whole time after reopening.
Ellen, you and the team made a massive call coming out of lockdown, a call which meant the U.S. economy would climb back quickly. It has done. What I hear, though, in the last couple of minutes, Ellen, just a few cracks that maybe you think the right wing of that V starts to flatten out. Is that fair?
Yeah, I think that's fair when you think about the risk to the economy. I mean, one thing is, why has the Fed not shifted their view despite the long string of upside surprises in the data? Because COVID is still the number one risk, as they say, the significant risk to the economy. So it's not going to matter, what the data looks like going into the winter. It's not going to matter how much more stimulus a Congress puts in. It's all about COVID, and until we get out from under that cloud, it's not really going to change monetary policy. One reason why we've had that very strong V shape coming out of lockdown versus a much more sluggish recovery in the labor market. If you look at the labor market, it certainly doesn't look like a V, and that's because the less labor-intensive parts of the economy are what's driving GDP. So, for instance, the goods sector, non-durable and durable goods spending, moved back to their pre-COVID levels as early as June. But the more labor-intensive parts, the service sector, makes up a greater share of the labor market. So the labor market recovery here is going to be a lot more lagged than GDP. And it's one reason why it's nice to have told that V-shaped story, but that doesn't matter. What's going on in the labor market with labor force participation rates, especially of women, of unemployment rates, of minorities, that is what matters.
On Bloomberg Radio and Bloomberg Television, Ellen Zentner with us, and we will continue. Pennsylvania shows a little bit of early return of votes here before the 8 o'clock hour. The gap has been narrowed there from 18,229, all 182 points. Mr. Biden behind by 18,047. So it's a little bit in his direction, but just a little bit of a tweak there of what we see in Pennsylvania. Much more, according to our Kevin Cirilli, to come. Ellen Zentner, what's our wage doing? I mean, I really am fascinated by the two Americas and the partition of wages.
Yeah, so wages initially were are being driven higher by those returning to work and getting hazard pay. And so that's what's had to occur for some of those lower wage service sector areas of the economy to get greater pay, is that you've got to do it under duress. Not under duress, but hazard pay in order to compensate you for taking the risk of going back to work in this environment. So that has shifted wages higher on a year-over-year basis than they've been the entire prior 10-year recovery. The question is, how sticky is that? So as things normalize after a vaccine, does that hazard pay stick, or do employers start to graduate that back downward? And I think it's going to be very difficult for employers to take back that hazard pay. I think it'll be entrenched by then. I think it's going to pressure labor costs in the service sector. But that's something that remains to be seen, and something that equities investors, of course, will have to weigh.
Ellen, wonderful as always. Love catching up with you, especially on Payrolls Friday. Ellen Zentner there of Morgan Stanley. Just a few cracks in the outlook. If you're just tuning in, the latest news from earlier this morning in Georgia, Vice President Joe Biden taking a very small nominal lead. He's got some momentum there. He has some momentum. In Pennsylvania, Tom, though, he still is lagging behind the president. The counting does continue. Right now in this market, Tom, what are we? About 50 minutes away from payrolls in America. Hardly anyone's paying attention to it. 100,000 cases, COVID in America. Hardly anyone in this market's paying attention to it. When we get past this phase, Tom, this phase around the election result, how quickly do we get back to COVID and looking at the outlook for a vaccine?
Instantaneously. The vaccine is a separate story. That's a science mission. But this labor economy and the mysteries that you just heard from Ellen Zentner there, that's not going to go away. And it's apparent right now. John, I would go back again to John Edwards' idea of two Americas. And the new two Americas, to me, is extraordinary. The separation that we see in New York, I assume you see it as well in London, John, the partition of those not prospering but surviving comfortably in this pandemic, let's be honest, like all of us, versus so many really aggrieved. I've never seen anything like it.
Two Americas in this election in a big way as well, Tom. In fact, many Americas.
Yes.
Let's get to this price action. This Friday morning, we look a little something like this in the equity market. On the S&P 500, we roll over. On the S&P, we are negative after 4 straight days of gains. Here's one. I feel so privileged to be in this position because my audience is so much better at this than me. Monday's rally didn't fade. Tuesday came the Biden trade. Wednesday, big tech had it made. It's Friday. I'm in love. Kim Khan, who wrote in, you skipped Thursday, but
gold.
Thank you. That was beautiful.
Brilliant.
Alongside Tom Keene and Lisa Abramowitz, I'm Jonathan Ferro. This is Bloomberg.
With the First Word News, I'm Rishika Gupta. Joe Biden has now overtaken President Trump in the state of Georgia. The latest tally of votes gives the Democrat a slight lead. Biden has also cut into the president's advantage in Pennsylvania. He's getting closer to the 270 electoral votes he needs to win the election. President Trump says the election is being stolen from him, but he's offered no evidence to back that up. His campaign has filed or promised to file lawsuits in several battleground states. President Trump's special treatment on Twitter would end in January if he's not re-elected. Twitter has often left up tweets from the president that violate its policies, although it adds a warning. But if Donald Trump were no longer president, his tweets could be removed entirely if they include hate speech or types of false information. And the U.S. has become the first country to have 100,000 new coronavirus cases in just one day. That's according to data from Johns Hopkins University and Bloomberg. Indiana, Ohio, Michigan, and Illinois were among states reporting record number of infections yesterday. China's President Xi Jinping is signaling a different sort of long-term vision for the country's economy. Xi calls for it to expand at an average pace of less than 5% a year. That's well below the historical trend of the last 30 years. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
This is Bloomberg Best, your weekly review of the most important business news, analysis, and interviews from Bloomberg Television around the world.
Ken Burns, welcome to Bloomberg Big Decisions.
We have always been a mixture of things. We are always stronger for that mixture.
Growth is a way to stay competitive, delight more and more consumers.
Welcome to the Best of Bloomberg Technology. I'm Emily Chang.
They've moved the needle by acknowledging that they have to monitor the content.
What is one word of advice you'll take with you?
Learn how to listen. And that is certainly something that has served me well.
Ankiti, where do you go from here?
It's a huge market, it's a huge opportunity. I want to go 100x from here.
Our philosophy is to partner where we can and stand apart when we should.
What is happening today in India is actually a determination to rebuild our economy.
India has an opportunity not only competing in the space of the factory of the world, but a very big opportunity to compete in being the office of the world.
We explore the trends, investments, and competition of the European ETF industry. Join us on Bloomberg ETF IQ Europe.
There are $3 billion being prepared. So the lending program has increased. So that's the very important feature we did not expect.
It's going to take time. We anticipate having the count, quote unquote, done when the legal deadline for certification is, which is going to be 10 days after the election. That's when we're done, because there are ballots that are still coming in, there are ballots to be cured, there are ballots that are provisionals that are to be verified. So we can't know how long the process will take.
Gabrielle Sterling there, voting system implementation manager for Georgia. Tight races in Georgia, in Nevada, tightening races in Pennsylvania and Arizona as well. We'll talk about that in just a moment. From London and New York this morning, good morning. Alongside Tom Keane and Lisa Abramowitz, I'm Jonathan Ferro. 42 minutes away from the payrolls report in America this Friday. This is the price action going into that number. We look a little something like this. Stocks lower, down 30 on the S&P. We're negative about 0.9%. 4-day winning streak on the S&P. Big week of gains on the cards, even with those losses, if they materialise. In the bond market, just a bit softer, yields just a bit higher, up a basis point to 0.7748%. And in foreign exchange, really the story of the moment. For anyone in foreign exchange right now, the belief is if you get a Biden White House, you flush through some real dollar weakness into this foreign exchange market, Tom. And I've got to say, over the last several days, that is precisely what has happened.
The acceleration of that trend has been substantial in renminbi and particularly in Japanese yen. I'd also note really significant Pacific Rim strength as well as seen through the ADXY index. What we like to do is speak to experts. We just talked to Laura Brown at George Washington about the need for experts in Washington. On election law, he is the nation's expert out of Harvard and Yale, and of course a tour at Ohio State, and now the dean of the University of Wisconsin Law School. Daniel Tokaji joins us right now. Dean, thank you so much for joining us here. Your book, Election Law in a Nutshell, is on the edge of definitive. What does election law in a recount look like?
Well, it looks like a lot of different things in a lot of states, at least in an election like this one, where several states are still in play. But the bottom line is that while there have been a number of small lawsuits brought by Trump and the Trump campaign's allies, I don't think any of them are going to decide this election, and that's really good news for our democracy. There have been... It's dubious whether several of these lawsuits have any merit to them, but, people are entitled to file cases if they believe there's been a violation of election laws. In the cases that have been brought so far, it looks to me like all of them are small cases affecting a small number of votes and highly unlikely to make any difference in the end.
In 1960, the focus, or at least the lore, is on Chicago, Mayor Daley, and Illinois. The reality is the real narrowness of 1960 was Hawaii. I believe it was 115 votes in favor of JFK. How narrow is narrow for pros like you?
Well, it really depends upon the size of the state and how many ballots can legitimately be called into question. I mean, of course, we had 20 years ago a really narrow election decided by hundreds of votes in the critical state of Florida. It doesn't look at this moment like any of the states are going to be are going to come down to that margin, at least ones that are going to be pivotal, right? It's possible Arizona could wind up being super close, for example. Possible Pennsylvania could wind up in that territory, although on the trajectory that Biden's on, it looks like he's likely to pull ahead. So I don't think we're going to see an election that's coming down to the hundreds of votes where these very small bore lawsuits the Trump campaign has brought or are being supported by are likely to make a difference.
Dean Tokaji, can we zoom out a little bit? There is a question overall of whether this election was fair in a voting inclusion type of way, whether the absentee ballots, the mail-in ballots were done and conducted in a good manner, whether the long lines that were reported in certain municipalities were prohibitive to certain people voting. What's your overall take on how well the nation did this time around with voter inclusion and freedom of speech?
I'm so glad to hear that question because it's a really important one. It's really easy to get lost in the details and miss the big picture. And to me, the big picture is, boy, this election has really gone incredibly well, despite the enormously challenging circumstances that election officials, poll workers, and voters have been operating under. I mean, we've got 5 states that haven't been called because they're really close, and yet the serious problems that we've encountered in this election have been really quite scant from an election administration perspective. I mean, compare this to Florida 20 years ago or Ohio 16 years ago. Those were the pivotal states in those years, and both of them were just a complete mess from an election administration perspective. So I think the fact that we're really just seeing small bore problems in this election is testament to the enormous improvements in our election administration infrastructure over the last 16, 20 years.
That said, Dean, there is a question about the United States Postal Service and their role. There are a number of cases where they had to disclose that they did not track possibly thousands of votes and when they actually got delivered in Pennsylvania. Does that concern you, the increasing role of mail, if this serves as a template for mail-in voting in future elections?
You know, I think there are some risks with mail voting. I mean, it's certainly true that in general, mail voting is reliable, but there are, in every election, a number of people who try to vote by mail where at some point they or their votes leak out of the pipeline, whether it's, you know, their initial request for an absentee ballot isn't received, their absentee ballot isn't received, it isn't sent back in time. There are some technical problems like the so-called naked ballot or the failure to return them on time. There are some leaks in the absentee ballot pipeline, and if the postal system isn't reliable, those leaks are going to be greater. So, yeah, that is concerning. I view that as being a little bit apart from our election administration system, that is, from the election officials and poll workers who are actually running elections. But you know, if the postal system doesn't work well and we're increasingly relying on mail voting, yeah, we are going to have a greater number of people who don't wind up having their votes counted. Fortunately, in this election, despite these problems, those numbers, again, still seem to be reasonably small as far as we can tell, and probably not likely to affect the result.
Daniel, great to catch up with you, sir. We appreciate your time this morning. Thank you. Daniel Takaji there of the University of Wisconsin Law School. Headline just crossing the Bloomberg. It comes from NBC. The Republican Senator Toomey saying that the president's allegations are not substantiated. The allegations being allegations of widespread fraud and irregularities in this particular vote over the last, not just the last week, but the last several months, and the counting of those votes as well, Tom. A little bit more distance, some daylight from some Republican senators coming through with their president.
Yeah, no question. Also, we have 54,000 votes outstanding in Philadelphia. I just interpolated that. Biden needs 68% of those votes to take the lead in Pennsylvania. John?
Coming up on this programme, Michael Holland, Holland & Company chairman. We'll get to him in just a moment from London and New York. This is Bloomberg.
The big concern is climate change. We can see the global warming accelerating at the moment, and the goals that we must hit are so ambitious. It's 1.5 degrees by 2050, being climate neutral in terms of emissions by 2050. That's a huge challenge. We have to reduce emissions by 50%, 2030, 2040 again. It's very, very ambitious, and mobility plays such a crucial role in there. One thing is to do it in developed countries. I think we're going to get there by 2030, but then the rest of the world, and that's just as important. If you look at developing countries, emerging countries, that's where probably the biggest challenge we are going to face, to also deploy EVs there and make mobility greener in those countries. I know it's possible to move mobility forward fast enough to be able to do its part in this fundamental threat that we're facing.
Do you think you'll have to produce less beer in 2021?
No, I don't think so. I think consumers will find a way. But I mean, if there are restrictions, but consumers, of course, are smart and they'll learn to live with those restrictions, I think some occasions will migrate.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
Welcome to That's Debatable, an interactive series on today's most pressing issues. The resolution this time: is a U.S.-China space race good for humanity? We'll hear from both sides.
The competition, if you look at the past, led to innovation. A whole new arms race could start.
And we'll get your perspective, too, with help from the artificial intelligence of IBM Watson. I'm John Donvan. Join us for That's Debatable, presented by Bloomberg and Intelligence Squared, Friday on Bloomberg Television.
Patience is the real key here, and what the market wants to see is something that is orderly.
We could be still living in this uncertain environment around the stimulus for a while.
The biggest downside risk is that we get divided government and gridlock.
The longer the uncertainty, the more the stimulus talk is going to be delayed. People are going to worry about growth again.
The economy is slowing to noticeably below the consensus expectation.
The Fed has a very tough job right now. You're out of tools.
It's going to get worse before it gets better. A lot of regions may see double dips.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
Good morning, everyone. Jonathan Farrow, Lisa Abramowitz, and Tom Keene. We welcome all of you to an extraordinary Friday morning, an extraordinary 8 o'clock hour on Bloomberg Radio and Bloomberg Television. It is Jobs Day. We will look at the state of this pandemic economy at 8:30. But John Farrow, we will also begin to see substantial count and returns from these key states of Georgia and Pennsylvania.
Really tight races in places like Georgia and Nevada, Tom, and tightening races in Arizona and Pennsylvania as well. And that's the focus for market participants. I would go one step further, though, Tom. Also a focus on the Senate. I think our reporter about 30 minutes ago said it wouldn't be a blue wave, it would be a blue mist if we have that 50-50 in the Senate with a Biden White House. That would really change the story. And that just goes to speak to the fact that just a small shift in the politics in the next few hours, the next couple of days, Tom, then you've got to reshape the narrative of the past couple of days that has been driving this market.
It's been driving the market with a correction today. We'll get to the data here as we move along. Futures negative 38, the dollar a little bit weaker. Gold up $50 over the last number of days. Michael Holland's scheduled to be with us on the markets. I'm still trying to find an entry point, John. But, John, to me, the thing is we've been getting dribbles in Georgia, two waves of teensy-weensy little bit in Pennsylvania. At some point, John, we're going to get a wallop of results, particularly from Pennsylvania.
Yeah, and Tom, I've got to say, do you know what's going to be really, really interesting? If it's not Pennsylvania, if it's somewhere else, if you've got Arizona in the column for Biden right now, then some other state would take him over the line. And I think what's interesting, if you don't have Arizona in the column for Biden, what happens, Tom, if he gets to 270 because you've given him Arizona? Do people start to make the call? Does he come out and do an acceptance speech? Or does he wait when others have still got him on 253? What happens there, Tom? What does that look like in the next several hours?
It's one of the scenarios, and as people say, Mr. Trump has X paths to election. It's a pretty narrow path, and Mr. Biden has a little more optionality as well. Lisa Abramowitz, on the job economy and what Ellen Zentner told us of Morgan Stanley, is the unemployment rate really just under 8%? I don't buy it for a minute.
Well, and neither does she. I mean, she said this is a very narrow measure, and the concern is that the improvement that we have been seeing and we're expecting to see in about a half hour time is going to diminish as COVID continues to spread. And I will just say, John mentioned that next week, how quickly will it be that the pandemic is front and center? The answer is very. We're seeing record numbers of cases in the likes of Illinois, Ohio, Michigan, Indiana. And the question is, at what point do we hit peak capacity for some of the ICU beds that leads to new lockdowns, Tom? That will have a crippling effect on a lot of aspects of the job market recovery.
And just a complete aside, out on Twitter last night from the Swiss government, I saw a beautiful moving chart of the hospitalization ratios in Switzerland, and it was truly shocking and really pretty grievous as we see those lockdowns, which we've barely touched on today. Right now, he deserves to be in lockdown. Kevin Cirilli is with us, our chief Washington correspondent. Kevin, I'm going to go again to your Pennsylvania skill. Why aren't we talking about Pittsburgh?
Well, three things. First and foremost, because that specifically is where Joe Biden could pick up some key votes that would push him over the threshold. But secondly, I was just looking at the front page on my cell phone, nonetheless, but the front page of the Erie Times News.
Love it.
Above the fold in Erie County, Biden overtakes Trump in Erie County, just above the fold, and right over the story that is local officials saying, have a small Thanksgiving. I bring this up because Erie County, Tom, was one of 3 counties that President Trump carried in 2016 that he flipped in the Keystone State against Hillary Clinton. Biden now flipping back right now by a very slim margin late last evening, Erie County, Pennsylvania, and it's playing out in the front pages there. And then the third point that I would make here, it might not come down to Pennsylvania. It might come down to Georgia, where just before I got on air, I looked at the tally, and Biden has overtaken Trump in Georgia by 0.02 percentage points in the state of Georgia. Georgia fascinating because, as Jonathan just alluded, this could be a runoff election in the Senate race in Georgia, and all of the Republicans down there and the Democrats might be needing to turn out for the polls. This is the president is raising concerns that he feels so far no evidence presented of voter allegations. Quickly, Senator Pat Toomey, retiring Republican senator of Pennsylvania, just saying within the last half hour on the Today Show on NBC that he sees no signs of voter fraud in Pennsylvania.
Meanwhile, Kevin, this just out, Senate Majority Leader Mitch McConnell put out on Twitter that here's how this must work in our great country. Every legal vote should be counted. Any illegally submitted ballots must not. All sides must get to observe the process, talking about some of the legal challenges. When will we have a definitive sense that the result will hold, given the fact that we are looking at a scenario right now with many, many legal challenges, as well as recounts that are potentially on the deck for Georgia in particular, given how close it is there?
Based upon the chronology of the state officials on the ground in all the battleground states, I would anticipate that we are still at least 24 hours away from that happening. And dare I say, we could even be in a situation on Monday or Tuesday of next week. I don't want to get too far ahead of it, just in the sense that we're carefully tracking all of the data that's coming in. But to your point, Lisa, what Senate Majority Leader McConnell just articulated there in that statement was what a very measured statement that Republicans are also having to navigate. I would note that that when you've got 69 to 70 million Americans casting a ballot for President Trump, even should he lose, that is still a large percentage of Americans who backed him, and as a result of that, the Republican Party is having to be measured in how they navigate this.
Okay, Kevin, in the last 12 minutes, Toomey of Pennsylvania and McConnell of Kentucky have basically said to the president, stop it, right?
Well, look, no. I think that I would not interpret McConnell's statement as saying stop it. I think, I've got my eye. I mentioned Pat Toomey, 2 other House members that have come out publicly, a bit more aligned with the statement that you just made, Tom. soon-to-be former Representative Denver Riggleman. He lost a primary several months ago, but he is a Republican from rural Virginia. He said he was critical in tweets of the president just within the last 24 hours. And also, this is interesting, also Congressman Adam Kissinger. He's another Republican, but he's a rising star within Republican parties. He's a veteran as well. And he came out and urged caution in terms of how the president is speaking. I would anticipate that this is going to be a new divide of sorts for every Republican to have to answer to in the next 24 to 48 hours. Quickly. And I want to make this because this is important. Senator Chris Coons, Democrat from Delaware. Joe Biden mentioned his name the night of Election Day. And people like Tony Blinken, for example, all of them quietly, I'm told, based upon my reporting, continuing to have conversations with Biden's campaign, and Biden also having some meetings with his transition team. So that aspect of this story is also quickly evolving. This as the Trump campaign also continuing to make actions. You could have a situation where the president starts firing people, et cetera.
Kevin Cirilli, thank you so much for the perspective. We're going to segue now abruptly to Michael Holland of Holland Company, who has a long-term investment perspective. He's watching a recount to see if the NASDAQ will go up another 10% in 4 days. Michael Holland, what do you do here? I mean, within this emotion, you're the only one I've booked who actually remembers 1960. What do you do here, Michael Holland, to get beyond this election?
Back to where we were last week when you had me on and the market was tanking from some other fears. I said, don't just do something, stand there. In other words, take it easy, take a deep breath. What you just heard from Kevin Cirilli is this thing. Along with you, I listened to you a few minutes ago before the show started here with an expert talking about the Supreme Court getting involved. And it looks as if on the legal side, the market isn't going to have anything significant to worry about. The pushback from some of the early Republicans would indicate that. So I think, as Lisa was saying, that we have COVID and the pandemic to worry about next week. I think in that case, there are three things the market's worried about, and I think each of the three should be okay over the next few months. The vaccine is going to come. The Fed is going to be there, the most important part of this puzzle. They are going to continue to support the economy. So for the stock market, things are going to be okay, bond market as well. And then the last thing is we will get some sort of stimulus because there will be some coming together of the two sides, maybe at least smaller than it would have been otherwise. But the market last week had been afraid of radical moves economically and tax-wise. We're not going to get those because of the strong outpouring of Republican voters. So I think we're going to be okay. Some of the things that are in the market right now are crazy. We've got a little bit of, you talked about 1960. Well, in 1970, you had the start of the crazy market there with the Nifty 50, where you had this extreme valuation for the tech stocks and some of the other stocks, and the rest of the market was the great unwashed. You have it again. That will reverse sometime in our lifetimes. But right now, I don't think that's something to worry about.
Michael, you said this is what the market's worried about. What's the evidence of worry in this market this week, anywhere, any asset class?
No, gridlock is beautiful, is what the market is saying right now. And to the extent that the Federal Reserve is going to be there, Jerome Powell has thrown this security blanket around the market. And I think, Jonathan, that the gridlock that has come about from the 80 million or whatever it is voters on the Republican side has caused the fears of the market to about extreme movements in Washington. That's dissipated, whether it's a blue mist or whatever. We do have a situation where we have wonderful stocks like J.P. Morgan trading at a 13 times multiple and 3.5% yield, and there are things out there you can buy today, even in the face of people getting a little bit worried.
I've got to say, no one was saying this a month ago, Tom. Gridlock is beautiful. Michael Holland there. Gridlock in a good way. Chris Harvey of Wells Fargo 2 days ago. But here we are. Gridlock is beautiful, apparently.
Yeah, I guess it is. There's just no way to put it. I mean, I look at the equity markets now, John. I look at the where do we have jobs in 18 minutes as well. Michael, you mentioned J.P. Morgan and the banks. When's the when? When do they go?
The great news is you and I have been in this business long enough, Tom. We know that nobody knows the when, but we know the what. When you get extremes, whether it's overpriced parts of the market versus the great unwashed, or the what they call value stocks now at some point in the future, and specifically within the value stocks, you have financials. If we get some peace and quiet to some extent because of the gridlock in Washington, the banks are going to be a place that you would have wished that in November of 2020 you would have put some significant money. And the best of the breed is J.P. Morgan, and it's trading at a ridiculously low valuation.
So, Michael, once the political story unfolds, what's the COVID story that's tradable at this point, given how it's worsening?
Oh boy, that's interesting. As things are coming under pressure, Lisa, I think that whatever reverses. Let's play a game here, and you and I are going to say that 2 months from now we actually have a very successful vaccine, which is actually in significant production and looks as if it's going to get distribution. What is the snapback when you get that kind of certainty? And I think that in addition to the obvious things of healthcare and so on, that could be a trigger for the stay-at-home big tech stocks to the flip side. I'm lousy at shorting, so I wouldn't short the stocks, but that could be a time when those stocks start doing opposite day maneuvers. The big tech stay-at-home stocks. So I would say that anything that benefits from a successful vaccine introduction is, I would say, the great industrial stocks would probably be in that category. You might even get some minor infrastructure legislation from Washington that would help the great unwashed industrial stocks that are trading at very low multiples.
Michael, great to catch up. As always, appreciate your time. Thank you, sir. Michael Holland there of Holland & Company. Thank you. With this equity market rolling over a little bit, Tom, I'm really nervous about assigning these stories to the price action of the last several days and extrapolating things out a week, a month, 3 months, a quarter,
totally
6 months, a year. We're on such a knife edge in places like Georgia right now. In Pennsylvania, this is not done. A lot of people still think in Arizona, this is not done. The AP and Fox News giving it to Vice President Joe Biden. Others have not done that. If you look at the different permutations that could still take that majority away from Leader McConnell, still in play in Georgia, Tom. The narrative that we're talking about right now, divided government is beautiful, all of that good stuff, apparently, that could flip around and turn around in the next 24 hours. Then what?
Yeah, well, then what is right? And we just got in new numbers on Georgia, little tweaks here, folks. I get out the surveillance pen and the surveillance pad of paper and actually do the math. I mean, that's where we are. We'll get a little tweak, John, but you're right. What I go back to this, John, sometime this morning, probably during the open, folks. Look for that on Bloomberg television in the 9 o'clock hour.
Real yield after
We're going to get a gigundous, maybe they'll save it for the real yield
today. There's no real yield today.
We can still promo it.
Stop the show. Excuse me.
Let me tell you,
I'm
if
killing
that
myself. I'm on
who
2
the next
hours
president
a day
would be crossed the Bloomberg when I was on air, Tom Keene would be running to the studio and wrestling the microphone away from me so he can have that moment.
I'm on 2 hours a day, and you can't do the real yield. You
Apparently,
can't
people aren't interested in the bond market today. What do you want me to say?
I'm interested
Apparently,
in it.
that's not a focus. Do you want real yield today? It's
Lisa,
not my decision.
this is un-American. Maybe it's un-British. I don't know.
Look at those markets.
Coming up, Jim Glassman,
no real
JP
yield?
Morgan Chase commercial banking head. I don't know why you're causing trouble. You've got bigger things to do. You've got a count. A count that continues.
I'm doing the math.
Futures down 32. We're down 0.9%. This is Bloomberg, live on radio and TV. This is Bloomberg Surveillance.
With the First Word News, I'm Ritika Gupta. Joe Biden is tightening his hold on the race for the White House. He's now taken the lead in Georgia, also leads in Nevada, and is catching up to President Trump in Pennsylvania. Biden is closing in on the 270 electoral votes needed for an election win. He said he has no doubt that once the vote counting is over, he'll be the winner. Meanwhile, President Trump's campaign filed or promised lawsuits in 4 swing states. He said the election is being stolen from him, despite no evidence of widespread illegal voting. Fed Chair Jerome Powell has opened the door to a possible shift in the central bank's bond purchases. He told reporters that more fiscal and monetary support is needed because rising coronavirus infections threaten the economy. For now, policymakers agreed to maintain their bond buying at the current rate. In France, there's been a record number of new coronavirus cases. Authorities reported more than 58,000 new infections, and the government's health minister warns that there's what he calls a violent second wave of the disease. France started a second lockdown last week. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
I think we'll have a stronger recovery if we can just get at least some more fiscal support when it's appropriate, when it's appropriate and the size Congress thinks it's appropriate. It's a good time to take a step back and let the institutions of our democracy do their jobs.
That's the caveat there. That's the caveat there from Jerome Powell, the Federal Reserve Chair. When they think it's appropriate, I'm not getting involved. Chair Powell's line in the last 24 hours. From London and New York this morning, good morning. Alongside Tom Keene and Lisa Abramowitz, I'm Jonathan Ferro. Here's the price action. A real struggle to understand the price action of this week. And what do you do when you struggle? You reach for the comfort of a nice, pretty story, a narrative about what's happening in this market. Equity futures are down today. What's the story? We're down 0.8% after a massive week. In the FX market, dollar still weaker, euro dollar 118.69. I get it. We're dealing with probabilities, changing probabilities, moving targets. I think it's worth it, though, Tom, to emphasize there are still these narrow avenues to a whole range of outcomes down in Washington. A divided government. You could have a divided government with President Trump still in the White House and a split Senate. You could have that. You could have a situation where you have President Trump in the White House and Republicans still control the Senate. You could have that. That's still on the table right now. Or you could have what's been described as that blue mist in the last 50 minutes, Tom.
I love that.
Look, I know what everyone's base case is. The base case is, at the moment, that you have a Biden White House and a Republican-controlled Senate. But I think it's worth pointing out that the counting continues. It's not clear who's got the momentum and where at the moment, Tom, and it's not uniform. So you can have a situation where, as the counts come in, Biden has the momentum in a place like Pennsylvania. Can you say the same thing about Nevada and Arizona? And right now, I don't think you can.
No,
and that's the problem, Tom.
Absolutely not. The dynamics aren't there, and particularly in Arizona, they're not there, although Rick Davis talks up Maricopa County is giving us some amazing data. What's really important, John, within your observation, is a percent of vote left to count up in each state, and Nevada and Arizona have a much bigger gap than the Teensweens gap in Georgia and the 5% gap, I believe it is, in Pennsylvania. We'll have all that for you in the next hour. Right now, James Glassman joins us. He has a unique position at the J.P. Morgan Chase Bank in commercial banking as head economist. No one I know listens to America and American labor economics better than Jim Glassman. This started for Dr. Glassman out of Northwestern under the great Robert Gordon. I want to rip it up today, Jim. I don't want minutia on the jobs report. I want to talk to you about the emotion we're in as defined by your professor, Robert Gordon, in his book title, The Rise and Fall of American Growth. Are we jeopardizing growth with this election upset?
I don't think so. I think we may be divided, but we have common interests, and we're going to learn over time that it's in our interest to try to figure out how to get more energy in the U.S. economy. And I think some of the loss of momentum in the U.S. is all related to our demographics. Some of it is related to productivity. Guess what? Productivity, we're learning, is giving people, businesses, a lot of options. You're seeing this big jump in labor productivity, and a lot of it's because of that. So I would say to Bob Gordon, interesting idea, but I think it's a little early to write off America's growth potential. And I think the challenges we have with fiscal policy are going to focus us more on what they learned to do back in the 1950s and 60s when the debt burden was also as high. What they did back then was they brought that debt burden way down relative to the size of the economy because we had an economic boom. That's what we need, and I frankly think when we get this behind us, we're going to focus more on the kind of things, infrastructure investment, immigration reform, let the private sector keep going on developing technology. I think we're going to find that there's going to be much more understanding of what it takes to counter what Bob is worrying about.
Jim, in the meantime, we have a pressing issue of the pandemic, which continues to worsen, particularly in the Midwest. And Heights Capital Markets analysts came out yesterday and said it looks likely that there will be increasing restrictions. They called it shutdowns. That is a difficult term to use, but increasing restrictions as some of these ICU beds fill up. What would that do to economic growth in the United States?
Well, you worry that another round of lockdowns would be a problem like what we faced this spring. I have a feeling, I don't think we're going to get there. We may get there on a localized basis, but keep in mind also there's a clock running on getting that vaccine out. So we thought, we're getting real close to getting something out. So hopefully we'll get a grip on it. Personally, I think for all the upheaval in the labor market, by the way, I think it's pretty amazing what's going on because the labor market has been improving. And if you look at the number of insured unemployed people, that has dropped 4.5 million since the September survey. And what these data are telling us is for all the stresses and the upheaval, the labor market is making a comeback, and we're finding a way there. We're not going to get there until we get the vaccine and until we feel comfortable getting on airplanes and flying. That's slowly beginning. But if you're right that there's a whole new wave coming and we have to start thinking more about lockdowns, that would be a problem. We faced that in the spring. Congress did a good job dealing with that crisis. So I'm pretty sure if that was a new danger that we face, we would find the way to resolve that until we get the medical answer.
Well, Jim, just quickly then, how dependent is your outlook for 21 on a vaccine? It sounds like it's massively dependent on just that.
It's important, yeah. I mean, if we have to go through this for another year, this would be, I'd have to scale back my optimism about it. But I think we've made a lot of progress right now, recovering some of the ground we lost. And I think it's pretty likely, and this must be what's going on in the equity market, it's pretty likely within weeks, within months, we're going to have something that's going to allow us to start thinking about getting back to normal. And it won't take much to get back, because we've done a good job getting through this. And I think there's all of our tools are being focused on trying to get the economy back to where we started. And I think it's important to think about what that starting point was, because what we learned was U.S. economy running at 3.5% unemployment is sustainable. And that's guiding the thought process at the Fed, which I think helps. It helps. We know where we need to be. We know this is not anyone's fault. And we're going to deploy all of our tools to try to get there.
Jim, great to catch up. Jim Glassman there, JP Morgan Chase Commercial Bank. The payrolls report out in 5 minutes' time. The median estimate in our survey, 580,000. That's the first time I've mentioned that number today, and we've been on air for 1 hour and 25 minutes. In the foreign exchange market, a weaker dollar Swiss, the Swiss franc, dollar Swiss, a break in 90 at 0.8994. We have not been down here since January 2015. Many of you, including you, Tom Keene, will remember January 2015. I believe that's when the rug got pulled out of that Euro-Swiss 120 floor and the Swissy went flying.
An hour and 25 minutes we've been on air. That's amazing, John.
For me, I know, you get the extra 3 hours. Well done, you did some work this week. For goodness sake. From London and New York, this is Bloomberg. Jobs report in America 10 seconds away. Tom Keene would like you to focus on average hours worked. He believes so much in himself that he thinks he's moved the number over the last month. The estimate 580 on non-farm payrolls. The numbers drop right now. Let's bring in Michael McKee. Hey, Mike.
Hey, John, here we are with a change in non-farm payrolls of 638,000, a little bit better than we saw in the consensus forecast, but not as good as the prior month of 661,000. We'll have to look for the revisions there. The unemployment rate declines to 6.9%, a notable drop. That is down from 7.9%, a full percentage point drop during the month of October. So it looks like a lot of people who were off work because of COVID have now regained employment, although we've got to check and see what happened here in terms of the overall number of people who were employed and in the labor force. I'm looking for those numbers. I'll get that for you in just a second. Labor force participation rate improves by 0.3 of a percentage point to 61.7%. That could also be considered good news. More people into the labor force here. The number of people who worked part-time for economic reasons increased, however. That is not the best news. Now, so we also want to look at the unemployment rates for major worker groups, and it is 6.7% for men and 6.5% for women. For whites, 6%, 10.8% for blacks, 7.6% for Asians, and 8.8% for Hispanics. And as I go through the numbers here, we can look and see what's happened at the establishment numbers. Job gains in leisure and hospitality increased by 271,000. So it does suggest that a lot of people in the bar and restaurant industry went back to work. Retail added 104,000 jobs. Now, we do get a little bit of Christmas hiring in the month of October, and we also get some of the retailers who may have been closed coming back. So that may have added to that. Construction, 84,000. That's the biggest number in quite some time. And it is good news because we're seeing a lot of housing construction, and they had been, it appeared, finding difficulty. And one more, Tom, here, manufacturing up 38,000 on the month. It's still 621,000 jobs fewer than we had in February, but moving in the right direction.
Mike, I'm going to give you 12 seconds to dive further into the data. John Farrow, you've got to do a data check. You're doing it better than me today. I'm too tired. Look at the 10-year yield, John.
Yeah, that's the move. That's where the bounce is. The long end of the Treasury curve, front end pinned, anchored by Fed rates. Long end is where you get that pivot. Think of the front end as the hinge, and the long end just pivots on that. 10-year yield up 3 basis points to about 80 basis points now in the 10-year. Price action elsewhere pretty muted. Equity futures with a tiny bounce, still negative 21 on a session, and the dollar still very much weaker. But that's the story into the bond market, Tom. Where's the momentum in the labour market? Is it still there? What's the outlook look like?
That's
the outlook for growth, for inflation.
That's right where I wanted to go. I do want to add, John, with the movement in the bond market, I think we should see the real yield this afternoon. Michael McKee, what is so important here is off the shock of this pandemic, are we in noise or are we in trend? Can you delineate a trend? There it is. Can you delineate a trend out of 2 or 3 months data, or is it still pandemic noise?
Bartender, give him another.
Thank you.
At this point, it's not
Adding
noise.
to the labor market.
It's very hard to discern a numerical trend in terms of we're going to keep seeing this kind of increase or that kind of increase, although obviously we have slowed in terms of growth, but we are picking up jobs as the economy reopens. Now, the problem is we're still very much below, and I haven't done the math, but we're still very much below where we were in February before the pandemic started. We were something like 10.5 million below, so maybe we're somewhere around 10 million jobs fewer than we had, and so you've still got a long way to go before a lot of people get jobs back, and that leaves us in the position of still needing some kind of stimulus. Let me point out that the number of people in the labor force did rise by 724,000. So the number of people who were employed is greater than the number of people who were unemployed. And so the unemployment rate change is a solid, good news number.
That's where I wanted to go, is the unemployment rate drop. The fact that a full percentage point decline in the unemployment rate was achieved in 1 month. Is this repeatable? Does this fly in the face of people saying that this labor market is decelerating dramatically and that we've seen the bulk of the gains so far?
It's repeatable. We just don't know if it will be. Part of the problem is we don't have a very good handle on how quickly employers are bringing people back and what their outlook is. Now, we know, because there's still maybe 10 million people unemployed, that a lot of people may have lost jobs permanently, and I need to check on that number. But the situation with the jobs is so unusual. We've never had this before that it's hard to say what kind of actual trend we're going to get in this area. If companies find that they can hire people, then we may see it continue to go down. But then again, you've got offsetting factors like winter coming, so our restaurant's going to keep everybody on the payroll if people don't want to sit outside. Let me give you the job losers. The people who were on temporary layoff dropped by about 1 million during the month, while those who are permanent job losers also dropped. So we're seeing some good news in the overall employment trends. We just have a long way to go to make up the hole we got into. And we should mention the number of people who got jobs. We lost 147,000 jobs at the federal level because census workers are now going off the payroll. So if you want to figure that in, I mean, you'd have to subtract what was there before.
Mike, great to catch up, as always. Michael McKee there, breaking through the numbers and looking at this economy. Just a little bit of light election relief for you for the next 5 minutes as we sit on this payrolls report. Nice upside surprise, 638, the headline number on payrolls. The previous month, a positive revision to 672 from 661. The unemployment rate, absolutely stunning. I've got to say, to see this drop from 7.9 to 6.9, the median estimate in our survey was 7.6. This is the reaction in the market. Equity futures still lower, off the lows, still down 15 points, off by 0.4%. In foreign exchange, the story, the dominant story through this week has been a weaker dollar. Euro dollar approaching a 119 handle. But in the bond market, this is where you get a move. Treasuries lower, 10-year yields up. 30-year yields higher, up 3 basis points on a 10-year, up about 5 basis points on a 30-year yield, off the back of a pretty decent payrolls report, Tom.
Absolutely pretty decent, and you see it with the market move. Jeffrey Rosenberg with us now, BlackRock portfolio manager of their systematic multi-strategy fund. Jeffrey, good morning to you. The bond market and its dynamics, and I must point out that Mr. Rosenberg is truly expert at the mathematics and the rates of changes within the mix of fixed income. Jeff Rosenberg, can you glean from the bond market what the bet is on stimulus?
You know, not really in terms of, I think you're talking about, the debate about fiscal stimulus in a lame duck session, Tom. Is that the focus?
Yeah, I mean, like that, or the how muchedness of it, just the crazy position that we're in right now. You know, you're so good, Jeff, at the rates of change of spreads and all that. Can you glean a policy response out of it?
I wouldn't go that far, Tom. I think what you're seeing here is a good report from the labor market reminding us that there is labor market healing going on. And post-election, you had cleaned up a lot of the crowded positioning around the bear steepening from fiscal policy. So you're coming into today's report with a lot of positioning that is more neutral with respect to longer-term growth, inflation expectations, post the big flattening that we saw after the election and we priced out the blue wave. Now I think what you're seeing here is not so much about a bond market view towards stimulus, but simply that the stimulus is naturally occurring as the labor markets heal. It's a pretty strong report, strong vote of confidence, pun intended there. Hopefully you caught that.
We caught that,
around,
thanks.
Thank you. Sorry,
carry
Tom.
on, carry on, Jeff.
But really about the strengthening in the real economy. Now that's going to be challenged again as we turn our attentions away from the election back to the virus and what it does to then clamp down again. This is a little bit backward looking, right? This is last month, and when we look forward, there's still some challenges. But there is the recovery in the labor market that should be better for growth and inflation. So you're seeing a little bit of the steepening here today in the bond market.
Jeff, yesterday Fed Chair Jay Powell came out and he said that the labor market recovery is halfway done at best. He also reiterated his view that monetary stimulus has been supportive for the economy and will continue to do so. They are discussing possibly adjusting some of their bond purchases, asset purchases to further support the economy. The question I have is, what are they looking at that we're not seeing? Because this report indicates a labor market recovery that's really on course.
Yeah, well, I think they're looking at the cumulative losses and looking at the totality of the damage. It was a very significant damage that has been done. And we've had a lot of recovery, but we haven't had the complete recovery. And remember, what the Fed is looking for is to get the labor market back to where it was before, to run the economy hot, to let the gains from a strong labor market spread throughout the economy. These are all the goals. So they're going to hold this highly accommodative. And really, the debate is not holding the highly accommodative stance, but rather, when do they ramp it up even more in face of what was going on in Europe? A lot of questions about that. How will accommodation, what are your further tools for providing even more accommodation? So all that focus on the character of the purchase program, its composition, its size, its timing, that's what we'll look for. Obviously didn't get that yesterday. We'll look for it whether it's in December or in the new year. Yeah. And that's really what the Fed has left in the toolbox to address the needs for further accommodation, as we get through the fear of this, winter surge in the virus.
Well, yesterday, Frederick Mishkin came on our show, former Fed governor, and he said he doesn't think the Fed has any more tools left to support the economy. It does seem like the market is betting that the Federal Reserve will be able to at least stimulate asset prices further, with junk bond yields falling to the lowest since 2014, but not necessarily edify this economy. Do you agree with that view, the idea that you can go into riskier debt with the idea that the Fed will backstop you even if the economy continues to be sluggish and fails to recover on pace?
Well, what the credit market interventions are really about is the ability of the Fed to use its lending facilities to extend a credit cycle, to postpone the impact of cash flow disruptions from COVID. And that's been a very successful program to bringing back financial market functioning, which is exactly the point of those policies. So I think there's a lot of room for the Fed to extend that, to support financial market functioning, to dampen credit market volatility and provide that lubricant for more credit functioning. But the Fed can't fix the fundamental issues of COVID and its disruption in the economy, and most importantly, its disruption to business models. Powell said another thing, taking out a loan, this is more in the Main Street lending facility, but it applies to the large companies as well. Taking out a loan that you can't afford isn't necessarily going to be a solution. For large companies, it is a solution to postpone, to buy them time. And financial markets like that because the longer you defer, you delay, you postpone incidents of default, you're earning coupons because you're using that borrowing to pay the current interest. Mm-hmm. And so you can kind of kick the can down the road here for a long time. But there is still a reckoning for business models that don't work in a post-COVID economy. They're going to need a restructuring.
Jeff Rosenberg, in this chaos, how do you be systematic? Have you changed that word at BlackRock? How do you affect systematic?
Yeah, well, systematic has a lot of different applications, but one of the key applications to being a systematic investor is not relying on very concentrated positions. A really good example is not relying on the ability to forecast the outlook for the election. Again, we're fooled by pollsters. Again, the market is surprised. So when you have a very concentrated portfolio, you're more vulnerable to the inability to make those forecasts. Rather than having concentrated positions, systematic investing has a focus on breadth, lots of differentiated and diversified positions that aren't reliant on one big macro theme. That helps a systematic investment process sort of work through the big macro issues and take away a focus in the portfolio from betting on direction to instead extracting returns from dispersion, from differences. And these kinds of environments and these kinds of events are actually helpful for boosting the amount of dispersion. And it's very supportive to that type of investment approach.
Jeffrey Rosenberg, thank you so much. Interesting treatise there, folks, on where the bond market is amid the jobs report, amid the election. Futures advance, what were we, negative 30 or something now, negative 14 on futures. The VIX 27.92 was a 28 handle before. If you're just joining us, a stunning unemployment rate. The U3 6.9%, distant from the gloom of 10% that we felt only a number of months ago. And the VIX coming in off this good news with a better market performance. Again, red on the screen, but still futures, negative 14. Yields come out 3 basis points on the 10-year yield, a higher yield. This is a joy. She's been with us almost daily. I think we may hire her for team surveillance as well. Wendy Schiller with us out of scenic Providence at Brown University, and we're thrilled she could join us this morning. Wendy, I'm going to do this to you. I'm going to give you an open question. What did you think of the president's speech last night?
I thought it was the most destructive speech to the democracy I've heard him make since he ran for president. I think sometimes Trump gets a raw deal. Sometimes he points out things that are true, and then that gets all distorted. But in this case, there was absolutely no truth to what he was saying. And what I'm worried about are people on the ground counting the votes. These are people like you and me. They are just doing their civic duty. They're in, Maricopa, Arizona. They get out at 1 a.m. There's a bunch of people outside in the parking lot taking pictures of their cars and their license plates. I mean, this is just incredibly frightening. People could get hurt with the words of the president in the White House briefing room with the presidential seal. If he wants to sue, he can sue. George W. Bush sued, and it worked for him. That's the American way. We're a very litigious society. But I thought it was such an affront to just this sort of soul of the democracy. And I just couldn't believe, and I didn't think he was worthy. He could win Arizona. Pennsylvania's not over yet. He's still in the lead. Georgia flipped, but it's only barely 1,000 votes. I mean, there are lots of ways this election could still go. Theoretically, we'll see what happens with Pennsylvania today. But I don't think he did himself any favors, and I don't think he did the Republican Party any favors.
Professor Schiller, what is the historical precedent for this type of rhetoric and the oversight of poll workers who are just diligently trying to count the checked boxes?
Well, I mean, this is a really fascinating, take a lot longer than what we have. But I mean, yes, there has been a lot of this rhetoric in the past. Certainly in the late 19th century, parties were gearing up as mass organizations. They were incredibly vitriolic. They owned newspapers. They were spreading all sorts of information with no check. There have been periods of time in the past where this has been very similar in American politics. So we have had this kind of dispute. But, it started really with the civil rights movement and thinking about making sure that African-American voters could vote, particularly in the South, and thinking about how do you watch for violations or rejections or turning people away from the polls. So it's relatively new to have this kind of observational activity in the polls. It's not, more than 60 years old at best. So we're still, new at it. But by all counts, the Republican governor of Georgia and the Republican Secretary of State of Georgia has had this practice. There are Republicans and Democrats. But the bigger point is it's going to take a little heavy lifting by people who maybe are on the sidelines. Maybe you support the Republican Party. Fine, good for you. But when you attack the actual integrity of the voting process, which gave Republicans victories in the Senate and victories in the House and victories in state legislatures, then you're attacking the soul of democracy. So you have to step up and say, listen, maybe you lost the election. But it's got to really, really, really bother President Trump if he loses. But all of the Republicans that he believes he's carried over the last 4 years keep their seats.
Wendy, there's also a question of all of those Republicans that keep their seats. How do they respond to the Republican Party post-Trump? The idea that if he is confirmed to have lost this presidential election, what does the Republican Party look like in the next 2, 4, 10 years?
Well, if I'm the Republican Party, I did great in this election. And I did great because probably I represented a more, quote unquote, stable alternative to a lot of what the Democratic Party, or symbolically the Democratic Party, was offering. So you just keep going. You just won. You don't shift gears. The question is, how do you separate from President Trump if you can, and if he loses? And listen, they're looking at 2022. Mitch McConnell wants to keep the Senate for 2022. You had two people come out, Ted Cruz, Lindsey Graham, probably trying to run for president in 2024. So you'll have two wings of the party. The wing of the party that wants to sort of be Trumpism and win and be president in 2024 versus all the other ones who just won and frankly maybe don't want the headache of dealing with Trump and defending Trump for the next 2 to 4 years.
Professor Schiller, we've got to dazzle you right now so you keep coming back. In 1855, Mr. Seward walked out of the Whig Party and killed it. He went over to a nascent Republican Party and, of course, served with President Lincoln. How close are the Republicans to an 1855?
They're not doing that. I mean, I think McConnell's tweet, today, this morning, I believe,
exactly,
was very middle of the road, right? He's not walking away from Trump, but he's not walking towards Trump either. I mean, really, if you're them, isn't it better to have Biden in the White House when you're running again in 2022 and you want to solidify the Republican gains this time around? You don't want the same party president because midterms are bad for the party of the president. So in every politically strategic way, it's better for the Republicans, in Congress who just won re-election to have Joe Biden in rather than Trump, because they can block every major thing he wants to do. So there's not going to be a lot of legislative change. It's almost an ideal situation for Mitch McConnell to have Trump lose and Biden win barely. So I think, but there's millions and millions of people who voted for Trump who will be devastated and may or may not accept this election result. What do the Republicans do then if we get into a situation where there's unrest? The same question, goes to the Democrats. So Tom, you are asking, this perfect question. Will we see Mitt Romney rise up and sort of disavow the president? Well, we'll see. But okay. I think that, they win, I think, in a lot of ways if he loses, and that's got to frustrate him.
Professor, we got a headline out. The next headline we're going to get is they're going to find 1,000 votes at El Forno, best pizza in Providence, Rhode Island. The U.S. Postal System says, according to Politico, they found 1,000 ballots in Philadelphia. That's all I got, Professor Schiller. Isn't that true? Most elections is like ballots get lost?
Yeah, I mean, that's true. And there's also a lot of ballots that get rejected. Great point. Thousands of ballots get rejected every election that we go through. But listen, here's what you want to watch, I think. I'm watching Erie, Pennsylvania, because you've got some mail-in ballots coming in from Erie. That's sort of neck and neck. President's barely ahead. He went to Erie a lot.
Professor, we've got to interrupt here. Lisa, bring in that important news while I do the math.
Well, we're just hearing that Joe Biden has taken the lead in Pennsylvania as the count continues. This according to CNN and MSNBC. We knew that there was, I believe, an 18,000 vote gap. It does appear, based on CNN and MSNBC, that they have superseded that gap and that former Vice President Joe Biden has taken the lead. There is a question, Professor Schiller, how narrow is too narrow for some of these leads to hold water, especially when we talk about the social aspect, when you talk about some of the rhetoric of President Trump? Is there a delta that is big enough to sort of absolutely cast aside any doubts about the verdict of this election?
That's a fantastic question. Really quickly, Pennsylvania, what you want to look for, as I said, is Western Pennsylvania is coming in now, as well as Philadelphia. If, in fact, some of those counties flip, or they actually provide a lot more ballots for Joe Biden, that actually helps mitigate the sort of attack on Philadelphia. So look for the distribution regionally in Pennsylvania to see how Biden accrues more votes. If it's distributed, then I think that mitigates a little bit. And if Biden, big if Biden's lead holds in Georgia and he wins 4 states, 2 controlled by Republican governors, I think that's going to go a long way to sort of getting this sort of settled in the American public's mind. So that's the really next big step to dissuading people that this was stolen by Philadelphia. Because if Biden doesn't need Pennsylvania in the end, I think that takes a lot of air out of the tires of the Trump argument at the moment.
Professor Schiller, well, thank you so much. Greatly appreciate it. Wendy Schiller, just love having her on. Complete ownership of our American history. Lisa, I do the quick math, folks. I'm doing this on the surveillance pad with the surveillance Ticonderoga. Cut me some slack on Bloomberg Radio. Lisa, 5,587 votes is my immediate math as Mr. Biden takes a lead in Pennsylvania. Very quickly, Lisa, I don't see a change in Georgia in the last 10 minutes.
Yeah, I don't see that. But just to give you a sense of how close this is, Joe Biden currently has 3,295,319 votes in Pennsylvania, whereas Donald Trump has 3,289,725 votes. This according to the Associated Press. Very razor razor-thin margins. Tom, we are going to be seeing recounts. We are going to be seeing legal challenges. That gap in how big that spread is matters at this point, given the legal challenges and the recounts that are likely to be called for.
And Bloomberg and Associated Press have that now as well. This is a movable feast, folks. This data comes out from the various local and state election people, and the distribution is not like one button like you think the stock market is. Every time they distribute, it seems to go in a different pattern and a different sieve. Lisa, here we see with the markets, it's been a nice recovery, not just this politics, but the job economy as well.
Yeah, and actually, it seems like what the markets right now are hooking into is more certainty, right? If you get more certainty, that tends to be better for markets. The uncertainty right now, to me, Tom, is the pandemic. We have record numbers, and people are shrugging it off and saying a vaccine is coming. And yet we talk to experts who say it's not going to be till the end of next year. This dissonance, to me, is hard to sort of stomach and bridge.
Yeah, our conversation with the CEO of AstraZeneca within the last few days was really illuminating on that, the challenges forward on the distribution of the vaccine when it's finally here. On the data, negative 30. We come up to negative 8 right now, certainly a touch. A VIX almost flat, 27.64. A massive yield shift, 5 basis points, higher yield, a lower 10-year note price. The 30-year bond is up by 7 basis points, 1.59%. In the dollar, it's a weaker dollar. Sterling 131.46, yen 103.30. I do need to we need to do this because it is idiosyncratic. Turkish lira out to new weakness. With the election, we will continue with election 2020. Mr. Biden ahead in Georgia, and just moments ago, ahead in Pennsylvania. Please stay with us through the morning on Bloomberg Radio and on Bloomberg Television.
Do you think you'll have to produce less beer in 2021?
No, I don't think so. I think consumers will find a way. But I mean, if there are restrictions, but consumers, of course, are smart and they'll learn to live with those restrictions, I think some occasions will migrate.
Mostly, I'm confident because we have so many shots on goal.
really an unprecedented number so quickly. So I think science will win in the end. It's just hard to pick the winner at this point in the horse race.
We explore the trends, investments, and competition of the European ETF industry. Join us on Bloomberg ETF IQ Europe.
For our audience worldwide, good morning, good morning. The countdown to the Open starts right now. With 30 minutes until the opening bell, we erase this morning's losses. Equity futures down by about 0.1%. We begin with the big issue. The counting continues. Vice President Joe Biden taking a nominal lead in Pennsylvania after getting his nose in front in Georgia earlier this morning. Biden continuing to urge calm and patience.
We continue to feel, Senator and I, we continue to feel very good about where things stand. We have no doubt that when the count is finished, Senator Harris and I will be declared the winners. So I ask everyone to stay calm, all the people to stay calm. The process is working. The count is being completed, and we'll know very soon.
President Trump disagreeing, continuing to attack the election's credibility, challenging vote counts across a number of key states.
Our goal is to defend the integrity of the election. We will not allow the corruption to steal such an important election, or any election for that matter. Ultimately, I have a feeling judges are going to have to rule.
Let's bring in the Bloomberg team. Bloomberg's Kevin Cirilli and Sarah Ponzek. Developing story, Kevin. It started this morning. Joe Biden getting in front in Georgia. Moments ago, getting in front of Pennsylvania.
Precisely. I'm just looking at my Bloomberg terminal. Joe Biden are now ahead in Pennsylvania by 5,597 votes. This according to the new data that has just come in. Joe Biden now leading President Trump in Pennsylvania with 5,597 votes. According to election officials on the ground in the Keystone State, still at least 20,000 votes to be counted in Philadelphia County, a predominantly traditionally Democratic part of the state, and other surrounding areas of Philadelphia and other counties still counting votes. But Joe Biden has now taken the lead in Pennsylvania and erased the edge that President Trump had in Georgia, a very much significant development over the past couple of hours. Meanwhile, the president, as you alluded to, still looking to make a legal case as it relates to a host of different swing states. You heard yesterday President Trump in the Brady briefing room, combative and looking to continue onward. What I have my eye on this morning, Jonathan, and what we should be looking for today is the comments from top Republican senators. Earlier this morning, Senator Pat Toomey, a Republican from Pennsylvania, speaking on NBC's Today Show, saying that he does not see any evidence of voter fraud in the battleground state. That's significant. Also, Senate Majority Leader Mitch McConnell putting out a very measured statement in which he says that all legal votes need to be counted. A measured comment from the Majority Leader. Then you have House members, two that I want to point to, a retiring member and a prominent one. Congressman Denver Riggleman, a Republican from Virginia. He criticized the president for his tone in recent days, as did Congressman Adam Kinzinger, a veteran and also a prominent Republican in the party, raising concerns about how the campaign, as well as President Trump, is communicating. It's important to watch how the Republican Party begins to communicate to this embattled president as Joe Biden now taking the lead in Pennsylvania. Jonathan?
Well, Kevin, let's talk about that lead and why it's so important in Pennsylvania right now. 264, according to the Associated Press. Others haven't given him Arizona. Those 11 votes would take him back to 253. The 20 votes from Pennsylvania gets it done. Now, can you walk us through what's left to count in Pennsylvania and how heavily does that count at the moment as those mail ballots are still being counted? How heavily does that tilt towards the former vice president?
data and history would suggest that the trend is that would be beneficial toward Joe Biden. And that is why, quite frank with you, in the past couple of minutes, my sources on Joe Biden's election campaign are celebratory, to be quite frank with you, in terms of the shift that what this represents. However, as you and I have both talked about, it's important to be cautious. Bloomberg News has not called this race. There are still developments as it relates to Arizona and Maricopa County, as well as Nevada, where election officials in Nevada have said that they might need until this weekend to continue counting the votes on that front. We should note the prospects of potential recounts in North Carolina and Georgia, and the legal strategy that Rudy Giuliani, the former New York City mayor and, of course, the president's personal attorney, he was on the ground in Philadelphia just the other day, suggesting that there would be some type of legal front. And very much in real time, and typically I don't go there, but it's important to note, conservative media, conservative thought leaders are also having in public quite increasingly a discussion about how to navigate this. And again, talk about a very key moment when the senator of Pennsylvania comes out on the Today Show and says that he does not see any evidence as of now of voter fraud.
Kevin, stay close, won't you?
Yeah.
A developing story moments ago. Vice President Joe Biden getting his nose in front in Pennsylvania. The outstanding votes there, much of them have been mail-in. Much of that has tilted heavily towards Joe Biden. That's where the momentum is, right there in that race. Pennsylvania gets it done. Elsewhere in Georgia, just about getting his nose in front earlier this morning. In this market, we erased the losses of this morning, largely off the back of a huge upside surprise in a payrolls report, 24 minutes out from the opening bell. Let's bring in Sarah Ponzek. Sarah, your read on the price action this morning, please.
This is a market that is once again trying to move higher, tacking on possibly a fifth straight day of gains for the S&P. This after you mentioned a better-than-expected jobs report, 6.9%. That is your unemployment rate. At the same time, it has not been called, but a presidential race that looks incrementally closer to a Joe Biden win. There you see it. At one point, S&P futures were down 1.4%, pairing much of those losses. At the same time, our laggards on the week turn to winners, and our winners turn to laggards. There you see the Russell 2000 higher this morning, ever, albeit slightly. And you see the NASDAQ, the worst of the major benchmarks this morning, down 0.6%. Also, we see a bear steepening impulse in the bond market, too, with 10-year yields pushing higher once again after falling to the mid-70 basis point range. There you see, if you look at the 10-year right now, holding above that 80 basis point mark, still shy, though, of that 95 basis point mark that we did reach on election night as we were heading towards 1% at a brief moment, very brief, but still above 80 basis points this morning. At the same time, we do see the dollar headed lower once again, the dollar lower for a fourth day, now falling to a fresh two-year low. The Bloomberg Dollar Spot Index at the lowest since April of 2018. So we just continue to see this bearish move for the dollar weakness holding on. And as we see the dollar head lower, that is a boost to emerging markets. Particularly, we are seeing a boost in the Asia-Pacific region. If we take a look at the MSCI Asia-Pacific Index this morning, I want to point this out because we are up 6% this week. That is the best week since April. What this means is it's depositing the index up 50% since March, just shy of a record in 2018, John.
We're flying in this market. Sarah, thank you. Let's continue this conversation and bring in Mohammed Al-Arian of Queen's College, Cambridge. Mohammed, fantastic to catch up with you, sir. Once again on a Friday morning, but this time we're not talking about a payrolls report, Mohammed. We're talking about this election race. Your early reaction to the news from 10 minutes ago.
So I think the election race is clear that Vice President Biden will win this election. And then we're going to have a whole series of legal challenges. I don't think, John, and I'm here out on a limb, but I don't think the market actually has paid much attention to the elections in terms of its pricing, other than to see it as guaranteeing that central banks will do more. And they got reinforced in that notion by what the ECB and the Bank of England did and by what Chair Powell said yesterday. So I think that's what's driving a market that, to use the phrase of one of the earlier guests, just wants to go higher.
Mohammed, it was a phrase that you used with me several weeks ago, a market that just wants to go higher. We take the price action, we build a nice, pretty story off the back of it and explain what's happened. Mohammed, the danger of doing that is you become attached to that story. You extrapolate out what's happening a week, a month, 3 months, a quarter, a year, and then you find out things change again. I wonder, Mohammed, for you, what you see right now, what's a position squeeze and what do you think is sustainable?
So I don't see anybody wanting to question this market, because they feel it's a steamroller and you will be completely flattened. So either you stay on the sideline or you participate on a tactical basis. And the more people participate on a tactical basis, the more you develop the whole narrative that reinforces it. And it keeps on going up for a while. I think the fact that we haven't talked about the jobs report is quite interesting, John. It is 10 minutes into the hour. We haven't yet talked about it, and I think that just reflects that this market is starting to live on its own. And these other things are interesting, but ultimately they play out in the bond market much more than they play out in the equity market.
We've noticed the same thing, Mohammed, over the last few days. We've seen a big bid come back into the bond market, better data, yields higher. If you're just tuning in for our audience worldwide, around about 10, 15 minutes ago, the headline came out that the former Vice President Joe Biden had taken a nominal lead in the race in Pennsylvania. It is not wrapped up. That state has not been called, but it is a lead for the Vice President after substantially lagging the president through that vote count. The outstanding votes that still need to be counted, most of them mail-in ballots, and they have tilted heavily towards the former Vice President Joe Biden. As that count continues, it's a narrow lead in Pennsylvania. That would be 20 Electoral College votes. Even if you don't give Arizona to him, that would take him over the line at the moment. Off the back of all of this, it's an equity market that's still slightly lower, down 6 on the S&P 500, down 0.2%. Mohammed, you mentioned the fundamentals, the economic data. As we work through this event risk, perhaps it gets done in the next several hours, maybe through the weekend, maybe over several weeks of legal challenges as well, Mohammed. When do you think we get back to the fundamentals, the data, COVID, infections, the outlook, vaccines?
So I was asked a little bit earlier by a colleague at Gramercy, what are you thinking of? And I never mentioned the election. I never mentioned the legal question when it comes to the market behavior. What we're going to see over the next 6 weeks, because we don't have any Fed meeting, we're not going to get any stimulus, is this tug of war between very positive technicals and awful COVID numbers together with no policy news. That is the trade-off that's going to play out. And the question mark for people, are technicals sufficient to overcome these other two things? In terms of the economy, you know, the 3 levels of messages from today's employment report, and I think they're important. One, it came in better than expected, not only in terms of job creation, but also a sharp fall in the unemployment rate consistent with higher labor force participation. That's really good news. Second, depending on what you look at, jobs creation or the unemployment rate, you have different views as to whether the improvement in the labor force is keeping up or slowing down. And then third, the hardest question of all, John, what's the forward-looking information content? We know that people are starting to disengage from economic activity again because of the human counterparty risk of higher COVID infection cases. We just don't know to what extent that's going to accelerate, or even in the case of, you saw in Europe, lead local authorities to start imposing restrictions.
Mohammed, it's been great to catch up with you. It always is. We appreciate your time, sir, as always. Mohammed Al-Arian there of Queen's College, Cambridge. I want to head back down to D.C. and get you up to speed on what's happening in this election race. Kevin, walk us through the numbers, where we are as the counting continues, where the momentum is, and who for.
Well, the magic number right now is 5,594. That's according to the latest data that just came out of Pennsylvania from voting election officials. And that's the lead that Joe Biden now has in the battleground state of Pennsylvania. A significant number to watch is also 20,000. That is the minimum number of votes that are still left to be counted in Philadelphia County, a predominantly Democratic city in the state of Pennsylvania. Beyond that, I can tell you that just in talking with and communicating with sources in the past several minutes, Democrats are increasingly optimistic, even more so about their chances now of a Biden win because of this lead, and based upon the votes, the remaining votes that have to be counted, traditionally and historically, that would trend to widening that lead in Pennsylvania. There are still votes to be counted. Bloomberg News has not called this race. There is also, I would note, a historical context here. Pennsylvania was a state that President Trump carried in 2016. The last time a Republican did that was 1988. This is also the state where Joe Biden headquartered his campaign. He was frequently campaigning there, as was President Trump, in several days. But beyond this, the subtext behind the scenes, Senator Pat Toomey, a Republican from Pennsylvania, retiring at the end of his term. He still has at least a year left in his term. He's coming out just this morning and said to NBC that the president's remarks yesterday at the White House were, quote unquote, hard to watch, end quote. So fascinating developments. And the president has continued to allege voter fraud in states like Pennsylvania, as well as others, but as of now has not presented evidence of such. It will likely, according to the president's comments, as well as according to his campaign officials, likely they are preparing some type of legal suit, but there just hasn't been one that's been filed. There's been no evidence that's been presented. So that's where things stand as of now. We will anticipate additional vote tallies from Pennsylvania as well as other states in the coming hours as well as the coming days. And we should note, as Mohammed just alluded to, we should note that this still might drag out a couple of days, but a significant development in the past couple of minutes in Pennsylvania.
Yeah, and as the team's reporting, most of these ballots outstanding in Pennsylvania are in the Philadelphia area. And Kevin, as you know, Biden has got a heavily lean there, not in that area, not just in that area, but also in the mail-in ballots. And the mail-in ballots, just to give you an idea, 87% of the latest batch of mail-in ballots went in his direction, Kevin. How close do you think others are to calling that state for him?
Well, you know, and another shift that happened just last night was Erie County, which is a county in the northern part of the state by Lake Erie, where Biden also took the lead against Trump in that county. That was one of 3 counties in Pennsylvania that Trump flipped in 2016 and stole from and won from Hillary Clinton, and he was able to nab Pennsylvania as a result of Erie County. Biden taking the lead in Erie County, which is a traditionally blue-collar town, more rural, so to speak, and more blue-collar, is hugely significant as a result of Erie on the opposite, literally, end of the state. And so, to your point, with 20,000 votes left in the urban part of the state in Philadelphia County and the city, and the mail-in ballots, again, we got to be careful and we got to follow the facts and the hard numbers in front of us. But data and history would tend to put forth the notion that would trend in a positive direction for the Democrats in Pennsylvania. Again, based upon reporting, Republicans are also saying that they are fully prepared to mount some type of legal challenge.
Kevin, as I said before, stay close. We keep getting more news and updates on this story as the counting continues. Thank you, sir. I want to bring in Michael McKee, our international policy correspondent, on the story. Mike, the base case for so many people in this market is divided government. The base case for many people in this market is that we won't get the fiscal package that we were thinking about several months ago. What's the base case for an economist looking at this economy and the need for action down in Washington?
Well, you know, it's interesting. We're starting to see the real comeback as jobs are restored. 638,000 jobs we'll call it restored during the month of October. Although that is higher than estimated, it is smaller than it was in the prior month. So things have slowed down, which keeps the case for new jobs assistance alive. The unemployment rate, though, 6.9%, a full percentage point drop. And as Mohammed El-Arian was saying, it comes on the back of higher labor force participation. That suggests maybe things aren't as dire and may take some of the pressure off members of Congress, at least for that big package that they were talking about. The U6 rate continues to drop. It falls to 12.1 from 12.8. The number of people who lost their jobs temporarily declined by 1 million. The number losing their jobs permanently also declined. So more reasons that it doesn't necessarily have to be done. However, we did see state and local job losses of 65,000 each. So that's beginning to bite. That may come back into the stimulus package. The Republicans have been against it, but you could make a case that there are going to be damages there. So a pretty good employment report that suggests we are on track to getting back to where we were. But I did a calculation, and if you had this kind of job restoration every month for the next 12 months, you'd finally get to where we were before the pandemic. So we're still a year away at this kind of rate.
The numbers still pretty depressing. The numbers better this morning, though. Mike, thank you. I want to bring in BlackRock's Rick Reeder now for more on the story as it develops. Rick, fantastic to catch up with you, sir. Just walk me through how you've read this market over the last several days. The question I asked earlier this morning, if I just showed you the price action, you didn't know what had happened Tuesday night into Wednesday morning, it just looks like the Fed's come out and done a whole load of QE. It doesn't look like anything to do with politics at the moment. Rick, what's your read on things?
I think, by the way, it's been an insane week. If I ever look forward to a weekend and sleep, this would be the one. Listen, I'm not sure that the market this has been a surprising reaction to the market at all. I would say there are a couple of things that were surprising. The fact that the rates market, the Treasury market, was rallying for a while, I thought was remarkable. The fact that people were buying 10-year notes at 75 basis points or lower than that, 72, 73 basis points, that was pretty amazing. Listen, I think the markets, first of all, the markets like certainty. And if you were evolving towards what is greater, a sense of greater stability, if we are evolving to a place where the election is behind us, that is a pretty significant deal. Secondly, I would say if you take a dynamic, let's say, and we're moving down the road of a Biden presidency, and let's say the Senate, which I would argue was the most surprising dynamic, ends up being Republican control. You have a dynamic that, A, you're going to get more stimulus. I think people are underestimating that now you won't get stimulus. You're going to get more stimulus, part of why I think treasuries are not that interesting. And B, you've got an economy, what today's number illustrated. Gosh, if you take the household number up over 2 million jobs, if you look at construction, construction up 85,000 jobs, retail, travel, and leisure, those numbers up 270,000 jobs. Listen, I think employment, I think Michael said it right. Employment's going to be slower to come back. The economy is in better shape than people think. And the resilience of the economy. And if you have some election behind you and you don't have radical tax change and you don't have radical stimulus beyond, what the markets are willing to absorb, then, I would argue the markets aren't doing the wrong thing, Jonathan.
So what do you want to buy then, Rick? What do you want to own in the environment that you describe?
Not treasuries, and I would argue that so you think about, let's say, let's start with fixed income. But I think the yielding assets are interesting and will continue to be interesting. We're going to have an environment for the next number of years, where certainly in the next year or two, where rates are going to stay low. How do I get yield? I need yield. I need yield. And so things like the credit markets are still interesting. By the way, I think emerging markets now have gotten, I think I said that on Bloomberg a couple of days ago, emerging markets are interesting. As you talked about the dollar, some moderation. I'm not sure where the dollar's under tremendous pressure. Emerging markets, though, you think about Asia, you think about China relationship, et cetera. I think that's interesting. And then, I've said it before, in a world that needs income, if you can get earnings yield in the equity market of a 4.5% or a free cash flow yield in the 4s, equities continue to be interesting and a bigger part of the asset allocation mix going forward. I think people continue to underestimate how powerful that is.
Well, Rick, I want to start with the international tilt to a portfolio at the moment. I want to caveat everything I say right now by saying this race has not been called. But markets are trying to anticipate. That's the nature of markets, discounting mechanism about what may or may not happen in the future. Rick, this market is thinking about a weaker dollar. Market participants are thinking about more of an international tilt into their portfolios. Off the back of what's happening politically speaking, there is a belief that a Biden White House, if indeed we do have a Biden White House, would be more constructive for China, for EM, for Europe maybe as well. Rick, does that resonate with you?
Well, some of that resonates with me. I mean, yes, better relationship potentially. Yes, I could see that. And, part of why we've added some emerging markets, I think that is durable. Listen, I think people for a long time are betting on a significantly weaker dollar. I don't think there's a lot of return generated from that trade. There are so many reasons why the dollar stays buoyant, including investment that comes into the U.S., including trade that happens in dollars. So I'm not a believer that, gosh, get ready for the big decline in the dollar. That I'm not a big fan of. And if you said to me, okay, let's think about asset allocation. Can I get some emerging market yield in the portfolio? That makes some sense. There are parts of Europe that I actually think are interesting today, and particularly some of the banks that I think have gotten interesting. I'd give you a lot of yield, quite frankly, when you think about what your potential earnings yield off of where they trade on a book value. But then I think U.S. equities, right, you're still the most vibrant growth dynamic. You still have the highest free cash flow generation. And so I would say U.S. equities. By the way, parts of the equity market in China, Japan, that are also pretty interesting, where you're getting Japan from a valuation point of view, China more from a growth and technology point of view. But I think you got to be really precise. I don't think there is let's get into all around the world internationally. I think you got to be precise about where your asset allocation goes relative to the opportunity set.
Well, let's work through that precision right now. You mentioned European financials, then you talked about the United States. Let's deal with Europe first and then get to the United States. European banks right now, Rick, as you know, the United Kingdom in lockdown, France, Germany, Greece joining the party that no one wants to join and go to in the last couple of days as well. Rick, why European financials right now, given the headwinds to the economy?
Only one thing, Jonathan, price matters. And if I don't think there's an explosive growth dynamic that makes a lot of sense. I just think if you can buy some of the banks at 15, 20, 30% of book value in a reasonable growth dynamic and be willing to hold it for a period of time, that is it. Is that the big core of your portfolio? I don't think so. I'd still rather own parts of where technology is going to grow in the U.S., China, et cetera. But I don't mind taking some of these European financials at a fraction of book. I mean, they've rallied. Some of them rallied quite a bit in the last week or so, just because the price is really cheap. Listen, I think growth in Europe, as you said, COVID is not going away. I think growth in Europe is still a bit challenged. There's some technology companies in Europe that are interesting. There are some consumer oriented companies that are interesting. But the core of the portfolio is going to sit U.S. I think China's to be a core of the portfolio. Japan has become more interesting recently. And I say maybe taking a little bit more EM, particularly in the debt side, but also a bit in equity can make some sense today.
Rick, I'm not sure what you've left out. The US, parts of Asia, Europe as well. Let's just talk about US just quickly, Rick. Final question for you. When the United States, there's been that huge debate over growth, a huge debate over value, the cyclicals. Where do you want to own in this equity market? What pocket of it?
So it's the first thing, your point about I haven't left anything out. I just want to be really clear. I think the U.S. is the most interesting opportunity. And by the way, I think equities are much more interesting. So I just want to be really clear about why I'm more favorable about those parts of the world. It's in equity form that I think is more interesting. Otherwise, okay. So what sectors? Listen, I think healthcare, managed care particularly, I think will be better than people think and is starting to get some rally around it. I think technology. I think big tech has run quite a bit. I like selling some volatility, selling some upside convexity against a technology, a big tech position. But boy, I still think software, artificial intelligence, data assimilation, technology, I still think will win. And the last couple of days, industrials or cyclicals haven't done terribly well. I would actually, I think some of that area makes some sense for a while. And I would say the one other place you can get some income is through the financials. Listen, the whole argument that people say about, gosh, now's the time to buy value. I don't even understand what that means in terms of some of the traditional businesses that are more tired. I'm not going there. I still think some of these different technology areas are going to win. Healthcare is going to win, et cetera.
Rick, I hear you loud and clear. And we got the specifics around the United States. Rick, it's great to catch up, sir. What a morning for it. Rick Reeder there of BlackRock. Let's get back to this market. About 3 minutes out from the opening bell in the United States of America. Futures do recover. Upside surprise on a payrolls report. Really nice, tiny drop in the unemployment rate as well. Maybe not an accurate picture of what's happening in the labour market in America, but that's the direction of travel we want to see. The developments of the last hour on the election. The counting continues in Pennsylvania. it is key. The momentum, as we count those mail-in ballots, is with the Vice President, Joe Biden. It gives him a nominal lead, gets his nose in front in that race as that counting continues. Kevin Cirilli is back with us going into the opening bell. Just to walk us through the numbers, Kevin, got to work out. We know where the momentum is. Walk me through where the votes are, how much left counting there is still to do.
Here are the facts. 5,500 lead in the votes, a more than 5,500 vote lead in the battleground state of Pennsylvania for Joe Biden, with about 20 to 30,000 votes at least to be counted in the historically predominantly Democratic Philadelphia County. Additional mail-in ballots still to be counted. This comes as the president has said that he is going to continue to pursue legal action. In the past couple of minutes, I've been communicating with Democrats as well as Republicans. The president, as of now, Jonathan, does not have the Republican Party behind him cohesively, with members of Congress, from Senator Pat Toomey speaking out publicly, and behind the scenes to prominent staffers on Capitol Hill questioning his legal strategy as of now to question the legitimacy of the vote totals.
I want to be very careful with this, Kevin. What do you think would lead the president to concede?
Look, I think that as of now, there have not been all of the votes counted, and several states have not been called. Clark County in Nevada has not reported all of their results, and the election officials in that state said that it might take several days. Look, the president has been talking, based upon my reporting, with a wide variety of people, and in the Republican Party, he still has his campaign behind him. There have been no breaks in the campaign. And that would be a major development. I'm not into reporting hypotheticals. I know you're not either. But I can tell you that publicly, Senator Pat Toomey, a Republican from Pennsylvania, said that the president's comments yesterday alleging that there have been voter fraud in Pennsylvania were, quote unquote, hard to watch, according to the comments that he made earlier this morning to NBC. And so as a result of that, I think Senator Pat Toomey, who is a conservative, some would even classify him as an ultra-conservative, to say that publicly is a significant development in this ongoing story.
Kevin, I'm going to turn to the opening bout. You're going to sit right there and do not move. The opening bout right now in the United States of America, equities looking like this. We're down 3 on futures going into the open. That was the opening bell. Switch up the board. Let's get to the bond market. Treasuries with a bid through much of the week. Yields look like this, unchanged at 0.8185%. We're up 5 basis points, though. And the move has been over the last hour or so off the back of that payrolls report. That was a tidy move. Outside of that, in the FX market, the dollar weaker, euro dollar 118.78, up around about 0.4%, and crude lower by 2 percentage points. The latest development in the last hour or so, a narrow lead in Pennsylvania, and the momentum there has been clear over the last 24 hours. As those counts continue, those counts have come from mail-in votes, and those mail-in votes have tilted heavily to Vice President Joe Biden. That's the open. Let's get to the price action at the market desk. Here's Scarlett.
Yeah, incremental moves when it comes to the vote count, and also a better than expected jobs report for the month of October. That turned futures around. We had futures down as much as 1.4%. But in the early going here, we have a very mixed trade where notably small caps are outperforming the big tech names. In addition, you have the Dow Industrials with its cyclicals and industrial companies doing slightly better than big caps as well. Nevertheless, it is still earnings season. We're about 9/10 of the way through. So there are a number of companies here I do want to mention. Hershey reporting sales and profit beating estimates, also reinstated its full-year guidance and kept its dividend. CVS Health naming a new president and CEO who comes from the insurance giant Aetna, which CVS bought in 2018, also had a beat and raise quarter. Viacom posting strong growth at its 3 streaming services. Domestic streaming jumped 56%, the revenue there, even as overall revenue fell because of advertising declines. And the cosmetics maker Coty, look at that, up 17%, smaller than expected drop in sales. And increasingly, John, its fortunes are tied to the Kardashians. Coty is moving ahead with a skincare line with Kim, while the Kylie Jenner line helped support the Americas division. Also, let's dig into these COVID-related earnings as well. Roku and Zillow, both big beneficiaries of the pandemic and the lockdown. Roku reported a surprise profit. Zillow, the online real estate listing service, said website views rose 21% to a record. Little change here for Uber after getting a big boost earlier in the week on the passage of Prop 22 in California. Peloton, sales were good for the quarter, but supply chain issues continue to be a problem that hurt deliveries and also raised expenses for the company. John?
Scarlett, thank you. I want to bring in Sarah Ponczek as well of Bloomberg as we continue to look at the count coming out of Pennsylvania that so far gives former Vice President Joe Biden a nominal lead in that race. The counting does continue. We have not called that state. This race has not been called. Sarah, what do you see?
Right, significant developments this morning, but the market has really been in a good mood all week long with the expectations for a divided government with a President Joe Biden in the White House. Well, there's historical precedent for this. If you look at annualized returns for the S&P 500 in different scenarios, whether it be a divided government, a blue wave, or a red wave, your best performance over history has come under a divided government scenario, 12.5%, under a blue wave, 11.8%, under a red wave with Republicans, 7.8%. But still, these are all very large annualized returns. Still, really the message being that stocks tend to rise. But what about on a sector basis? I'll kick it off with financials. Morgan Stanley actually says that a divided government for banks, well, this is going to be a good scenario for them, likely because we will not get possibly that tax hike from a Joe Biden presidency of 28%. That was really going to eat into banks' EPS. That would be a boon to a financial sector that is still down this year heavily, the worst performing sector, only second to energy. BI also points out the fact that healthcare might also be a beneficiary, the best performing sector this week, actually, even ahead of tech. But what about on a global basis? We were just discussing this with Rick Reeder. The idea is that we might see this be a good outcome for emerging markets in particular, also the Asia-Pacific region. And we have seen that being priced in throughout the week. If you look at the MSCI Asia-Pacific Index, now up 50% from its March bottom and really knocking on the door of that 2018 record high, John.
Sarah Ponczek, thank you very much. My colleague, good friend Josh Wingrove down in D.C. putting out a tweet in the last moment, a statement from the Trump campaign which reads, "The election is not over." Let me just read the starting paragraph out to you. "This election is not over. The false projection of Joe Biden's the winner is based on results in 4 states that are far from final." Let's be clear. Right now, no projection that Joe Biden is the winner from this network or the Associated Press. Right now, all we know is that in the last hour, the former Vice President Joe Biden has taken a narrow nominal lead in the race in Pennsylvania that would get him over the line. It would get him over 270. As far as we know, the counting continues, and we will respect that as the counting continues. I want to turn to Anastasia Amoroso now of JP Morgan Private Bank. Anastasia, great to catch up with you. I guess my first question is your reaction, please, to the news of the last hour, the developments, rather, of the last 60 minutes.
Well, Jonathan, I think it is a fair conclusion to make that it is too soon to tell. It is too close to call, and this is definitely not a done election just yet. I do think that either way, this is going to be a government that is divided, that is gridlocked, and that's been the main driver of the price action that we've seen in the markets. I don't think that changes, based on the news of the last hour either. And you might ask, why is gridlock such a good thing for the markets? Well, that means if we don't have a sweep one way or another, we can't expect sweeping legislative changes. So that means we're not going to get the healthcare pricing reform that would be negative for healthcare. And that's why it's one of the top performing sectors this week. It means we're likely not going to get large tech regulation. And that's why tech has fared well. And probably the biggie is the fact that we're likely not going to get the rollback of the tax cuts under the Trump administration. So all of that is what's positive for the market. And again, it's an election that's too close to call, but either way, it seems like it's going to be a very balanced government without any sort of meaningful majority. So it's just not going to get some of these reforms pushed through.
Anastasia, just to be clear, a month ago, if someone came on this program, they would have said gridlock bad, not gridlock good, because we wouldn't get the fiscal plan. Is that a change just on what the price is doing, or is there a part of the market that you prefer because we have gridlock relative to what you would have liked if we didn't?
Yeah, I think that's human nature, is to say, oh, I'm not going to get this, or I'm going to get this, and I'm going to be fearful. But the reality is you're going to have, this is checks and balances. And the fact of the matter is, yes, we're not going to get a large fiscal stimulus package, which honestly was always a long shot, whether it's on the infrastructure side, whether it's on the large phase 4 package. So that was, that was the first what you don't get. But the fact that you also don't get some of the negatives that might have come with a sweep, I think that's what the markets are really focusing on. And so first of all, this is good for the broader markets because tech and healthcare represents more than 40% of the market cap there. But second of all, looking under the surface, I think it is creating some interesting investment opportunities. So just in the last couple of days, the knee-jerk reaction of the market on Wednesday after the election was to sell clean energy. And it was down 3.5%. Well, that was starting to be bought up even that day. And it was definitely the buy even today as well as yesterday. So I think investors are parsing through what this means for sectors of the economy, and sectors like clean energy, healthcare, and especially the diagnostics side and parts of tech, they all stand to benefit in this gridlocked environment.
Anastasia, this is important. It's the difference between a squeeze and a durable trend, something thematic, which is what you focus on. So healthcare, clean energy, is there anything else outside of those two sectors right now, Anastasia?
I mean, the three top ideas that we've had and we're likely going to have for the next, 3 to 5 years is anything to do with digital transformation. And I think it has played out a lot in the large cap, mega cap names, but I think there's interesting opportunities in this mid cap space. And some of the companies that are doing AI, some of the companies that are doing data privacy, some of the companies that are developing the killer app for 5G, these are going to be some of your smaller down the market cap names. I think those are still interesting, and they're not trading at the same valuations as some of the pure play cloud names. Within healthcare, healthcare innovation is not new per se, but what's new about it is the speed of innovation that we're seeing. And I think the underappreciated opportunity in healthcare may actually be on the diagnostic side. It's regardless of who's in the White House, who's in Congress, we're going to roll out more and more testing. And diagnostics is actually the highest volume activity in the United States. So that's a big opportunity there. And once again, I will emphasize clean energy and electric vehicles. It doesn't matter who is in the White House because we actually added more renewable capacity under President Trump than we did in the 6 years under President Obama. And the reason for that is economics. If we do end up with a President Biden, but no Democratic majority in Congress, guess what? There's still executive action that can be taken on clean energy and climate agreements. So I think that's why you're seeing the recovery in those clean energy shares. Anastasia,
great to catch up. As always, what a morning for it. Keep saying that. Anastasia Amoroso there of JP Morgan. About 10 minutes into this session, equities are lower, down by 0.6%. Energy leading up 0.4%, lagging this morning. Information technology after a huge rally over the last week. A huge rally in the face of a really close election. A development in the last 60 minutes that the former Vice President Joe Biden has just got his nose in front in Pennsylvania, which would give him, which we're not calling, it would give him, if he carries on getting that count in his favour, 20 electoral college votes. That's the story out of Pennsylvania. Here's the story out of the Trump campaign. The line is simple, it's short. This election is not over. Let's head back down to D.C. and catch up with Bloomberg's Kevin Cirilli. Kevin, loud and clear, this election for them is not over.
Precisely. Matt Morgan, President Trump's 2020 campaign general counsel, just within the last couple of minutes, it's out on the Bloomberg terminal, putting out this statement. The election is not over. The false projection of Joe Biden as the winner is based on results in 4 states that are far from final. They then go on to list the states. Georgia, they say, headed for a recount. They are alleging that ballots were improperly harvested. Still, no evidence presented. In Pennsylvania, they cite many irregularities in Pennsylvania, including having election officials prevent our volunteer legal observers from having meaningful access to vote counting locations. There was a judge that yesterday ruled in favor of the president's campaign with regards to poll watchers. I do want to note Senator Pat Toomey, a Republican from Pennsylvania, said to NBC News earlier today that the president's comments yesterday in the White House were, quote unquote, hard to watch. Going through this statement, they went on to say in Nevada, Nevada, there appear to be thousands of individuals who improperly cast mail ballots. Again, Jonathan, no evidence presented from the president's campaign. And then finally, they go on in this statement to say that the president is on course to win Arizona outright, despite the irresponsible and erroneous calling of the state by Fox News and the AP. There are just, I'm following along in the Bloomberg terminal, about 200,000 ballots left to be processed in Maricopa County, according to Maricopa County, Arizona election officials. That's where things stand right now. The bottom line, top line view, the Trump campaign putting out a statement from their general counsel, Matt Morgan, saying that this election is far from over, and they are once again, predicting that they will be victorious once it's over.
Well, you've got to let the count continue. But at some point, a broadcaster will come out and make a call. We're not making the call. The Associated Press aren't making the call. Just work with me through the numbers, Kevin, just briefly. Let's keep this really simple. The bottom half of our screen right now, when we look at the votes and the Electoral College tally, we're at 264 for Vice President Joe Biden. That's because the Associated Press has given Arizona to Joe Biden. Others haven't, and they have him at 253. If you have him running at 264, and Nevada, which I understand, Kevin, could get called in the next several hours, that would put him over the top, 264 out to 270 with the 6 votes coming from Nevada. Kevin, just walk me through and help me understand, as we progress towards 270 and potentially breach it, the concession from the campaign, the Trump campaign, it's not me sitting here saying they should concede. The counting continues. We're not at 270. This hasn't been called. I just want you to lean on your reporting a little bit and guide me through what we should expect in the next couple of days. Because if a broadcaster does call this race, how do you expect the campaign to respond to that based on what you're hearing?
Well, 2 things. First and foremost, from a chronological standpoint, we are anticipating further developments from Maricopa County with the 200,000 votes that are still left to be counted, as well as Clark County, Nevada, over the next 24 to 48 hours, as well as an additional 30,000 or so votes, at least, excluding the mail-in ballots, to be counted in Pennsylvania. Recounts votes in the United States typically take days to weeks for a process. So Georgia headed for a recount. As you correctly point out, that electoral vote might not matter, but that electoral process will at least take a week. Secondly, and I've been communicating all the past half hour with members of Congress in the Republican Party on, and what they're saying based upon my reporting is essentially they're questioning what the path forward is for President Trump based upon the lack of evidence at this time that has been presented publicly as well as privately behind the scenes. They are raising the question of what is the path forward for the Republican Party as a whole if this continues onward in the longer term. Again, in just the last couple of minutes, Senator Susan Collins, who won a very tough re-election fight just the other night, put out a statement on the record and said, quote, "Every valid vote under a state's law should be counted. Allegations of irregularities can be adjudicated by the courts. We must all respect the outcome of elections," end quote. I can tell you that that is a statement that matches Majority Leader Mitch McConnell, which has been measured, but also does not allude to any evidence that has not been presented at this time.
Kevin, thank you. I appreciate it. Yeah. I think we all need to understand this process and how long it could go on for from here. Kevin, stay close. Don't go anywhere. Kevin Cirilli there down in Washington, D.C. as the counting continues. Let me be very clear on this. The Associated Press with Vice President Joe Biden at 264. The President, Donald Trump, far below that number at the moment. Arizona has been given by the Associated Press and Fox News, for that matter, to Vice President Joe Biden, which is putting him at 264. Otherwise, you'd have him down at 253. So Pennsylvania absolutely key with the 20 Electoral College votes that would get him over the line. We're not calling that state right now. The counting continues. We respect that process. And as those counts continue, it's clear that the momentum over the last day or so, as those countings, that voting has come through, that counting has come through, has tilted heavily towards Vice President Joe Biden. That's why he has the momentum in the counting so far. I want to get to the market desk and bring in Bloomberg Scarlett Fu for more on this market. Scarlett, what a week.
What a week, and let's talk about momentum in the equity market, because we entered the pre-market trade with a sense that the global equity rally was kind of running out of steam. It lost some momentum as we limped to the end of the week. But we had the better than expected jobs report, and as you've been talking about, the updates that suggest we may get a battleground state like Pennsylvania or Georgia called soon, and that could give Joe Biden 270 electoral votes, perhaps giving some sense of decisiveness to this continued election drama. So right now, you look at the major indexes, the NASDAQ performing the worst here because big tech is seen as defensive. And you know that those big tech companies, whether it's Apple, Amazon, Alphabet, Facebook, and Microsoft, make up the bulk of the NASDAQ 100. And they've been a big drag on the NASDAQ whenever you get the sense that perhaps there's going to be an economic recovery coming because of massive fiscal stimulus and a Joe Biden victory potentially with a blue wave. Now, when you look at the sectors for the week, it's notable that all 24 groups are higher, and not just higher. We're talking by a fairly large margin, too. 3.6% gain is the gain of the worst performing group in the S&P 500. That's utilities. The best performing group, chip makers, up by 10%. When you look at the other asset classes, the dollar is somewhat weaker here, but it is down for a fourth straight day. So that just gives you a sense of the kinds of weakness, the extent of weakness that we've seen with the dollar. 10-year yield moving up right now, up to 82 basis points. It's been a whipsaw week for the 10-year yield for treasuries overall. Not much movement in AGG, the ETF that tracks fixed income, and commodities. Little change at the moment. We continue to monitor how things shake out with the vote count. John?
Scarlett Fu, thank you. We can turn to Bloomberg's Michael McKee on the latest in this race and the outlook for policy. Mike, haven't called the race, but people are talking about it already. What does policy look like in a Biden government? And for that matter, a divided government down in Washington, D.C.?
Well, I think you're going to see a lot less done than people anticipated. But it's not just what's going to happen once Joe Biden, if that's the case, takes the oath of office. It's what happens between now and then. Obviously, the legal wrangling may take up some of the time, but there's going to be pressure on the existing members of Congress to do something about the economy, with a lot of people still unemployed. And here's what I mean. Even though we had good jobs numbers today, you take a look at the total number of people who are on payrolls, and it's still 10 million below where we were in February. 142 million. We were up at 152 million. That means there are 10 million people who are not getting paychecks, and families who are not, who are at least struggling to get by. Plus, we have evictions starting to rise around the country. So there are still problems that need to be addressed. There's also the issue of what's happening with state and local government finances. State and local governments in this jobs report each lost 65,000 jobs. And the governors in those states have been predicting that we're going to see a lot of trouble. If that's the case, then you're going to see services cut back and a lot of pressure on members of Congress to do something. As for the Fed, probably not much they can do, but they will continue to say, as Jay Powell did yesterday, they're on the job.
Mike, great to catch up. Michael McKee there in New York. Mark Kiesel of PIMCO joins us right now, the Global Credit CIO. Mark, fantastic to catch up with you. What an hour of programming this has been for me, just to work through this market, try and understand the politics and what it means for asset classes worldwide. Mark, your base case now, how has that evolved in the last couple of days?
Hi, Jonathan. Good morning. Well, we're constructive on credit and equity markets. I think, markets want resolution. We're getting closer to that. I think the election showed that we're not going to have a blue wave. The prospect of a potential Biden presidency with a split Congress, even if it goes 50-50, it doesn't look like we'll have a huge mandate. And so I think that's good for markets like certainty. But in addition to fiscal, which probably comes maybe less than what we would have thought, the Fed has got that backstop in place. Monetary policy around the world is supportive. And I think also markets like the prospect of less taxation, less regulation. So this is, I think, actually pretty good for markets.
So, Mark, let's talk about whether that would pull investors or should pull investors away from the follow the Fed strategy that so many have got in behind over the last 9 months. Does that give you confidence to move away from that?
Well, I think longer term, Jonathan, if you look out 3, 6 months, and even past 6 months, a vaccine is probably coming, not just across the U.S., but Europe, the U.K. The U.S. economy is healing. We saw that in the labor market data today. We still have 10 million jobs to go, but we're recovering. You look at Asia, that economy is recovering. So I actually think there's quite a lot of opportunity out there in sectors like travel and tourism, where there is a lot of pent-up demand. The low rates are likely going to stay here for a lot longer, particularly without a blue wave, and that should continue to support housing, building materials. So there are sectors that I think have underperformed, like travel and tourism and aerospace, which actually could rebound pretty significantly over the next 6 to 12 months. And the catalyst really, Jonathan, is the vaccine.
So, Mark, we're playing with two different time frames here. In the here and now, the sector's doing well, as you point out, housing, materials, flying off the back of low rates. Then you've got the outlook. Have you been buying credits in travel, leisure, airlines? Have you been doing that, Mark?
So we have been tilting the portfolio overweight really since March and April. We got a huge widening in spreads, and we capitalized on that. Originally, we added a lot of the defensive sectors, like you suggest, technology, cable, towers, and also a lot of housing-related sectors. But across the summer, we did start to get more cyclical. We did start to add more travel and tourism exposure. We were comfortable with eventually a vaccine coming and the pent-up demand. But more importantly, when you look at these companies, Jonathan, these large-cap companies have built up significant liquidity cushions, and these central bank backstops around the world have been very significant in getting these companies to term out their debt and tap into $1.5 trillion of new issuance. So these companies' balance sheets, particularly the larger cap companies, are actually in a very good state. Many of these companies now have 18 to 44 months of liquidity. So if you believe that the backstop will be in place, the fiscal comes, and eventually you get a vaccine, some of these companies can actually do quite well.
Just quickly, Mark, you're not worried about what could happen and develop in the next couple of months in the United States around COVID cases, that maybe a lot of the fears from spring return again?
So, Jonathan, I think that's a real risk, and we're seeing that in Europe. But what we also are seeing is that governments are stepping up and doing the right thing. The UK not only increased QE, but the government came out and increased or extended the furlough, the unemployment benefits to the workforce through March. And I think we'll have to get through the election near term, but I think the government will do the right thing. I think we will get some fiscal support for the workforce, for a lot of these service sectors, for the governments. We are healing. We're healing slowly. Some of the sectors need support, but we're confident eventually we'll get that. And the Fed has really put in place one of the most powerful backstops we've seen for the corporate bond market. So those arguments with the vaccine argue for us to be constructive on risk over the next 6 months.
Mark, come back soon. Missed catching up with you. Mark Kiesel there of PIMCO on this credit market. On Payrolls Friday morning, and we've hardly talked about payrolls because of the moment we're in right now. Developing story, the last hour, a moment in Pennsylvania which gets the attention of everyone worldwide. Here's Bloomberg's Kevin Cirilli for more.
Yes.
Hey, Kevin, what's the latest?
3 things. First and foremost, according to the election officials in PA, 5,500 vote lead for Joe Biden ahead of President Trump. 2, the president's campaign putting out a statement saying, quote, this election is not over, and predicting that they will be victorious when it is. 3, based upon reporting that I've done in the past hour, there's going to be a Republican House caucus call early afternoon New York time this afternoon. Speaking to members of Congress, they're questioning whether or not the president's legal path forward is going to work, and they're questioning the strategy, and they're critical of it increasingly behind the scenes. I'm going to be watching to see if that gets made public.
Kevin, just quickly, can you define this election is not over? What does that actually mean? Because when the counting is done, the counting is done.
It means they're going to the courts. Yeah, they're going to the courts.
Kevin Cirilli is going to stay on top of this story through the next couple of hours, alongside David Weston as well. At the top of the hour, Alex Steele Guy Johnson will pick up the programming. I want to run you through the price action about 25 minutes into the session, which we've barely touched on after a huge week of gains on the S&P 500. The biggest week of gains potentially since spring. Right now we're down 21 and off by 0.6%. On the Nasdaq, that's where the huge move has been through much of this week. Down 138, a negative a little more than 1 full percentage point. If we switch up the board and go cross-asset just briefly, huge bid came into the bond market on the prospect of divided government. And maybe you don't get that big fiscal package. This morning, blowout payrolls reports sending yields higher by 6 basis points to 0.82%. That does it for this market. That does it for me. The coverage continues. The counting continues. The eyes of the world, not just on Washington, D.C., but right now the eyes of the world on Pennsylvania. From London and New York this morning, good morning. This is Bloomberg.
women leaders were actually better at controlling the deaths from COVID-19. Do you think out of this pandemic, we'll see more countries be willing to elect female leaders?
When we look at women leaders, we tend to project on them baggage that they shouldn't bear.
Women are given an opportunity when no one else wants to do the job.
Women had a very clear objective. They wanted to save lives.
The women leaders, if you look at their careers, have also built up a level of trust.
In fact, women have to be better at communication in order to be elected as leaders, whereas this doesn't hold true for men.
We need to get those sexist stereotypes out of our head and give women a fair run for leadership.
Trying to change the stereotypes about women is not only the business of women, but men have to be part of it.
It's Friday, it's 3 p.m. in London, it's 10 a.m. in New York and Pennsylvania, 30 minutes into the trading day in the US. From London, I'm Guy Johnson, my co-host in New York, Alex Steele. Welcome to Bloomberg Markets. Alex, what a week. And it's not over yet.
I was going to say, thank God it's Friday, but I don't know if that actually means anything right now, as we're still waiting on that vote count for who will get the presidency. So that's kind of the dueling narrative in the market. On the one hand, you had really good jobs numbers, by the way. On the other hand, you still have election uncertainty that keeps the equities a little bit on the back foot. S&P now down by 0.4%, but off the lows of the session. I do want to point out, though, the dollar index is still weaker. It was the worst week for the Bloomberg dollar index since March of this year, when when that pandemic hit. So watch that space. How much weaker could the dollar actually get? The bond market has been whipsawed all over the place this week. Talk about volatility. That's where you're going to find it. Now you see some heavy selling come in, yields up 6 basis points. That really picked up after the good jobs number. But let's get back to our top story, and that's the election uncertainty. Joe Biden tightening his hold on the race for the White House. He has taken the lead now in Pennsylvania and has a slim lead in Georgia. Biden remains ahead in Nevada and Arizona, although President Trump is catching up. We expect updates from all 4 today. For more, we are joined now by Bloomberg government congressional reporter Emily Wilkins. She's at the Biden headquarters in Wilmington, Delaware. Emily, what's the latest?
So the Biden campaign has a bit of a tricky thing to do today. Number one, they do have to continue to project confidence that Biden is going to be the winner. That is what it's looking like right now, given his leads in key states like Pennsylvania. But what he also has to do is make sure that he doesn't really get out there and declare a victory. Biden has already said he cannot declare victory, Trump cannot declare victory, but that they need to wait for the votes to be counted and for it to be called.
Emily, thank you very much indeed. Great coverage. Bloomberg's Emily Wilkins at the Biden headquarters. Let's go to the latest on the Trump campaign. Let's bring in Bloomberg's Josh Wingrove in Washington. Josh, the Trump campaign saying this race is not over. What does that mean?
It means that they're pursuing legal strategies, I suppose, to dispute this, and they still think they have Arizona, but there is a lot of writing on the wall right now. The Biden lead in Pennsylvania looks poised to grow. If Biden wins Pennsylvania, that is the ball game. It doesn't matter what happens in Arizona. It doesn't matter what happens in Nevada or Georgia. So things are looking very promising for Joe Biden right now. I expect that we are minutes or hours away from one of the networks calling it for him, unless there is a surprise in some of the Pennsylvania returns. So the Trump campaign is going to fight this one down to the wire, it looks like, but this thing is starting to look pretty baked.
All right, Josh, thanks a lot. Bloomberg's Josh Wingrove joining us there. Now joining us from Bloomberg government reporter Kyle Trigstad. Kyle, all of this, though, also depends on any legal action that the Trump campaign takes. Where are we with that?
Yeah, well, several of the lawsuits he's filed have already been dismissed by judges, and a lot of them have been kind of ticky-tack, not really major things, wanting their observers to be able to get closer to the vote counters and things like that. So we haven't seen the kind of major legal action that could move any of these states. Of course, Trump alluded last night in his remarks to the race potentially getting to the Supreme Court. It seems like he thinks that's his best way to win.
Kyle, what is the president's exit plan if he does lose? Is there any chance that he's going to concede?
That's a great question. I think that's something all of us are waiting to see. He hasn't made that. He hasn't indicated that he's willing to do that. And, 4 years ago, we did see President Obama sit in the White House with Trump shortly after he won the election. And I'm curious if we're going to see that with Trump and Biden.
We also heard from Kevin Surley just moments ago that the GOP caucus is going to be meeting later this afternoon, Kyle. And I wonder legally, can the Republican Party, not President Trump, concede?
Well, it doesn't matter really who concedes. If the votes are counted and Biden ends up with more electoral votes, the election's over. And Trump's going to have to go, regardless of who concedes and who doesn't.
But presumably, with legal action ongoing, the Trump campaign may decide that it still has a path to victory. How long could that last for? How long could that period be?
Well, there are dates set up in the United States laws about when the electoral votes get counted. So eventually, the legal action is going to have to come to an end. I am sure he's going to push it as far as he can. But we haven't seen the kind of evidence that would lead me or any people who are close to the situation to believe that there's going to be enough standing for legal action to continue beyond the new year, which is when the electoral votes get counted.
We will continue to cover this minute by minute. Kyle, thank you very much indeed. Kyle Trigstad joining us with the latest on the election, joining us now with the latest on the markets and kind of piling this all in. Payrolls, what's happening with the election, the fundamentals, the Fed. We are joined now by Nick Maroussos, head of global bonds at Janus Henderson. Nick, Just walk me through your perspective on the price action this week and where it leaves us.
Look, it's been a wild week. We've seen a round trip in 10-year government bonds of like 23 to 24 basis points, starting off selling off as soon as the election started, and then rallying, and then ultimately selling off a little bit today post payrolls. I think it's important to take a couple steps back here and sort of say, look, what is going to be the final outcome? It looks like Biden's going to win. It looks like the Republicans are going to control the Senate. Gridlock is likely here to stay. Depending on what happens if the runoff elections in Georgia. But ultimately, I think that's a positive for the markets because it means that the tax consequences probably won't be as severe. The likelihood of a Green Deal passing is likely not going to happen. And ultimately, both sides are going to have to get together and work towards the greater good of getting us through this COVID crisis.
Bank of America had a note out saying that they are recommending shorting the 10-year at 76 basis points. They're saying that they think that the post-election rally really is an overreaction. What do you think of that call?
Look, I think that, 10-year rates can sell off, but ultimately there's going to be a lid put on rates, whether that's done by the Fed through yield curve control, or it's done by the market. Because if you look globally where yields are trading, the U.S. is going to stick out as very attractive for foreign investors. Japan has negative interest rates. Europe has negative interest rates. Other countries are saddled with very, very low interest rates. So ultimately, that's going to be a buying opportunity. Ultimately, I think that the Fed, they understand that they can't handle, that the economy can't handle higher interest rates. It'll be a burden on the economy. It will destabilize growth. And I think ultimately what you'll see is the focus of the Fed sort of re-engineer some of their discussions around yield curve control, keeping a cap on interest rates, maintaining that dovish stance.
So if I want yield, where do I go, Nick? Do I go to equities or where else can I go?
Yeah, I mean, equities, you would have made your a year or even two by owning equities this week compared to bonds, right? So that's kind of the predicament that we're in the fixed income market. There's really two things that we know about the fixed income market, right? The Fed is backing credit and the Fed is on hold. And that stands for all central banks. No central bank is going to be raising interest rates anytime soon. In fact, the bar to be raising interest rates is higher than it's ever been. We're talking anywhere between 3 to 5 years before we see any interest rate hikes. So what does that mean? Focus on the front end. Yes, the yield isn't that attractive, but it's safe. You don't have the volatility that you do by owning the back end. You got the rally earlier this week. You got the sell-off today. Front end's not moving, and that's because the markets are pricing in these central banks to remain on hold. So if you can focus on some yield in Australia, Canada, even the US, and also combine that with investment grade credit, you're not going to get 5, 6, 7% from fixed income, but you will get a decent income stream.
So how do you see the environment shaping out in terms of central bank and then also government fiscal policy? If here we're looking at a gridlock government, you may not get the big fiscal bang everyone's expecting, but then you do get the Fed versus over in Europe, you're still getting both. How does that inform your trades?
So for us, Alex, the Fed is the only game in town. Politicians change. We all know that every 2 to 4 years. What's been the only constant over the last 2 decades? The Fed. Greenspan, Bernanke, Yellen, and now Powell. They all sing the same tune. They're all extremely dovish. Dovishness has zero political limits. So ultimately, the Fed policy is going to be what's driving markets. And I think the market actually understands that, which is why you've seen such a bid in risk assets. Ultimately, they're there to backstop that. We're going to get another stimulus package. I'm not sure if it's going to do the trick and sort of bridge us to the end of this crisis. But ultimately, like I said, the only game in town is the Fed, and that should be the primary focus, not necessarily who wins the election. It's how the Fed reacts to that.
Nick, I had the chance to talk to the Governor of the Bank of England a little earlier on this week, and we were talking about tools still left in the box. There is this consensus that the toolbox is pretty empty right now. The sense I got from the Governor was it's not. There are other things that can still be done. How empty is the box? How far can we still go with central banks in terms of their creativity?
So you're right, Guy. The consensus around central banks is that they're at their limits, but our belief is that they're really far from that. Central banks are going to stop at nothing to keep risk assets elevated and also provide an environment that can bridge the gap between now and the end of the crisis. And I think that we're much closer to the end of the crisis than we are at the beginning, so that's a positive sign. Ultimately, positive news will prevail, and that will actually lead us, so I guess, to the promised land, for a lack of a better term. But I guess my point is that don't underestimate the Fed. don't underestimate these central banks. Yes, every round of quantitative easing that comes about has a less and less effect on the market, but it's still there to provide support. And ultimately, if you look at the Fed, what they can do is they can start buying other assets that they haven't decided to purchase yet, whether that moves down into high yield, structured assets, some more liquid assets, and the Bank of England and other central banks can likely do the same.
Rounding it out here for this segment, some rhetoric is that, look, EM's the safe haven. Go buy it. You're going to get the yield. You're going to get the safety. You're less tied to the U.S. election. If Biden wins, it's only upside. What do you think?
You know what, Alex? It's a tough one because I think certainly EM offers that yield advantage. But in a risk-off move, EM, emerging markets, is going to behave like risk assets. So in our view, it doesn't necessarily provide a diversification story or that income protection should things intensify or get worse, but it does provide a yield advantage over, let's say, treasuries or investment grade credit to some extent. The problem that you have with EM is that it's sort of like the tail that wags the dog, right? What happens in the US or some of these larger economies is really going to sort of dictate what happens in EM. So I think the jury's still out there. I think it's a good investment. I think personally, we would be focusing on regions like Asia, ex-Japan, so China, Singapore, Hong Kong, very strong nations with very strong balance sheets, as opposed to some of the other more, I guess, difficult to understand EM countries in, let's say, South America or even Eastern Europe.
All right, Nick, you're sticking with us. Nick Maritsos, head of global bonds at Janus Henderson. Hang tight. As we head to break, you are looking at a live shot of Allegheny County warehouse in Pennsylvania where ballots are still being counted. This is Bloomberg.
The outlook for the economy is extraordinarily uncertain and will depend in large part on the success of efforts to keep the virus in check. The recent rise in new COVID-19 cases, both here in the United States and abroad, is particularly concerning.
Fed Chair Jerome Powell on the outlook for the U.S. economy, joining us now to discuss what we've heard from the Fed last night and, of course, today's payroll number, Bloomberg's Mike McKee. Mike, solid number today.
Solid number, but the 638,000 jobs that were restored in the month of October is lower than we saw in the prior month, in September. As a matter of fact, since the recovery began, each month it's been lower. And so that does suggest that Jay Powell's right. The virus comes back and job creation slows. That's going to be a problem going on. But you look at the unemployment rate, that's the best news of the day, down a full percentage point last month. And that came even though the labor force expanded and the labor force participation rate rose. So it's the good kind of drop in unemployment. Here's all the numbers. As I mentioned, 638,000 jobs created, much better than forecast, but lower than it was the prior month. The unemployment rate, the underemployment rate, 12.1% for the U6 is what we call it. And that's also an improvement. And then average hourly earnings increasing. We're still missing a number of people at the lower end of the economic spectrum, and that suggests that we're going to see outsized gains on a month-to-month basis. But this is not what's important for the Fed right now because there is no inflation out there. But as we go forward, we're going to be looking to see what happens with the stimulus package and with the Fed. You look at the total number of people who are on payrolls, and it's still 1 million below where it was back in February. A lot of people need additional help. And so going forward, you're going to see some pressure on Congress between now and the end of the year. Does that translate to the Fed? That's a little bit harder to know because they don't have the same kind of ability to add stimulus to the economy. They can push down on interest rates, keep rates near zero. That'll help stock investors, but it doesn't help the person who's in this category here of no jobs.
No doubt. All right, Mike McKee, thanks a lot. From Bloomberg, still with us, Nick Maroutsos of Janus Henderson. All right, Nick, let's paint the picture for us here. So this is where we stand jobs now. The virus is picking up. We have sort of regional rolling lockdowns in Europe. Could see that here in the U.S., and yet nothing coming from D.C. What kind of stimulus do we need, and how soon do we need it?
We need it immediately. Look, I'm not ready to sound the all clear with the jobs number. You know, as Mike said, it was a good number, and I think we're on the right trajectory. But we're certainly going to need some more stimulus to hold us over, whether that's one round or even 2 rounds, depending on how long the virus lasts. I mean, I would caution people to look at the top line number because I don't think it tells the entire story. Employment relative to population is still well below where we were pre-crisis, and that's because I think that we're going to have some lasting damage. There's many sectors that have been affected. Many jobs have been affected. So I'm not ready to sound the all clear, but I'm also not super negative on the situation either. I think that we will get back to pre-COVID levels, but it's going to take much longer than what people anticipate.
What is a stimulus that is going to have an effect? How big does it need to be?
I would say we at least need, it needs to be 500 at a minimum. Likely more to at least bridge that gap for the next few months. I think the big question is, guys, like, when are we going to get that? Is depending on, assuming Biden wins the presidency, are we going to have an environment where the House, the Senate, the president can pass something, or even Trump, is he going to play nice in the sandbox for the next few months until the inauguration happens? And I think these are critical things to talk about. I think ultimately, risk assets will still do well over this time period because they'll know it's coming. But as long as we can sort of keep things under control, we're certainly going to need something pretty sizable.
So the talk now is, do we get a double-dip recession in Europe? The forecast just wasn't great from the European Commission. Is that going to become the conversation here if, like you said, we have to wait, even if markets are calm while waiting for it?
I don't think so, Alex. I ultimately, we will get a package. Like I said, I think we're on the right track. And this is, again, it sort of goes back to the comments that we made last segment. There's no reason why bond yields should be rising significantly based on any of this news, because we're still in the middle of a pandemic. Yes, we have to balance the situation of lots of job losses with what is now a very positive equity market. But, again, a lot of that is sort of Fed induced. Again, it goes back to the Fed being the only game in town. They've solved the market function. Kudos to them. But they haven't solved the economic one, nor should they be in charge of solving the economic one. That falls on the government, and that's going to be through fiscal planning. So ultimately, I think that we won't go through a double-dip recession. We will prevail. We will hit some speed bumps along the way. But that doesn't mean that we're sounding the all clear and meaning go all heavy into risk assets.
Nick, when I got in this morning, the 210 spread was exactly where it was a month ago. Steepened up a little bit today with the payroll number. But what does that tell me about kind of where the market is? Have we priced out politics? Do politics no longer matter? You're suggesting they still do, but to a lesser degree. 500 is certainly significantly less than the $2.5 trillion that we were talking about only a few weeks ago. What do I read into the price action of the last month? Was it all about the election? Do we now put that to one side? Because that's what it looked like first thing this morning to me.
Well, here's the thing, Guy. I think the markets were looking for a reason to rally, right? If you look about what was happening a week ago or 2 weeks ago, it was all about the blue wave. The blue wave was going to allow risk assets and bond yields to normalize. We were going to have a situation where fiscal stimulus was going to be able to pass through. There'd be, no issues getting anything through Congress and whatnot. Now we're talking about gridlock, and now that's a positive story. It's really sort of mind-boggling, but ultimately I think that the gridlock situation is better for the private sector, and ultimately the private sector is the one that drives the U.S. economy. But you're right. I mean, I think if we look at the markets, they were looking for a reason to rally. As far as the 210 spreads go, we were never firm believers that the curve was going to steepen materially, and it was based on that view that rates were largely going to stay in check. If you told us that we were going to come out of this COVID situation over the next week or so, then yes, we probably would agree with that. But twos are pegged. They're not moving because the Fed's on hold, and they're not moving anytime soon. And tens are likely pegged to some extent. They might move up to 1% or something like that, but they're going to be met with a lot of demand because you're going to have foreign buyers, and it's a disadvantage for the U.S. economy to have higher interest rates.
Nick, have a great weekend. Try and get some rest. Thanks for your time today. Nick Marousos of Janus Henderson, thank you very much indeed. This is Bloomberg.
This is Bloomberg Best, your weekly review of the most important business news, analysis, and interviews from Bloomberg Television around the world.
Ken Burns, welcome to Bloomberg Big Decisions.
We have always been a mixture of things. We are always stronger for that mixture.
Growth is a way to stay competitive, delight more and more consumers.
Welcome to the Best of Bloomberg Technology. I'm Emily Chang.
They've moved the needle by acknowledging that they have to monitor the content.
What is one word of advice you'll take with you?
Learn how to listen. And that is certainly something that has served me well.
Ankiti, where do you go from here? It's a huge market. It's a huge opportunity. I want to go 100x from here.
Our philosophy is to partner where we can and stand apart when we should.
Going into the fourth quarter, we're going to have to see how healthcare systems grapple with the next wave of the pandemic. But I believe that healthcare systems have now learned a lot, learned how to manage the cases better. So overall, we're cautiously optimistic.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
Live from London, I'm Guy Johnson. Alex Steele, of course, over in New York. This is Bloomberg Markets. So as we all know, it has been quite the week for news. The US election, central bank meetings, topped off, of course, with the jobs number out of the US today. Scarlett Fu is looking at how that has all played out in ETF land.
Yeah, quiet week. Nothing really happened this week, Guy. All this year, one of the big themes is betting big on big tech, and leveraged ETFs regularly show up in the most active by value. These are not buy and hold investments, by the way, of course. These are short-term plays, and what consistently shows up are TQQQ, which is a triple leverage bet on the NASDAQ 100. And you can see that it saw big outflows the last 2 days. The bottom panel over here is triple Q, and that is its mirror. It's 3 times the inverse of the NASDAQ 100, and we've seen some big inflows as well. Again, short-term plays. This week, when you look at the price action, all 11 groups in the S&P 500 have finished higher by quite the big margin, at least 3%. And the leaders here are healthcare, first of all, tech, healthcare, communication services, and consumer discretionary. Basically, aside from healthcare, all the big tech names embodied in some of those sectors. So flows into the spider sector ETFs show about $500 million into financials and healthcare. Interesting, right? Technology is there, but only number 3. When it comes to financials, this may reveal more about how people are underweight the sector overall. Betsy Graysick over at Morgan Stanley says divided government should be a big boon for banks. Also, remember, the yield curve has been steepening. Yes, we've seen every permutation of this blue wave idea play out. It's on, it's off, maybe it's on again, but the yield curve has generally been steepening, and that is good news for the banks. Also, let's talk about a couple of theme ETFs that are in focus. TAN, which is, of course, the play on green energy, got a lot of money coming in right around late September, early October. And MJ, the Cannabis ETF, was another big theme play as well. Alex?
All right, thanks so much, Scar. Appreciate it. Coming up, you got stimulus and the labor market. We're going to speak to Marty Musi of Paycheck to see when it's needed and where. This is Bloomberg.
So when you went to Baltimore, you went initially to be an
anchor woman.
An anchor woman, and then it didn't quite work out.
Yeah, I got fired.
Well, you
well, demoted. I was
got demoted, but they didn't. They had a contract, so they didn't say goodbye. Yeah. And then, how did you work out to be on a afternoon show where you actually got to be an interviewer? How did that actually happen?
Well, what happened was this is what I now know with age and perspective, that many times getting demoted is an opportunity for something else to show up, or getting fired. You know, lots of people I've interviewed over the years who have these stories about the best thing that ever happened to you. It puts you in the next best place. I was not a good television reporter. I was too emotional. I was making $22,000 a year, and my best friend Gail, who I met there at the time, she was also working there. She said, "Oh my God, you're 22, making $22,000. Imagine when you're 25." Then you're 30. So I'd be making 60 about now. It'd be good, 62. Once I got demoted, they didn't want to pay out my contract. I was making $25,000 a year. They didn't want to pay me the $25,000. Right. So they kept me on and said, "We'll put you on this talk show just to run out your contract."
We explore the trends, investments, and competition of the European ETF industry. Join us on Bloomberg ETF IQ Europe.
Live from New York, I'm Alex Steele, along with Guy Johnson in London. This is Bloomberg Market. So the other story is the job story. U.S. October payrolls topping estimates, unemployment rate falling by 1 percentage point to 6.9%. Check out the read, though, on small businesses. So Torsten Slot, chief economist over at Apollo and Paycheck, came out with this chart on how small business plays into jobs numbers. They took a look at ADP and showed that small businesses remain 2 million jobs below where they were in February, that the increase in small business employment in October was only 115,000. The bottom line is there is still anemic and weak growth in this very important subsector of the job economy. Joining us now is Marty Musi, CEO of Paycheck. Paycheck is the second largest payroll processing company in the country. Marty, it's easy to get excited about a headline number, but what's the reality for small businesses right now?
Well, as I think what we've seen is a continued kind of moderation. It was down a little bit in October, the job growth. And that continued. It is still growing, but there is moderation. You know, I think a second stimulus has been very important, would be very important for small businesses. They need more flexibility. They need more cash right now. The first stimulus pretty much has run out for most of these small businesses. And while they're doing okay, they do need that through this season. The other thing you're finding is, from a positive note, we're seeing, you know, Florida's still very strong. The South pretty strong from a job growth perspective. It's at the top. It's still down, of course, from pre-pandemic times. And some small businesses actually are having a hard time finding employees because of either healthcare concerns from employees that they would hire or childcare concerns. So anything the stimulus can do to help from a dollar perspective and finding more employees and more, I think, you know, knowing more, then I think they'll get back on track.
Marty, good morning. It's Guy. Let's back up and talk more about the details of this stimulus. What is the liquidity position currently of most small businesses? How liquid are they? And how big does the stimulus need to be? What kind of quantum do we need out of Washington?
Well, I think the importance, Guy, really will be how flexible is it? You know, the first stimulus was a really important lifeline for many small businesses, but they need more flexibility. They need longer loans, forgiveness of some of the loans. I think that their cash flow position, you know, any small business, typically their cash flow is not that far out, that they have stability, but they have saved some expenses right now, but they need that second stimulus, and it's the flexibility. It's more favorable terms on the loans, and like I said, some of those the lower loans just completely forgiven, and they need to be over a longer period of time.
So basically, they need more money faster and grants rather than loans. What kind of numbers are we talking about here for some of these small businesses?
Well, I think, you know, as Guy was asking, the total package probably has to be in, you know, that $1.5 trillion kind of a range, I would think, to encompass everything. For small businesses, really, even a loan, you know, $50, $100, $150,000 for the smallest of businesses can really help them over a rough period of time. And if those can be completely forgiven, that gives a lot of stability to small businesses. I think the toughest time in the pandemic and now the election is, what is it going to look like when these things kind of all settle out? Is it going to be an environment where I have more regulations, higher taxes? And even taxes aren't as important sometimes to the smallest of businesses because they don't have a lot of profit. But stability and regulations will be important.
Marty, in Europe, lockdowns are now the new reality once again. If we were to see a similar situation emerging in the United States, what would that mean for small business? How devastating would it be?
Well, very painful, obviously. You know, you've seen things even in the Northeast when the lockdowns were a lot stronger, like restaurants. You know, at least in the summer, spring, summer, and even into the fall, they could serve people outdoors. That's becoming more difficult. You know, the more complete the lockdown is, obviously some small businesses are not going to be able to handle it through a second wave of that kind of thing. It doesn't feel like we're going to have that kind of lockdown. But, you know, a lot of small businesses, I have to say, are very resilient. And you've seen a lot of small businesses find ways that if they can't open the way they always have, they've found new ways to do things. And, you know, new business startups are up still over 20% over last year. It's really unbelievable. And that's a lot of businesses finding new ways and new opportunities in this pandemic time.
Yeah, I actually know people who've started their own business during the pandemic to meet different kind of demand. Marty, I'm curious as to sort of margins and prices. We were talking to somebody yesterday saying that at some point businesses are going to have to pass on some kind of price increases just to kind of stay afloat. Are they? Do you think that they will?
Well, we haven't heard much of that at this point from small businesses. They're really trying to make sure that they maintain the client base that they have and they don't try to ruffle any feathers with price increases. I do think, at some point, but it depends again on the stimulus. If they've got to pay a loan back, that there's going to be more pressure to raise price. If there's some forgiveness of the loans or a longer period of time to pay it back and allow them to recover from their client base, they may not have to do that. Right now, I think most will try to hold on price increases to keep from frustrating their current client base.
Marty, small businesses are the backbone of employment in the United States. But one thing we are learning is that companies are learning to do more with less. What does the employment story look like on the other side of this pandemic? Are companies going to be leaner? Are they going to bring back people that they've laid off? I'm curious as to what that reality will look like.
It's a great point. I don't think it's going to be the same by any stretch of the imagination. I think it will be different. So I think, our own clients, what we've seen is that about half have added workers and about half are still down workers. And so surprisingly, some businesses have added workers because they found new opportunities, as we were just discussing. I do think it will be different because people are going to find, for example, more online. Technology will be taking a bigger role. People, prospects are more likely to look for a demo online, buy online, not have to see someone face to face. Those companies who have adjusted their technology and have invested in technology, I think we'll see some really new opportunities that will add some jobs, but I think it's going to be different jobs than what it was pre-pandemic.
Yeah, can you elaborate a little bit more in terms of, say, what the pay scale of that would be, for example? Because what we have seen is a slowdown in employment in lower wage jobs as middle wage and higher wages have picked up a little bit. So I'm wondering how that corresponds.
Well, some of that we've seen in our own numbers that some of that is the fact that, lower wage jobs were, particularly restaurants and folks like that were laid off. But some of those are coming back. We actually saw a pickup this month in part-time and lower wage employees coming back into the mix. And I think that's a good sign for those that make the lowest wage, but need to get them back employed. So, but I think you'll just see a lot of adjustment. I think there will be some lower wage jobs that'll still be there, but there'll be a shift. I think you'll see much more, as we would expect, online sales, online service, and much less face-to-face because prospects and clients have figured out they don't need to see someone. And those companies who have invested in technology, and those are higher paying jobs to do that development, will be those that are most successful.
Marty, really appreciate your time today and your thoughts. Thank you very much indeed. Marty Musi, Paycheck CEO. Coming up, we're going to be looking at diversity in the labour market. Tiffany Pham, Mogul founder and CEO, joining us next. Secretary of State, we are getting news out of Georgia. Georgia officials saying over the last few minutes that there will be a recount in the states. You're looking at that news as it is being delivered. This is Bloomberg.
Can come only after we do our risk limiting audit. And that is going to be the first time the state's doing it. It was part of HB 316, Secretary Raffensperger's election reform law. So that happens. And then we're going to have
a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
Bloomberg Market. So prior to the pandemic, Donald Trump could tout the major economic advances for minorities during his administration. What's happening during this recovery? Well, let's figure out what the numbers look like. Bloomberg's international economics and policy correspondent, Mike McKee, is here with those.
Well, Guy, you know, Donald Trump is a show business guy, and he should understand the old show business saying timing is everything. The numbers that we got today would help him make his case, but they come too late. The unemployment rate, of course, we talked about that all day, coming down significantly, 1%, everybody doing better there. But if you break it down and you look at it by ethnicity, you see some significant progress there as well. Now, the numbers are still much, much higher. Remember, black unemployment was down to historic low levels. Hispanic unemployment down to historic low levels, around 5% or so. They're still up. Let me move out of the way here. They're still elevated, and you can see 10.8% for black Americans, and for Hispanic Americans, 8.8%, Asian Americans, 7.6%. But you can see how significantly they have come down. So it looks like the job restoration process is not the same as the job creation process. These are probably people who had jobs who are coming back. Now, that said, there's still a lot of them who remain unemployed. And then going into the next administration, whomever it is, one of the key questions is going to be, what do you do about inequality? And we can see that in the breakdown of weekly earnings by ethnicity. This is quarterly data, third quarter data, and you can see that white earnings significantly higher than black and Hispanic earnings. And that's going to be a problem to try to solve. Why is it that people are making so much more money on the left side of the graph than on the right side of the graph? So some progress made, but still a long way to go.
All right, Mike, wonderful setup. Bloomberg's Michael McKee. We appreciate that. So for more on jobs and diversity, joining us now is Tiffany Pham, Mogul founder and CEO. Mogul is a global technology company which recruits women, minorities, and people of color. Mogul's talent acquisition platform has about 32 million users globally, 73% of whom are women, 50% of minorities. You're often called the LinkedIn for diversity, Tiffany. Thank you for joining us. What have you noticed? What have you noticed recently as a lot of companies put a lot of spin on how they're looking for more diversity and they want to put their money where their mouth is? What have you noticed over the last 9 months, and what do you project over the next year?
I see tremendous momentum towards companies actually meaning it. Companies are coming to Mogul left and right to come and recruit more diverse talent across levels, and especially at the leadership level, which has been really exciting, therefore making it one of the best years in Mogul's history. And every month has been one of our best months yet. And so it's been really exciting to see that evolution, for companies to understand that this is at the forefront of what they should be caring about. And therefore, again, really placing the money where their mouth is, as you said, and actually now taking action on it, focusing on bringing in more diverse talent across levels, across roles. And I predict that's here to stay. I predict that we will continue to see companies taking this into their hands and placing a focus on this, placing budgets on this. And that's exciting to know that we're here today.
Tiffany, how different have the last 6 months been? How much of a difference did the Black Lives Matter protests make in terms of corporate accountability on this issue?
It made a significant difference, to be honest. It made such a difference that upon the start of the protests and rallies across the US around the time of Black Lives Matter becoming a major movement across the nation, we saw companies really assessing their agendas, assessing their focuses for the year, and completely overhauling it, and completely then refocusing their efforts again on diversity recruitment and making sure that they were placing budget on this, they were having conversations around the workplace about this, and that this wasn't just talk, it was actually action. So it's been really exciting that this has actually happened over the last 6 months or so, and I believe it is here to stay.
What kind of jobs are we talking about? I was really struck by Mike's chart and the bar graph that shows the median income disparity based on race. What kind of jobs, what kind of salary are we talking about?
Good question. I believe that it is across all levels at this time that companies are looking to expand their diversity and ultimately ensure that they have, again, more diverse talent across their workforce. But in terms of what we're seeing at Mogul, especially because we help across all levels, we can see the large span of roles being recruited for across the Fortune 1000, which we serve, and many of the world's fastest growing companies. And at this time, we're seeing a special focus on leadership roles, manager and above, even I would say VP and above. Companies are turning to us and saying, we're working with other recruitment firms where this hasn't been working, or our internal recruitment teams haven't been able to solve this. We really need your help in filling more diverse leadership, ethnically diverse, gender diverse, but ultimately more diverse leadership across VP and above positions.
Tiffany, what do you need to see out of Washington? Sorry, carry on.
Oh, so salary ranges are ultimately $200,000 and above for such VP positions and above across the workplaces we're seeing.
Tiffany, what do you need to see out of Washington to accelerate this process? We are clearly focusing on the election coverage at the moment. We are potentially, if the polls are to be believed and the counts are to be believed, looking at a transfer of power in Washington. That is by no means determined at this point. It could go either way. But I'm wondering how important Washington is in this process.
Washington definitely is important in this process. It starts at the individual level, the company level, but ultimately we need governments to support our work. We need governments to ultimately share their priorities in alleviating workplace inequality and therefore support diversity issues and having a focus, therefore, on more training, more education and awareness around the importance of this issue. Obviously, in this current administration, that hasn't always been the case. So excited to see what happens next. And for example, with Mogul, we founded a day called National ERG Day. It's occurring November 17th, coming up in just another week and a half. It is a day to celebrate diverse talent nationwide. And we hope that the next government will be supportive of such incredible, important national days going forward.
Tiffany, how do you find your members? Oftentimes, if you talk off the record to some CEOs, they're like, I just can't find the people. And that excuse seems to be running real thin now. So where are you finding your members?
Well, we are the owners of the largest ecosystem of diverse talent worldwide. So our members come to us, women, minorities, people of color, and register themselves, enroll themselves in order to gain access to each other. Because Mogul is essentially a network of professional networks, they can deepen their connections with another, ultimately across our platform at onmogul.com. And from there, gain access to jobs, our workplace research portal, our events, our resources, our books, which are sold worldwide across 56 countries. And so these are also the channels through which we acquire the talent and cultivate them as well. And thereafter provide access to our clients across the Fortune 1000 to this talent too. So this is how we cultivate the talent and have ultimately created what is, again, the largest ecosystem for diverse talent worldwide.
Tiffany, does working from home make it easier or harder to generate a diverse workforce?
I believe it makes it easier. We always believed at Mogul, actually, that the future of work was remote. So even prior to the pandemic, Mogul itself was walking the walk, walking the talk. We actually had moved remote a year prior. And so it's exciting that with the pandemic, companies were able to reassess, understand that the future of work was to enable a globally diverse workforce, a globally distributed workforce, and that now will enable companies to have more diverse talent as they're recruiting from all around, more ethnically diverse talent and gender diverse talent that therefore enables them to be more diverse overall. So I believe it will help with the diversity.
Tiffany, thanks for your input today and thanks for your thoughts. Tiffany Pham, Mogul founder and CEO. More news coming out on the election. Alex.
Yeah, we're taking a look here at Gabriel Sterling. He's Georgia's voting implementation manager, saying there will definitely be a recount of votes in Georgia. He says the kind of margin that we're looking at is something you'd see in a large high school. Right now, Biden is currently leading Trump in Georgia by about 1,000 votes. Now, because of that, they may not be able to certify the results of the election until the end of November. So that uncertainty continues. Maybe the markets, though, looking past that just a touch. This is Bloomberg.
Phone calls to make sure that credibility, then you're like, yes, there's credibility.
women leaders were actually better at controlling the deaths from COVID-19. Do you think out of this pandemic, we'll see more countries be willing to elect female leaders?
When we look at women leaders, we tend to project on them baggage that they shouldn't bear.
Women are given an opportunity when no one else wants to do the job.
Women had a very clear objective. They wanted to save lives.
The women leaders, if you look at their careers, have also built up a level of trust.
In fact, women have to be better at communication in order to be elected as leaders, whereas this doesn't hold true for men.
We need to get those sexist stereotypes out of our head and give women a fair run for leadership.
Trying to change the stereotypes about women is not only the business of women, but men have to be part of it.
Mostly, I'm confident because we have so many shots on goal, really an unprecedented number so quickly. So I think science will win in the end. It's just hard to pick the winner at this point in the horse race.
It's time for the Bloomberg Business Flash, a look at some of the biggest business stories in the news right now. I'm Ritika Gupta. Don't count on buying an electric version of the classic Porsche 911. The automaker's CEO, Oliver Bloom, indicated that a 100% battery-powered 911 is a ways across if it ever happens at all. Bloom said on a call that the 911 is a concept that is prepared for the combustion engine. Porsche begins or hopes that by 2025, half of all its vehicles sold will either fully be electrified or be a hybrid. Shares of Coty are rising. The maker of CoverGirl reported sales declines have eased from the previous quarter. Revenue was down 13% following a 56% drop the previous reporting period. Coty is raising the stakes on its $200 million bet on Kim Kardashian West's Color Cosmetics. It's now working with the reality star to develop skincare products. And that's your latest business flash. Alex?
All right, thanks so much, Ritika. Time for Futures in Focus. Oil falling for a second day. It's been a pretty brutal week for the commodity, dropping now below $38 a barrel. Joining us now with more is Mike McGlone of Bloomberg Intelligence. Give us the fundamental, the supply-demand picture in terms of what's leading oil down.
Well, we've seen recently inventories reached an all-time high. And the key thing about a balanced government now is we can go back to fundamentals, and demand has also been declining too. So that's one thing we may be able to show in a little bit is right before, when we hit the beginning of this year, the U.S. was consuming maybe 20 million barrels a day. Guess what? That's the same as 15 years ago. Yet GDP has been taking off. So it's that shift that's really kicking in. And then we have to look forward to technology advancing. So what was 50 when shale producers kind of broke even, and is now 40. So anytime the market ticks up, we get more supply coming on. The overall thing is markets oversupplied, volatility should decline, and been stuck in a range with bias going down.
Mike, oil is priced in dollars. The dollar's had a pretty tough week. Just put that overlay on for me.
Well, okay, it has had a tough week, and that's a key point. That's one thing I think oil can look forward to is further weakness in the dollar. But when we measure the dollar, measured versus other currencies, obviously that's a key point. I look at gold as one of the best overall measures of the dollar historically, and gold's up 25% this year. That means the dollar is weakening, but the key trend that's been significant in commodities for a long time, and that is crude oil lower and gold higher. I expect that to continue now that we can move on to fundamentals, get past the election. Trend's your friend. It might help help oil a little bit, but it's better for gold.
All right, fair point. So is it better for Bitcoin? I read a note the other day that Bitcoin is now like a growth stock and it trades with the FANG names, et cetera, but doesn't have to report earnings. What do you think?
Absolutely. Bitcoin is coming into the mainstream. The key point about Bitcoin is supply next year is going to drop below 2%. The last election was running 6 to 8%. It's because it's just a simple fact. All we need is more demand and adoption, and that's kicking in. So I see Bitcoin going higher. I see it moving above 20,000 next year.
Whoa.
Mike, that's quite a big number.
We'll
leave it there. Mike McGlone of Bloomberg Intelligence. We're going to remember that, definitely. We'll get Mike back maybe when that happens. What are we going to talk about next? It's been a big week for equities, hasn't it? Really big week for European equities. Huge outperformance coming through. The DAX up by 8.25%. In euro terms, You're looking at a NASDAQ that's only up by 6.5%. I appreciate it dollars, it's up by 8.6%, but nevertheless, in euro terms, big outperformance from Europe. Nick Nelson, UBS's global head of European equity strategy and global equity strategy, is going to be joining us. Constance Hunter, KPMG's chief economist, is going to be joining us as well. We're going to be breaking down the Fed. We're going to be breaking down that payroll number too. Alex.
All right, well, as we head to break, want to take a look at the scores. The score you care about, the presidential race where it stands. Democratic candidate Joe Biden has taken the lead now in Pennsylvania, putting him on the cusp of victory here. 264 to 214 is where we count for AP, the votes that we follow. Still in play, though, Pennsylvania, Arizona, Georgia, North Carolina, and Nevada. This is Bloomberg.
Do you think you'll have to produce less beer in 2021?
No, I don't think so. I think consumers will find a way. But I mean, if there are restrictions, but consumers, of course, are smart and they'll learn to live with those restrictions, I think some occasions will migrate.
I'm David Weston. Bloomberg Television is reinventing one of the most iconic brands in financial television for a new audience. Join me to see the news program for the clever investor. This is Bloomberg Wall Street Week.
Give you a sense of the real-time action. The 10-year yield tumbling now 11 basis points, so continuing in this knee-jerk risk-off feel.
Live from London, I'm Guy Johnson. Alex Steele is over in New York. We're now counting you down to the European close this Friday on Bloomberg Markets. I appreciate that the news is out of the States today, but what do you need to know out of Europe? Well, another Brexit blow for the City of London. Goldman Sachs will move $60 billion of assets out of the UK and into Germany. The dollar continues to fall, this time against the Swiss franc. We're now trading at levels that are below spot 90. That's the lowest level since January 2015. And China continues to drive luxury. Surging sales, helping Richemont, owner of Cartier, weather the storm. The stock surging on the news. We'll come back to that story a little bit later. Quick check of European markets. We are, of course, following the news stateside very, very carefully. After surging all week, we are seeing a little bit of risk being taken off the table as we head into the weekend, unsurprisingly, given the gains that we've seen. And Europe has outperformed quite significantly US markets. Stock 600 down by 0.2%. The S&P is down by 0.4%. There's the dollar Swiss rate. Remember, 2015, January. That was when the ceiling went. Spot 89.93 is where we're trading there. And it's interesting to see actually what's happening in the bond market. So we have seen basically a curve flattening throughout most of this week. We've seen a little bit of steepening today on the back of the payroll number. We've seen that ripple really around the world, and that today being reflected in the German 30-year. But 2s10s in the States basically back to where they were almost a month ago. Alex.
All right, Guy, thanks very much. I also want to point out for the S&P now dropping like a stone, you have House Speaker Nancy Pelosi speaking right now. She's saying to everyone, be calm, be confident, be patient. But she did call Biden, President-elect Biden, having a strong mandate to lead. She says that she's hoping Republicans can come back to this table on stimulus. Just moments ago, we also heard from Larry Kudlow, as well as other senators, that they also wanted to try and move forward on stimulus, and they wanted to come to some kind of agreement. Will they or won't they is really the big question, but the S&P taking a nosedive as we're still trying to determine the race for the White House. The latest from Arizona should be coming at any moment from Maricopa County that encompasses Phoenix, so that will be a key understanding there. All right, joining us for the latest, Kevin Cirilli, Bloomberg's chief Washington correspondent. Hey, Kevin, where are we? What do we know? What are we going to know today?
Three things. First and foremost, Joe Biden has a 5,500 vote lead against President Trump in Pennsylvania, and there's about 30,000 votes left to be counted in the city of Philadelphia, a predominantly historically Democratic part of the state, plus additional mail-in ballots to be counted over the next couple of days, not just in Pennsylvania, likely a recount in Georgia, Clark County in Nevada, election officials saying that those tallies will come in over the weekend. And you mentioned Arizona, Maricopa County throughout the day as well as into the weekend. So Bloomberg News has not called this race, but without question, if you look at the data, if you look at the historical information that we have before us, this is a major, major development as it relates to Joe Biden taking the lead from President Trump in Pennsylvania. Secondly, the Trump campaign has put out a statement. They said, quote, this election is not over. They went on to say that they will continue to fight. The third and final point, this is important. In 2 hours, the House Republican caucus is scheduled to have a conference call in Congress, where I'm told by multiple sources and members of Congress that likely this will be the first time that the House Republicans have been able to gather to talk about the developments in recent days. It comes as publicly Senator Pat Toomey, a Republican from Pennsylvania, said earlier this morning that the president's comments at the White House yesterday were, quote unquote, hard to watch. Behind the scenes, privately, after conversations with multiple members of Congress throughout the morning, I can tell you that the frustration is palpable amongst Republicans that there does not seem to be a viable legal argument that has been presented this time. Alex, Guy?
Well, it's interesting. On that note, Kevin, Mitch McConnell over the last couple of minutes saying that there will be court decisions that will affect the election. So clearly that legal route, that legal challenge that some in the Republican Party are still focusing on, Mitch McConnell believes that that is still a live debate. Kevin, thank you very much indeed. Let's carry on the conversation and try and move forward. Joining us now, Bloomberg contributor Rick Davis of Stone Court Capital. Rick was the national campaign manager for John McCain's 2008 presidential campaign. It was interesting listening to the various comments that have been flying around over the last few minutes, Rick. I focus in on what we got from Larry Kudlow talking about a peaceful transfer of power. I have to ask you, do you think there is an exit plan for the Republicans at this point out of the predicament that they find themselves with? Do you think there is an exit plan for President Trump that is being actively talked about? If not, how big a problem could this be?
Well, I do think President Trump's comments yesterday were putting a lot of Republicans in disarray. I think they would have thought that the president would have kept his options open and to have looked at more of a transitional approach rather than a confrontational approach. That being said, there is a lot of questions being asked within the Republican Party. What do we do if the president isn't prepared to concede, assuming that the current status of these states that Kevin mentioned stay, and that Joe Biden has over 270 electoral votes that he needs to be president? I would say the other questions being asked quietly around corners this morning is if the president is reticent to look at a transition of power, who goes and talks to him about it? This is not a president who has close personal advisors other than family members. And so that will become even a bigger issue once this election is called, if it is called, for Joe Biden.
Rick, I do want to say that AP right now has called the race for Biden, saying that Joe Biden is elected president of the United States. That's from AP. Bloomberg is not calling that. We are following AP's lead, though, on certain states like Arizona and all the states, actually. So just pointing out that AP has called the race for Joe Biden. To that point, legally, can the Republican Party concede for Trump? Is that a thing?
Well, Donald Trump is the only one who can concede, but a concession is almost irrelevant. There have been many elections, some of which I've been involved in, where the opponent never conceded. It didn't matter whether they conceded or not. If they lost, they lost. And so I'm not sure what situation the president's going to find himself in. I do think the comments mentioned earlier on this broadcast that Senator Mitch McConnell is looking at legal remedies that have been requested and that may change some of this outcome. I doubt it, but if this is the approach the Republicans are going to take, it's just a matter of time, right? I mean, the clock is going to run out. AP, it sounds like, has made its announcement. They are the gold standard in election forecasting. And I think the rest of the networks will probably follow suit.
Let me interrupt you 1 second, because it seems like, and we're confirming that now, that the tweet's now been deleted, that it came from a fake account. So fair enough. However, you can see where the conversation is going.
So the real AP is the gold standard.
The real AP is the gold standard. The fake account AP is not. But to your point, if we're headed there anyway, regardless, that's part of the conversation.
Yeah, look, I mean, Pennsylvania is the only state that Biden needs to win to lock it up. It's 20 electoral votes put him over 270, 273 would be his number. And it means that the president has no longer any electoral options to try and win this election. Therefore, he would look at his legal options. We know what the various options are, and they seem incredibly limited. One of the big issues that the president talked about even a week ago before the election were ballots coming in after Election Day that would be counted in places like Pennsylvania. These are ballots that maybe got mailed the day before the election, didn't arrive on time. And according to Pennsylvania election law, those ballots would normally be counted. That was the issue that he took to the Supreme Court. Supreme Court chose not to enter into it until after the election, if it got brought back to them. But the reality is, where the current election stands in Pennsylvania, you don't need those ballots to change the outcome. Joe Biden has now run ahead of Donald Trump in Pennsylvania, and the likely votes coming from big urban areas like Pittsburgh and Philadelphia, counties like Lehigh and Allegheny, are decidedly heavily weighted toward Joe Biden. So once they call Pennsylvania, they've called the election, and that limits Donald Trump's options significantly.
Fair point, Rick. Thanks a lot. I'm sure we'll be checking with you later as well. Bloomberg contributor Rick Davis of Stonecourt Capital. Thanks a lot. Well, joining us now, Nick Nelson, UBS head of global and European equity strategy. Quite a week if you were a tech investor, European equity investor. Nick, how did you interpret the equity action over the last few days?
Well, look, I think we'd written the report previous to the election, and obviously, as we all know, and we're discussing there, that the final results aren't yet official. But we'd certainly noticed that European equities within a global portfolio have performed pretty well whenever you saw Biden's odds improving. So it seemed to us that Europe as a region was likely to be a beneficiary of a Biden presidency relative to the status quo. And I think, we were referring earlier, Guy was picking out some of the numbers for this week. You have seen European equities perform well. To be fair, let's put it in context. They've massively lagged behind the US all year. So they've been, really under the cosh in terms of relative performance. But I think in this last week, obviously, given what it looks like the election might turn out to be, for our view, that seems to be something that supports European equities, supports European companies, a slightly better global cyclical backdrop, maybe better news on trade. And I think that's what's driving us right now.
Nick, just taking a step back, nice to see you, by the way, just taking a step back, I'm trying to understand the narrative this week. I'm trying to understand how we flip from focusing on a blue wave to focusing on divided government and the rewriting of the narrative on that. And the only kind of logical answer I've heard anybody come up with is stocks want to go higher. That's the narrative. How solid is that? People just want to buy stocks and they can rewrite the narrative retrospectively to justify it.
Well, look, I mean, I think the context, I would say, is up until Monday, we had a pretty solid correction. So remember, the peak in Europe was October the 12th. So in the back half of October, we had a 8-9% correction in the European equity market, which is pretty much bang in line with what we'd normally expect for a bull market correction. We obviously had a bit of a rally Monday, Tuesday ahead of the election, but we were coming from an area where, you know, if the price action was where it was in the middle of October, I think things could have been very different. So I think you were coming from an area where there had been a pullback. We had seen the pause that refreshes, as it were, and that had allowed equities to do well. And to your point about people just having to buy equities, this is, you know, whether you want to call it financial repression or the TINA, there is no alternative. Those arguments are still in place. And when you look in particular at Europe, if you're looking for yields, European equities are pretty much the only major global asset class, large liquid asset class, that give you a yield in line with their 30-year average. So the dividend yield on European equities is just over 3%. That's pretty much bang in line with 30-year averages. I don't see that for treasuries. I don't see that for corporate credit. I obviously don't see that for 10-year bonds, which are negative. So I think, you know, when you have a world where some $18-odd trillion of bond debt is yielding negative, that does force people back into equity. So whenever we get these pullbacks, I think you will see people buying on those dips, and maybe that's partly what we saw this week.
Yeah, but you got the virus. So meaning that we're seeing more lockdowns. I mean, maybe that case would have held a few months ago, but what do you do with that?
Yeah, no, well, look, we had the virus, and we were certainly back in September highlighting the fact that the market, in Europe at least, was ignoring the daily new cases in terms of the COVID-19 cases. We saw that reconnect quite aggressively in the middle of October, and we saw that, as I say, that 8-9% pullback. And I think that was very much exactly to your point. It was the virus. We were seeing new cases, and more importantly for equity markets, we were seeing actually government responses to that. And we do have renewed mobility restrictions here in the UK, but also in France, in Spain, and in Germany. So across a lot of Europe in the last couple of weeks, we have seen that. And that's been reflected in the macro data, right? We have seen weaker PMIs. I mean, look at the PMIs in Europe, compare them to the US, or more importantly, China. Europe is definitely lagging behind currently in terms of that macro recovery. So we don't dispute that, and we do see some downside risks, certainly to earnings numbers across Europe as we exit this year, because I think that those mobility restrictions in Q4 will hit. But I guess the point I'm making is, you know, if we see some certainty coming out of the US around elections, we can then revert back to, as I say, the valuations that we're looking at in terms of the relative call between fixed income and equities. And I think that's what gives us the support, as it were, which we hit last Friday. That was the sort of level that I thought was actually quite a good support for European equities.
Nick, tech and healthcare have been the big outperformers. Is that something that you're comfortable sticking with? Do you think people should be rotating out of the weekly rally that we've seen in those spaces? Do you think they should be rotating towards other areas? Is this what you would have anticipated?
Well, look, I think certainly with healthcare, it's not necessarily, and I know all the results are still up in the air as we were just hearing there, right? So I think it doesn't look, though, it's the blue wave, and the Senate is still obviously uncertain, but you know, it doesn't look like you're necessarily going to get a Democrat Senate as well. So the full blue wave that maybe people were looking for on Monday, Tuesday is maybe not coming through. And I think healthcare, obviously, depending on what a potential Biden administration would do in terms of rules and regulations around that, was obviously a sector that was underperforming, as it were. In our view, it's one of the most attractive defensive sectors in Europe. So we would certainly be overweight healthcare relative to the consumer staples, the food producers, the beverages. It does look cheap compared to those parts of the market. It does actually have even relatively high dividend yields, surprisingly. It's not a sector known for that, but it does now because of the valuation story. So that's something that we'd certainly keep with over time. Tech's a bit more nuanced. Of course, in Europe, it's just not such a big sector. With software, semis to a degree, we just don't really have the exposure that obviously we have in the US. We're more neutral on that particular part of the market. Other areas we quite like, autos, for example, within the cyclical recovery. And I think that's an area which, is doing pretty well, mainly just because of corporate profits, and the Q3 results season was actually very, very strong for that sector. So that's maybe if we wanted to be more pro-cyclical, look at parts of the market like autos, and within the defensives, for us, it would certainly be pharma over the consumer staple part.
Nick, it now appears as if we're going to have a call between Boris Johnson and Ursula von der Leyen. That call is likely to take place on Saturday. We don't know if it's going to be a make-up call or a break-up call. Nevertheless, if it is a deal call and we get a deal, short term, do you buy UK assets? What do you think?
Well, look, I think the UK, we've highlighted the UK equity market relative to Europe is trading pretty much at 20-year lows in terms of valuations. So it is incredibly extreme. And it's wrong to think it's just, UK's full of cheap banks and cheap energy stocks. It's not. It's about 2/3 of the sectors in Europe are trading at larger discounts than they normally do to their European peers. So I think there's a high degree of Brexit uncertainty or Brexit discount, whatever you want to phrase it, priced into UK equities. So I would argue, if we do get a breakthrough in any form of trade deal, even a relatively skinny one that just revolves around goods, when remember, of course, services are a much bigger part of the UK economy. But I think any form of deal or positive news flow on deal would be good news for UK assets. The only proviso is if you get a strong rally in sterling. Remember, about 3/4 of the profits for UK companies come from overseas. So the currency, if we see a big move in sterling, will probably cap the FTSE 100 move, but certainly UK assets as a whole should do pretty well, particularly the domestics rather than the internationals.
Nice to see you, Nick. Thanks for joining us. Nick Nelson of UBS. Coming up, we're going to look at the strength of the US labour markets. Constance Hunter of KPMG is going to be joining us shortly, but we continue to watch the counts, Alex.
Yeah, let's get to that. So the latest numbers out of Maricopa County in Arizona, that's where Phoenix is. Biden now leads Trump by over 60,000 votes. You're looking at 50.9 to 47.7. That's according to CNN. Like I was mentioning, 60% of Arizonians live in Maricopa County. Arizona has 11 electoral votes. We'll be keeping you updated on all the scores. This is Bloomberg.
This is Bloomberg Best, your weekly review of the most important business news, analysis, and interviews from Bloomberg Television around the world.
Ken Burns, welcome to Bloomberg Big Decisions.
We have always been a mixture of things. We are always stronger for that mixture.
Growth is a way to stay competitive, delight more and more consumers.
Welcome to the Best of Bloomberg Technology. I'm Emily Chang.
They've moved the needle by acknowledging that they have to monitor the content.
What is one word of advice you'll take with you?
Learn how to listen. And that is certainly something that has served me well.
Ankiti, where do you go from here?
It's a huge market. It's a huge opportunity. I want to go 100x from here.
Our philosophy is to partner where we can and stand apart when we should.
Welcome to That's Debatable, an interactive series on today's most pressing issues. The resolution this time, is a U.S.-China space race good for humanity? We'll hear from both sides.
The competition, if you look at the past, led to innovation.
A whole new arms race could start. And we'll get your perspective too, with help from the artificial intelligence of IBM Watson. I'm John Donvan. Join us for That's Debatable, presented by Bloomberg and Intelligence Squared, Friday on Bloomberg Television.
The U.S. labor market strengthened in October, defying some expectations for more subdued gains driven by the pandemic and lack of stimulus. The unemployment rate fell to 6.9%. Joining us now for more, Constance Hunter, KPMG chief economist. Constance, I've never been part of a Jobs Friday where this felt like such an afterthought when there is so much more going on. What was your biggest takeaway from today?
Well, a few things. Let's remember that during the reference week, we were running at about 60,000 cases per day, and now we have an elevated case count. We're close to 120,000 a day, so that's double. So when I look at this jobs report, my first thought is, wow, this is some generally pretty good news in the private sector, not good news in the government sector. But when I juxtapose it against what's happening with the virus, it gives me a lot of pause that these are trends that we can trust going forward, because the virus is really driving the bus on the economy.
In terms of the breakdown of the numbers, permanent job layoffs look like they are fairly steady at the moment. We have certainly seen some evidence within the data that the economic trajectory is leveling off. Is that another takeaway from this set of figures?
Yeah, sure. But again, the virus is really driving the bus. So the increase in virus cases really has me somewhat concerned about the future outlook. So one area where we've seen a good amount of rebound is in leisure and hospitality. And my concern is, does that get to continue if we have cases doubling from the time that this survey was taken? So I would say that there's a lot in this survey that suggests we have some fissures in the system. The other is, again, what's happening with state and local government jobs. The concern was always that if we didn't get a fiscal package, we would start to see massive layoffs at the state and local level. That accelerated in October. I see no reason that wouldn't continue to accelerate in November and December without some kind of fiscal assistance.
So, Constance, there is a narrative, though, that on the headline, it's still pretty good. So does that actually But does that actually remove sort of the impetus, or at least the let's light a fire under everyone to get a stimulus done conversation?
Yeah, I mean, look, obviously this ties into the election outcome and the makeup of the Senate, which we're not even going to know in December because we need to have those Georgia runoffs. So the odds of a skinny bill sort of seem to be fading. I would say that a Joe Biden presidency could mean something a little different than if it was another Democratic win, simply because he spent so long in the Senate. He has a relationship with Mitch McConnell. And so it's certainly possible that if there were a combination of divided Senate versus White House makeup, that this is one that could lend itself to some sort of possible conversations about a skinny bill. But I think without a skinny bill, you're going to continue to see layoffs at the state and local level. Now, if we look at the broader economy, go ahead.
Sorry, Constance, what's the quantum difference here in terms of the economic impact? If I say 500 billion or I say 1.5 trillion, what is the multiplier between those two numbers? Is 1.5 a significantly bigger impact than 50 billion, not just 3 times? I'm just kind of wondering how that works in terms of the order of magnitude of the stimulus that we're going to get.
Yeah, so I would say there's a couple areas where stimulus is needed. So the first would be continuing unemployment step up and continued assistance for a pandemic, and then an extension of the length of time people are receiving benefits, because that's about to run out. So that's got a very high multiplier on that part of the stimulus. And there we're looking at maybe $300 to $400 billion that could carry us until, let's say, the end of the second quarter of next year, if we were to top all that up appropriately. Then you have to think about what is the assistance to state and local governments, and what is the assistance to the healthcare infrastructure that's really going to help us get a handle on the virus. And here, while we're not necessarily talking about a large amount of money, maybe $250 billion, if we don't get a handle on the virus, the negative multiplier is very, very significant.
So let's say that we don't get something that the market's expecting or what you think we need. What does the Fed actually do? They say that they're examining everything. They're looking for the options.
Yeah, this is a great question, and here I don't think they would need to do yield curve control because I think there would be downward pressure on rates. So, and Jay Powell was very clear yesterday in the Q&A that they can only give loans to solvent companies. So if we have an increase in virus cases causing more pain in small businesses and leisure and hospitality, the Fed's really limited as to what they can do to assist those companies because they are on the verge of becoming possibly insolvent. So I think here in response to the pandemic without fiscal assistance, and I think that's why Jay Powell has sort of crossed that line and spoken every single time he's talked about the importance of fiscal assistance, because really in the face of the pandemic induced downturn, the Fed is kind of limited in what they can do. They can maintain liquidity in capital markets, and that certainly helps large companies. But we see from the Census Pulse survey that small companies are the ones that are hurting.
Constance, we've got to go. Lovely to get your views. Constance Hunter of KPMG, thank you very much indeed. European closes next. This is Bloomberg. +4 here in London. We are wrapping up the week, and wow, what a week it has been. Let's talk about the session first of all for the Stock 600. Negative on the day, but remember, negative on the day, so positive on the week. But today, a little bit of a pause, a little bit of a recap, a review of kind of where we are after the frenetic price action that we have seen. Because on the week, the Stock 600 has been a huge outperformer, particularly when you price US markets in euros, not dollars. If you price it in dollars, if you don't put the currency overlay on it, similar performances. But when you took a look at what has happened this week in euro terms on either side of the Atlantic, and you can do it the other way around in dollars if you want, what you're seeing is a massive outperformance of the Stock 600 versus the SPX over the last 5 days during this tumultuous week we've had for the election period. We'll move on to that graphic in just a moment because, oh, there you go. Here's the week, as you can see. That's not the currency overlay, but nevertheless, what you've seen is a big outperformance of those two markets. I was hoping that it would show that outperformance. So what you've seen is kind of a 5%, 6% performance over in the States, 4-5%. Here in Europe, it's been 7-8%, depending on which market you've been looking at. On the session today, the FTSE 100, absolutely flat, but we have seen a pop in the pound. I'll show you that in just a moment. The DAX and the CAC 40 are down by 0.5%, let's call it. But again, huge outperformance this week from both of those two markets. Let me just quickly show you what has happened with the pound, because we have seen a pop in the pound as we've got news this afternoon that we are going to see a call between Boris Johnson and Ursula von der Leyen of the European Commission. That is going to take place tomorrow. Is it a make-up call? Is it a break-up call? We will find out. But nevertheless, I think we're going to recap the progress that is ultimately being made. The British pound trading a little bit higher, 0.2% to the good this afternoon. In terms of the sector story throughout the week, let me just give you the narrative there. Pretty much everything is in positive territory, as you would expect. This is the GRR over the last 5 days. But as you can see, the insurance sector is the outperformer. I'll come on to that in just a moment. But everything is higher. Financial services have had a good week. Chemicals, construction, technology. Basically, the rotation towards Europe has been relatively strong, and it's been the more cyclical stocks where we have seen that benefit coming through. Now, I was hoping I was going to show you RSA, but we've got Royal and Sun there. But nevertheless, don't worry about that too much. RSA trading up very strongly at the moment. Natixis, though, has had a very negative day today, this on the back of its numbers, and also the H2O divorce. Richemont, though, very positive session. This is the owner of Cartier, and like other luxury stocks at the moment, it is certainly benefiting from the China trade. Alex.
Yeah, speaking of, let's get some more insight on how European luxury stocks are doing. Joining us on the phone from London is Bloomberg opinion columnist Andrea Felstead, who covers luxury retail. Okay, so walk me through the importance of China for luxury retail, and can it wind up holding up?
China has been very important in the recent months because it has recovered strongly. Whereas Europe and the US have been weaker, although the US is also recovering. That's the question, will it hold up? Bain is forecasting that Chinese consumers could account for about half of the whole of the market by 2025. So, yes, it's very important for all those luxury groups.
In terms of the deal that's been done with Alibaba, walk me through the significance of that in terms of delivering luxury to Chinese consumers.
Well, it's really, increasing that investment, increasing that focus on China. But I think the other thing that is very interesting is could Richemont's Yoox Net-a-Porter and Farfetch cooperate more in the future, or even sort of come together in the future in some way, not just in China, but more broadly around the world.
Can luxury brands sort of do what they do in China elsewhere, whether through JVs or partnerships, or is there some kind of consolidation we can be looking at?
Well, what has happened during the pandemic is that the gap between the big brands like Louis Vuitton, Gucci, Rolex has really extended. That's become much more significant all around the world, and they've really sort of pulled ahead of some of the other brands. So we're expecting when the sort of market settles a bit, there could be a bit of a shake-up, and perhaps some of those brands who haven't prospered so well are looking for deals or homes among those luxury conglomerates that have really prospered.
What is the lockdown here in Europe in terms of the effect having on this sector? Is it going to mean that there is a shortage of supply in terms of being able to manufacture? We are now potentially looking at not just 1 month, but potentially longer towards Christmas. How important is this going to be?
This is going to be very important for all retailers, not just luxury. This is a key period for them, gifting, Christmas and holidays are a big time. But it's interesting because Johan Rupert was saying this morning that there are now other occasions, including Singles Day, Golden Week, that are big occasions for luxury spending. But notwithstanding that, this will be very damaging to all retailers, including luxury ones.
Oh, how do luxury retailers manage their inventory versus more traditional retailers, and what does that mean for them when they're trying to sell their stuff?
One thing that we have seen, particularly this year, is pushing the seasons out more so that they coincide with the actual seasons. In the past we've had this crazy situation where in January, swimwear comes in, and in the height of summer you get coats, and because they've had to hold on to their stock longer, there's been more of a harmonisation of those seasons. We could see that continue into the future. I mean, everybody has sort of hibernated stock. Any stock that's sort of more basic and not focused on fashion trends has been put away. Anything that haven't sold has been put away for the next year, and that's the case, across the board in retail.
Andrea, thank you very much indeed. Bloomberg Opinions, Andrea Felsted. We are wrapping up the session here in Europe, largely negative today. We're through the auction process, but wow, what a week it has been. Let me just recap the numbers on the week for you in terms of the performance that we've seen here in Europe. The CAC 40 up by 8%, the DAX up by 8%, the FTSE 100 up by 6%, the Euro stocks up by 8.31%. Today we have paused a little bit, but nevertheless, what a performance for European stocks, significantly outperforming their US peers. We'll carry on the coverage at the top of the hour. Clearly a focus on what is happening stateside with the ongoing counts. We'll continue to break down what we are learning on Bloomberg Radio, on DAB Digital Radio. John Ferrer and I will be walking you through the hour with The Cable Show. This is Bloomberg.
Let's check in on the Bloomberg First Word News now. I'm Ritika Gupta. Joe Biden is on the verge of winning the White House. He has now overtaken President Trump in Pennsylvania and has a slight lead in Georgia. Pennsylvania has 20 electoral votes, so if Biden were to win there, he would have more than the 270 electoral college votes needed to be elected. Meanwhile, President Trump shows no sign of dropping his legal challenges. Last night, he said the election was being stolen, but he's offered no evidence of voting fraud. The U.S. labor market got stronger in October. Employers added 638,000 jobs, beating estimates, and the unemployment rate fell 1 full percentage point to 6.9%. That was double the prior month's decline. Still, the number of long-term jobless Americans surged and now makes up a third of those out of work. And Russia is seeing its worst coronavirus numbers since the pandemic began. The country reported more than 20,000 new infections today. Authorities insist there is no need to impose a second lockdown or shut down of businesses nationwide. They claim the healthcare system is capable of handling a surge in infections, but Russian media have reported on overwhelmed hospitals, drug shortages, and inundated medical workers. Global News 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg Guy.
Ritika, thank you very much indeed. Let's get a business take now on the election. Joining us now, Joe Kaiser, Siemens President and CEO. Joe, we'll come on and talk about the company in more detail and the financial numbers in just a moment. I just have to get your take first up. The financial markets are pricing in divided governments in the United States. There was, even a few days ago, an expectation that we would see a green revolution for that economy. What does the new lie of the land look like to you, and what do you think it means to Siemens?
Well, I think, first of all, we need to go wait till the results are final and the things, the dust has been settling. I think we may take some time given the very narrow results in many states. I think, of course, what we like to hear is that, the United States would come back to the Paris Agreement if Vice President Biden would win. But look, I mean, on the other hand, we should not overestimate the impact of what's currently happening because we have customers. Last year, they gave us $26 billion of business, and we continue to be close to them with 50,000 people working for us in the U.S. So I think we should wait and see and not get overly excited and anxious about what the new government look like. We've had our good moments with the current government, and I'm sure we will have good moments with a potentially new government. So I think we should first wait and see what the results are, and then look what that potentially could mean for our company in the United States.
We had the Volkswagen CEO on Bloomberg yesterday, and he told us that a Biden presidency or Democratic policies in the U.S. are more, quote, aligned with their strategy. Do you feel the same way?
Well, as I said, we had our good moments with the current government, and I'm sure we'll have good moments with the other one. At the end of the day, we are selling to customers and sectors, and not so much to governments. So that's why I believe it's important to see what the sectors do and how those sectors can benefit from government policies. As I said, obviously, we all agree, or most of us agree, that the world needs help in terms of CO2 reduction. So emission would be a very relevant topic globally. The other topic would be that, free and open trade on a multilateral environment certainly has helped to bring millions of people out of poverty. And if we can continue that with all parties on the table, the United States, China, and Europe, that certainly would be helpful to business. The other thing is that we are on the verge to the fourth industrial revolution, or what people call it, Industry 4.0, or Internet of Things. So we need to be able to connect all things. And connecting all things, again, means global trade, data security, but also free flow of data. So there's a lot of tasks we have together, companies and governments, to prepare the world for the next decade, if not for the next century. And that means Internet of Things, and that means a sustainable world where, you know, we bring people out of poverty. So we are in for that. Our product spectrum in Siemens is almost perfect to supporting that. And I'm sure that any government in the United States, we can work well together as we have done in the past for so many years.
Okay, final question for me on the election. Joe, do you think that the United States will be less green if we don't have, or we haven't had, the blue wave?
Well, again, I mean, there's the government and there are certain policies there, but there is also, you know, international companies, leading companies in the United States, which are number one in their sectors, which show the world how things are working. And no matter which companies I have been talking to, our customers, and even competitors in the United States, they all say sustainability, economically feasible sustainability is the play of the future, and they all commit to that. Even if you look at the oil and gas sector, you know, I've been talking to companies, they all say we got to go down on our emissions. Please, Siemens, help us how we can make the oil fields, you know, less greener, so to speak, with less emission. How can we do something together on hydrogen? How can we create synthetic fuels? So they're all up to sustainability in an economically feasible and a responsible way. And that's important because sometimes, you know, activists tend to push us into very quick changes. But the fact of the matter is that companies and the world is a world which we have. So we need to be responsible with shareholder interest. We need to be responsible with customer interest. Jobs are relevant. And this is our task and our responsibility as global company leaders, that we have a responsible track and trajectory from today's world to a better future world, which also has jobs and bringing people out of poverty. That's responsibility. And so I'm sure that no matter what government we have, this will be the trend. And I believe this is irreversible. You know, the world is going green. The only one way which is out today is how responsibly and how quickly we'll be able to do that. And that's, I think, our task, and we are fully buying into that.
So let's talk about Siemens business a little bit deeper. You agreed to a sale of Flender. That was one of the last steps in asset sales. So I'm wondering, as you went through this transformation, at what point, or do you want to be revisiting things like acquisitions for lines like software or automation, for example?
Well, I think acquisitions are not on the table right now. We have been working hard in the management team that we set up the new Siemens for the next decade. We do have three very strong companies in their sector: Siemens Energy, Siemens Healthineers, and then a new Siemens AG, which is basically the industrial core of automation and software and smart infrastructure, including mobility, which obviously is a smart infrastructure component. So now we've been shaping, you know, the product spectrum for the future. With the spin-off of energy, it was one of the most relevant topics to de-risk. Also the new Siemens AG, the industrial company. With Flender now, we have been making major progress also on a clear-cut sale. So the new companies, now all three of them, you know, they need to go look how they actively shape the transformation. Healthineers has done that already with a big acquisition, a 16 billion acquisition of Varian, where the number one in oncology comes together with the number one in imaging, which will change the whole world in terms of healthcare treatment and cancer treatment. So they are busy in doing that one and get the shareholder value out of that transaction. Siemens Energy is very, very busy in doing the transformation from conventional power generation to renewable energy, which will be quite a restructuring case to shape the future. And then a new Siemens AG, the industrial, it's got everything it takes, you know, now to speed up growth and become a technology growth company in the industrial space.
All right, thanks so much. It was great to talk to you. Maybe talk to you after February once you retire, do some other stuff. Joe Kaiser, Siemens President and CEO, thank you very much. And as we head to break, you are looking at a live shot of Allegheny County warehouse in Pennsylvania. Ballots are still being counted. Joe Biden has now taken a lead in the state. It is a slim lead of 6,800 votes. Pennsylvania has 20 electoral votes. This means that if Biden wins Pennsylvania, he will have more than 270 electoral college votes needed to claim the White House. This is Bloomberg.
Women leaders were actually better at controlling the deaths from COVID-19. Do you think out of this pandemic, we'll see more countries be willing to elect female leaders?
When we look at women leaders, we tend to project on them baggage that they shouldn't bear.
Women are given an opportunity when no one else wants to do the job.
Women had a very clear objective. They wanted to save lives.
The women leaders, if you look at their careers, have also built up a level of trust.
In fact, women have to be better at communication in order to be elected as leaders, whereas this doesn't hold true for men.
We need to get those sexist stereotypes out of our head and give women a fair run for leadership.
Trying to change the stereotypes about women is not only the business of women, but men have to be part of it.
There are $3 billion being prepared. So the lending program has increased. So that's the very important feature we did not expect.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
Live from New York, I'm Alex Steele with Guy Johnson in London. This is the European Close on Bloomberg Markets. All right, here's where we stand in the race for the White House. You have Biden at 264 electoral votes, Trump 214. Joining us now, Bloomberg Balance of Power anchor David Weston. David, what do we know? What are you looking for over the next couple hours?
We know we don't have a final answer. No credible sources projected the overall winner of the election. And there are still a handful of really important states. Pennsylvania is the one we're all focused on right now. And as you've been reporting, it has swung over in the vote count now in favor of the former Vice President Joe Biden. At the same time, interestingly, the Associated Press that we've been relying on quite a bit for projections came out with a piece actually about an hour ago saying we're not going to call Pennsylvania right away because there are some problems with some duplicate votes out in Pittsburgh. There's a lot of votes left outstanding, about over 100,000. And also there's some overseas military people that we haven't heard from. So they've said basically get patient about pain. So we thought that Pennsylvania might get called pretty soon. Doesn't look like it right now.
David, at some point, somebody and one of those credible sources is going to call this election. Yeah. If they call it for the former Vice President, Joe Biden, do you think that the president will be prepared to concede? Do we see any evidence of an exit plan?
No evidence whatsoever of an exit plan, and far be it from me to try to get inside of Donald J. Trump's head. I don't know, but what I would speculate at least is that he will wait to the very last decision by the last court or the last recount. He's not going to give up easy at all. At the same time, we're starting to get some senior Republicans who are sending noises about, listen, let's pay attention, and if we have to get out, we have to get out. Roy Blunt, senior senator, Republican senator from Missouri, very well respected, earlier today said one of the jobs of a leader is to think about when to leave.
Yeah, that was really striking, I thought. I'm starting to hear things like a McBiden, that it's going to be about Mitch McConnell and Joe Biden and how they interact, how they're able to get together and get things done. Give me some perspective.
Well, I think the one thing we know for sure in this election, Alex, is that the blue wave didn't happen. that the country basically all got together. They may disagree about a lot of things, but they basically said, we want to govern from the center. The question is, how can you do that? As you suggest, Joe Biden has served with Mitch McConnell. He knows him very well. I'm not saying that they're friends, but they know one another. And the question, I think, for President Biden, if we get to that stage, the question is going to be, can he govern from the middle? Can he reach across the aisle and get something done? By the way, his own caucus is going to be a little bit chastised because a lot of the more progressive members have been rejected, at least in their policies.
Let's just talk a little bit about the Senate. Is it possible that the Senate will be seated before we know ultimately who will be in that leadership position? Will it be McConnell?
Not just possible, it is likely at this point. As you know, it looks like we're headed to two, not one, but two runoff elections in the state of Georgia for Senate. So, and if that happens in early January. We don't get an answer until late January. So it's quite possible when the new Senate convenes, which is on the second day of the new year, we'll have some open seats and we won't really know who's in the majority.
David, we really appreciate it. We know it's been a terribly long week for you and maybe a long weekend. Bloomberg's David Weston, thank you very much. That wraps it up for me and Guy here on this Friday. What a week. It's almost over. Coming up on the program, Ian Bremmer of the Eurasia Group will be joining David Weston on Balance of Power on Bloomberg Television and Radio. And I just want to get a quick check-in here on the markets. It's been a really interesting week in the markets as well. You have the S&P pretty much flat, NASDAQ a touch lighter here, but it was a story of a reversal. You got tech really outperforming. The cyclicals taking a little bit of a hit as a blue wave and a contested election to some extent got priced out of the market. The big action, though, was what we saw in bond yields. Super whippy action on Tuesday and continuing that. We're now at 82 basis points. The selling continues. You're up by about 5-6 basis points there on the 10-year. Oil continues to get hit. That's a virus demand story. Despite the election, there is still a virus out there wreaking havoc on the economy, and you can see that reflected in the oil price. We made it to Friday. This is Bloomberg.
The big concern is climate change. We can see the global warming accelerating at the moment, and the goals that we must hit are so ambitious. It's 1.5 degrees by 2050, being climate neutral in terms of emissions by 2050. That's a huge challenge. We have to reduce emissions by 50%, 2030, 2040 again. It's very, very ambitious, and mobility plays such a crucial role in there. One thing is to do it in developed countries. I think we're going to get there by 2030, but then the rest of the world, and that's just as important. If you look at developing countries, emerging countries, that's where probably the biggest challenge we are going to face, to also deploy EVs there and make mobility greener in those countries. I know it's possible to move mobility forward fast enough to be able to do its part in this fundamental threat that we're facing.
explore the trends, investments, and competition of the European ETF industry. Join us on Bloomberg ETF IQ Europe.
From Bloomberg World Headquarters in New York to our TV and radio audiences worldwide, I'm David Weston. Welcome to Balance of Power, where the world of politics meets the world of business. We're now in day 3 of the 2020 election as votes continue to be counted in a handful of states, and no clear projection of the overall race yet made by the Associated Press or by other major networks. But with former Vice President Biden gaining in Georgia and in the critical state of Pennsylvania, even as doubts remain about Arizona and Nevada. Joining us now is Rick Davis. He's partner in Stone Court Capital and manager of John McCain's presidential campaign, and I'm delighted to say he's also our political contributor. So, Rick, as we take a look at this, it emphasizes the need, even as we get to the very end, everybody's eager to get an answer. We have to be very, very careful. The Associated Press is out with a report about why they are not making a projection yet in Pennsylvania, even though it looks good for Vice President Biden, because there's some issues with some ballots in Pittsburgh. There's over 100,000 votes yet to be counted.
Yeah, I mean, we're down to the 5-yard line. We see the goalposts in front of us, but we have to take some time. We said this on Tuesday night that we knew there'd be an effort to count votes that's going to extend to the balance of the week. And now's not the time to get too far ahead of ourselves. Look, this is how the electoral process is supposed to work. And these votes are being counted that were cast, in places like Arizona. They're later stage votes where people dropped off ballots on Election Day. They were set aside. They're the last ones to count. They have a slightly different look to them than some of the other votes that were cast in advance of the election. So we see Joe Biden's lead actually diminishing a little bit in Arizona. But on the reverse in Pennsylvania, they set aside all the early votes and counted the Election Day votes first, which looked good for Donald Trump. And now they're counting those ballots that came in later through the electoral vote or for the early vote process, and it looks much better for Joe Biden. Until the votes are done, this election is incredibly close, just like in 2016. We just have to be patient to decide who the end is. I would say all indications in each of these open states is that Joe Biden has the votes that in the pipeline that it looks like he could get to 270. So it's still advantage Biden, but until those votes are counted and finished, we still have a race on.
Okay, we're also joined by our other partner in crime, if I can call her that, Jeannie Zaino. She's our other political contributor. She's a professor of political science at Iona College. So, Jeannie, where do you think the race stands right now? It looks like it's going in Vice President Biden's direction, but it's not there yet.
David, I think that I've been so surprised by what has happened in Georgia, for instance, that we are at a point now where we may see Georgia, and again, we have to say may see Georgia turn blue. But I think where it stands right now is that we are probably going to see something similar in terms of a count that we saw in 2016, but the other way, where Joe Biden perhaps gets around the same number of electoral votes that Donald Trump got in 2016. So I think because these states are so narrow, we're going to see something along those lines when this thing is all said and done.
Yeah, Rick, one of the things we didn't have, as I recall, at least way back in 2016, is a slew of lawsuits. The President of the United States has not been shy, including last night when he had what I thought was sort of extraordinary, I wouldn't call it a news conference because it didn't take any questions, but sort of a statement, really saying there's a lot of fraud going on, they're stealing the election, and yet I still haven't heard any specifics.
Well, it's very hard to document specifics. This is such a localized situation. I mean, most of the suits that are being brought are specific to a polling place in a certain precinct or a county count room and getting access to watch the vote count. And so I think it's important to note that none of these lawsuits are actually pointing to fraud in any way. It's all transparency. And by and large, they're all being handled at the local level with state and district judges who are encouraging that transparency. Nobody is trying to hide the vote. And so I think all this will come and go. It's a sort of footnote to this process. I don't blame the president for using every tactic he can to ensure that the vote is fair and that it is properly reported. So those are the remedies that everybody has in the electoral process and should always, if you feel like you need more transparency, you should ask for it. It's what we do in America. That being said, to associate that with fraud, I think you have a higher standard and you ought to have to show where that fraud is occurring. Right now, we don't see it.
Well, as you say, it's not, you can't hold it against, you certainly can't hold it against the President of the United States to say, I want to make sure everything's on the legit, I want to make sure all the votes get counted. At the same time, you got to think about whether there has to be an exit strategy here. I want to quote actually from Roy Blunt, the senior Republican senator from Missouri, who was out and spoke to reporters today. And it was interesting, I thought, what he said. He said, if they have a case to make, referring to the President Trump's campaign, there's a process where they make that. I don't think it's unreasonable to allow the president to wait for that number to be apparent. I also don't think it's unreasonable for Vice President Biden to accept the unofficial result and do whatever he thinks he should do. You know, part of the obligation of leadership is you should always have in your mind, how do I leave? Is that a message that's starting to be sent by some senior Republicans to the White House?
Yes, and I think not only to the White House, but to other Republicans. Roy Blunt, in addition to being the senior senator from Missouri, is also in leadership in the United States Senate. He is the chairman of the Policy Committee, which is a very powerful spot in Republican leadership in the United States Senate. And so when he speaks, he's speaking not just as the senator from Missouri, but also as one of the key people around Mitch McConnell. So a lot of people are going to be reading into this. I would commend everybody, a little commercial, to go to the YouTube today sometime and watch the John McCain concession speech.
Yeah.
In 2008, we had a lot of tension around the first African-American becoming president. And John McCain's concession speech is being hailed around the world when it occurred as the proper way for democracy to transfer power. And so if you want to see how it was done not too long ago, I'd say that speech is something worth looking up while we have this debate today and into the weekend.
I'm so glad you mentioned that because I'd actually forgotten it. I was in the control room at ABC News when that happened in the middle of the night back in 2008. And outside, as I recall, up on that platform. And I remember thinking it was so gracious, so statesmanlike, really good for the Republic. I agree. We should all go back and watch that one more time. Jeannie, I want to come over to you at the same time, even as we talk about the possibility of Republicans starting to send a message to President Trump. We have to think about what's going on with the Democrats, because whatever happens ultimately in this election, I think the one thing that seems to be pretty clear is that great blue wave didn't happen. That people who came forward with Medicare for all, with wealth tax, that there was not a lot of enthusiasm across the country for that. How do the Democrats get themselves back together and govern perhaps a little more toward the center?
Not only did the Great Blue Wave not happen, in fact, quite unexpectedly, the Democrats lost seats in the House. Of course, they retained the majority because they picked up so many seats in 2018. But they lost seats in the House and, of course, didn't make the gains that were expected in the Senate and look likely, and of course, we don't know yet, but look likely not to capture the majority there. And I think Democrats are going to have to be very, very careful going forward. We have the Georgia special election. We know that the party that has lost the White House, if indeed it does turn out that Joe Biden takes it, has a tougher time in these special elections. And going forward, they're going to have to think about what happened in 2020, that their policies, their progressive policies, didn't resonate in the way that they expected and wanted. And now we're looking at divided government in which you're going to have a Joe Biden, if he is in office, unable to fulfill the promises that he made, the very progressive promises that they wanted him to make, that he was flirting with at some points. That's going to be tougher if he's president. And they're going to have, by some estimations, a long time before they have any chance of picking up the Senate. If you look at the estimates on that, you're looking at several cycles before Democrats can potentially take the Senate again. And they have a potential, as we know, if again, in a big if, Joe Biden takes the White House, of losing seats rather in a midterm when their president is in the White House. So Democrats are going to have to try to do a better job of understanding where Democrats, independents, moderate are in these purple states and repeating what they did in 2018, not what they did in 2020.
It is so great to have the team back together. It's been a long week, but there's nobody I'd rather spend it with than Bloomberg contributors Jeannie Zaino and Rick Davis. And now it's time for a check on the markets and how they're reacting to all this with the election. Joining us now is Scarlett Fu.
We're seeing modest losses in the U.S. and Europe, really a blockbuster week in terms of the global equity rally, but it's losing some momentum as we head towards the weekend, even with the better than expected jobs report and perhaps more clarity on the vote count. Now, all that being said, the gains over the previous 4 days were good enough for the S&P and the NASDAQ to score their best week since April. And you can see the MSCI All Country World Index, this is global stocks, is about 1 to 2 points shy of its record high reached back in September. European stocks closing up 7% on the week. And tech was the undisputed winner here in the U.S., up 9% for the period, recovering from a big sell-off the previous week. It's been up and down, well, down and then up, really. In a less than perfect earnings from the 4 out of the big 5 big tech names sent stocks lower. We also had a lot of concern that perhaps they were overvalued in a blue wave scenario where cheaper, more economically sensitive companies would be in a better position. Let's look at some other asset classes as well, because the dollar is slumping for a 4th day here. That's been a consistent theme, off by almost 2%. The Fed made clear yesterday that it's ready to stand by with more stimulus as needed. It didn't get specific, but Jay Powell has stressed that there's plenty of tools left at the Fed's disposal. Gold moves inversely to the dollar, so you're seeing a pop there of 4%. The yield curve flattens when it comes to 2s, 30s, but this is after a steady steepening since February. And the VIX reached 41 last week. It is down almost 12 points this week, 1 month low. It's down today, even as indexes are pretty much underwater. David?
Thank you so much, Scarlett Fu. Coming up here, as the path to the presidency narrows for President Trump and widens for former Vice President Biden, the president is counting on the courts to turn things around for him. We talk with law professor Shara Torres-Spelisi of Stetson University. That's next on Balance of Power on Bloomberg Television and Radio.
A market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
This is Bloomberg Best, your weekly review of the most important business news, analysis, and interviews from Bloomberg Television around the world.
Ken Burns, welcome to Bloomberg Big Decisions.
We have always been a mixture of things. We are always stronger for that mixture.
Growth is a way to stay competitive, delight more and more consumers.
Welcome to the Best of Bloomberg Technology. I'm Emily Chang.
They've moved the needle by acknowledging that they have to monitor the content.
What is one word of advice you'll take with you?
Learn how to listen. And that is certainly something that has served me well.
Ankiti, where do you go from here?
It's a huge market. It's a huge opportunity. I want to go 100x from here.
Our philosophy is to partner where we can and stand apart when we should.
Going into the fourth quarter, we're going to have to see how healthcare systems grapple with the next wave of the pandemic. But I believe that healthcare systems have now learned a lot, learned how to manage the cases better. So overall, we're cautiously optimistic.
This is Balance of Power on Bloomberg Television and Radio. I'm David Weston. We're going to turn now to Mark Crumpton for Bloomberg First Word News.
David, thank you very much. As we have been reporting, Joe Biden is on the verge of winning the White House. He's now overtaken President Trump in Pennsylvania and has a slight lead in Georgia. Pennsylvania has 20 electoral votes, so if Mr. Biden were to win there, he would have more than the 270 electoral college votes needed to be elected. President Trump shows no signs of dropping his legal challenges. Last night, the president said the election was being stolen, but he's offered no evidence of voting fraud. House Speaker Nancy Pelosi is urging Republicans to come back to the negotiating table to try and reach agreement on a coronavirus stimulus package. Speaker Pelosi says she prefers an omnibus bill rather than a stopgap measure to complete government funding for the rest of the fiscal year 2021. During her news conference, Pelosi also expressed confidence that Joe Biden would win the presidential election. Officials will take another crack at reaching a Brexit trade agreement this weekend. UK Prime Minister Boris Johnson and European Commission President Ursula von der Leyen will speak by phone Saturday. After 14 straight days of negotiations, the two sides are blaming each other for the lack of progress. The discussions are stuck on three big issues: the so-called level playing field for business, access to British fishing waters, and how any potential deal is enforced. Luxury fashion boutiques and jewelry shops in the financial capital of Italy have been shut down. Milan is one of several regions ordered to undergo a partial lockdown aimed at stopping the spread of the coronavirus. The new restrictions aren't as severe as the country's near 10-week lockdown in the spring. Many European nations have been reluctant to reimpose those kind of shutdowns because of the massive economic damage that resulted. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Mark Crumpton. This is Bloomberg. David?
Thank you so much, Mark. President Trump continues to claim that voting irregularities are keeping him from the win that he says he deserves. And the campaign continues to file and threaten to file lawsuits all around the country. For a review of the legal situation, we welcome now Shara Torres-Spelisi, professor of law at Stetson University. She's also a fellow at the Brennan Center for Justice. So, Professor, thank you so much for being with us. Let me start with the most basic thing. Last night, we heard from the president once again saying there's been fraud. There's a lot of lawsuits that have filed or threatened to be filed. I'm not sure that any of those actually allege fraud, do they?
They do not. And one of the things that I think is so frustrating for those of us who are election lawyers is you can't stop a count of votes. Like this is just sort of a strange posture to frame it. And I mean, in some ways, I welcome it getting into the courts because then perjury rules apply. So you can't just lie about things to a judge.
Is there any supporting evidence that's been brought forward? I mean, often if you're going for an emergency order in a court, you'll support it with some affidavits or something, some sworn documents. I don't think I've seen any of those yet.
Yeah, I mean, there seems to be this effort to cause a lot of confusion and to cast the election under a cloud of doubt. But what we haven't seen is a concrete case of some problem with the election that would give a state to Trump instead of Biden.
Has the president or the president's campaign, I suppose I should say, have they made any progress in any of the lawsuits? I mean, have they actually slowed down any of the vote counting, stopped any of the vote counting?
They have not stopped the vote counting, which is good. There was a win in Pennsylvania where their observers got to get a little bit closer to the people who are counting the votes. But because of COVID, they still have to stay 6 feet away.
So besides lawsuits, and I want to come back to the Pennsylvania one in a moment, but besides lawsuits, there's also the possibility of recounts. And that's provided typically, as I understand it, you would know better than I, in state law. Under certain circumstances, you can ask for a recount and get it, particularly if you pay for it yourself. Wisconsin, I guess, is headed for a recount. Georgia's already said they're likely to have one. There's talk about one in Michigan. But when you have a recount, in your experience, how many votes typically switch?
Very few. That is partially because of the technology that we adopted as a country post-2000. So we don't have the hanging chads problem. And so when you run the same ballots through the same machines, you usually get the same vote count. Sometimes it moves, by 100 votes here or there. But I think the margins in most of these states are bigger than that.
Now, one lawsuit that has been up to the Supreme Court already, the Supreme Court didn't get involved, doesn't mean they won't at some point, is the one in Pennsylvania. And it has to do, as I understand it, with the decision to say we'll allow certain ballots to be counted that come in after Election Day, provided they were postmarked before. I think for 3 days was the ruling. Went up to the Supreme Court, as I say, they said we're not going to get involved right now, but it's still pending, as I understand it. That could change some votes, couldn't it?
Probably not. I mean, you never know when things get into courts, because you can have a judge who feels strongly one way or another, or a panel of judges, or even the Supreme Court. They've been known to issue some disappointing, from a Democratic point of view, and small d Democratic point of view. But in general, I think that this Supreme Court really does not want to be in the role that the Rehnquist court was in Bush versus Gore, because it hurt the credibility of the court.
Yeah, I'm not sure that those justices came away feeling covered in glory after Bush versus Gore. I'm projecting here, but I'm not sure that they did particularly. At the same time, this is different, isn't it, from Bush versus Gore, in that in Bush versus Gore, as I recall, it was just a handful of very specific counties down in South Florida, and it was clear that whichever way that went would determine the presidency. We're a ways away from deciding that those votes that may have come in after the election day will actually determine the result. In Pennsylvania, much less overall in the country.
Exactly. There are a lot of different reasons why a Bush versus Gore situation is not comparable. In Florida in 2000, it was possible for Gore to ask for a partial recount. Florida changed its law after 2000. So, and I think other courts learned from Bush versus Gore that you don't actually have to take every election challenge that arrives at your front door. There is something called the political questions doctrine, which allows the federal courts in particular to refuse to hear certain disputes about elections because it is not something that has a judicially manageable standard.
Yeah, and to editorialize, particularly when the Constitution itself has a procedure for resolving that, it says it goes to the Congress. It doesn't go to the courts. At least that's my editorializing there just a little bit. Okay, thank you so much to Shara Torres-Spelisi. She's a law professor at Stetson University. And an update now on the House. The Associated Press says New Jersey Congressman Jeff Van Drew has won re-election to the House. Van Drew made national headlines when he voted against President Trump's impeachment and switched to the Republican Party. He defeated Amy Kennedy, the wife of former Congressman Patrick Kennedy. Still ahead, we'll talk to Ian Bremmer, president of the Eurasia Group, to get his take on what a Biden presidency might mean for foreign policy. This is Balance of Power on Bloomberg Television and Radio.
Give you a sense of the real-time action. The 10-year yield tumbling now 11 basis points, so continuing in this knee-jerk risk-off feel.
What is happening today in India is actually a determination to rebuild our economy.
India has an opportunity not only competing in the space of the factory of the world, but a very big opportunity to compete in being the office of the world.
This is Balance of Power on Bloomberg Television and Radio. I'm David West. We want to check back in on the markets now. Joining us is Scarlett Fu. So, Scarlett, I'm going to go out on a limb here, where it's all about elections all the time. Today, it might be selling off a little bit in equities, but overall, the equity markets have not been too unhappy with the election week.
Well, they are looking forward to a divided government, if you want to take score of what's been happening so far. Right now, the equity rally is on pause, but at least that's an improvement over what we saw at the start of trading, which was for big declines. S&P futures had fallen as much as 1.4%, but the better-than-expected jobs report for October changed the tone, and you can see that big leg up in the middle of the screen there. And, of course, progress on the vote count also removes some uncertainty. Let's take a look at how tech is doing, because they have the best relative performance this week versus the S&P 500 in 6 weeks. The blue bars here are when the broader market, the S&P 500, outperforms the NASDAQ 100, which, of course, gets 2/5 of its value from the 5 biggest tech names. The yellow bars are when tech reigns supreme, and you could see that over the past 2 years, that's happened a lot more than the broader market outperforming. Volatility has also come down dramatically, whether it's for the S&P 500 or for the NASDAQ 100, or even for U.S. Treasuries, despite the big moves that we saw in yields earlier this week. I guess there's less need for protection as we get past the election, even with the possibility of a contested result. Let's take a look at a couple of earnings winners, because clearly earnings season continues. 9 out of 10 companies have reported, but these are the ones that have just reported. News Corp, which is the publisher of Wall Street Journal, reported a sales and profit beat. CVS Health boosting its full year's outlook. T-Mobile trading at a record high as analysts cite a blowout quarter, and Cody looking past the second quarter drop and says that sales are falling less than anticipated. COVID-sensitive companies also in the spotlight here. Electronic Arts reporting a drop in guidance, and as a result, that is overtaking even its first dividend ever and a share buyback announcement. So just a couple of the names that we're keeping an eye on, but clearly Zillow, Roku, and Square beneficiaries of the pandemic and the lockdown.
Thank you so much, Scott, for a very busy week in the markets despite the election. Up next, the foreign policy implications of the election from Ian Bremmer, founder and president of the Eurasia Group. This is Balance of Power on Bloomberg Television and on radio.
Do you think you'll have to produce less beer in 2021?
No, I don't think so. I think consumers will find a way. But I mean, if there are restrictions, but consumers, of course, are smart and they'll learn to live with those restrictions, I think some occasions will migrate.
it's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
This is Balance of Power on Bloomberg Television and Radio. I'm David Weston. For Bloomberg First Word News, we go now to Mark Crumpton.
David, thank you. As we have been reporting, Democrat Joe Biden has taken the lead in Pennsylvania over President Trump, putting him on the cusp of victory in the presidential race. With 20 Electoral College votes, Pennsylvania is the biggest remaining prize on the map. The president cannot win re-election without it. The battle for the White House does continue. The Trump campaign has filed at least 6 lawsuits in battleground states since Election Day to challenge the ballot counts. Republican and Democratic activists have also filed suit, but only a few of the cases may have a real chance to affect the final outcome, and only if the races remain extremely close. Russia is seeing its worst coronavirus numbers since the pandemic began. The country reported more than 20,000 new infections today. Authorities insist there is no need to impose a second lockdown or shut down businesses nationwide. They claim the healthcare system is capable of handling a surge in infections. But Russian media have reported on overwhelmed hospitals, drug shortages, and inundated medical workers. Hong Kong leader Carrie Lam says whoever wins the U.S. presidential election should end what she called the, quote, totally unreasonable interference in the internal affairs of her city and China overall. Wrapping up a 4-day visit to Beijing, Lam accused the Trump administration of repeatedly interfering. She pointed to U.S. sanctions on officials, including herself, and the suspension of special trading conditions previously granted to Hong Kong. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and activists, analysts in over 120 countries. I'm Mark Crumpton. This is Bloomberg.
Thank you so much, Mark. Presidential elections generally don't get decided on foreign policy issues, but presidents may make a bigger difference in foreign policy than in any other area. As we anticipate a possible Biden presidency, we need to consider how it might change the direction of U.S. foreign policy. So we welcome now a true expert in the area, Ian Bremmer. He is founder and president of the Eurasia Group and president of G0 Media. So, Ian, thanks so much for being with us. I don't want to be premature, but it certainly looks like it's more likely than not that Joe Biden is going to be our next president. If that's the case, how will his foreign policy differ from that of Donald J. Trump's?
Yeah, well, the way I would put it is that Biden's domestic policy orientation is radically different from Trump's, but he's going to be so much more constrained, especially given the nature of the Senate, where his foreign policy, there's much fewer constraints on the president and on Biden, but he's actually more aligned with Trump in terms of policy. I mean, David, there are the equivalent of executive orders that Biden will be able to put into place in foreign policy for some changes in trajectory. So, for example, you know that we have just withdrawn formally from the Paris Climate Accord, the only country to do that in the world. Every other country in the world disagrees with us on it. It's quite unusual to get everyone aligned on something. The U.S. has managed to pull it off. But 77 days after Trump has pulled the U.S. out, Biden will put the country right back in. The Intermediate Nuclear Forces Agreement. We won't be leaving the World Health Organization, and we will sign up on COVAX and coordinating on vaccine distribution and manufacturing with the United Nations and the WHO and the Europeans, for example. So I do think that there will be some areas that are relatively easy layups in the first couple of months of a Biden administration that will make a lot of other leaders around the world feel a little bit more comfortable and feel like the U.S. policymaking is less volatile. But in broad sweeps of policymaking, like, for example, our orientation towards China or our willingness to be the global sheriff in the Middle East or in the Mediterranean, or our willingness to pursue and promote new global trade architecture, you're actually going to find that the orientation of a Biden administration and a Trump administration aren't all that different. My final point, remember that Obama, Biden, for 8 years, were being criticized as leading from behind, as being too unilateral, as not playing the kind of leadership role that a lot of allies had historically wanted to see from the United States. That wasn't just Trump. Trump perhaps accelerated it. He branded it in a much more direct way. But I think we need to understand that Biden's orientation is closer to Trump's than you'd think, and the constraints both on the United States and globally on the geopolitical system are a lot greater than they were during Obama-Biden first time around.
So, Ian, two quick specifics. Iran, does President Biden, if it happens, try to get us back into a deal with Iran? And the TPP, that Trans-Pacific Partnership, which President Trump moved away from, try to get back into it?
No. On TPP, no. Privately, Biden has discussed that with senior advisors. And even though Biden thinks it's a good idea, and by the way, David, so do I, there's no political capital, no support for it. I mean, among a Democratic Party where the progressives are already feeling like they're going to get nothing because they're not going to have cabinet appointments, you try to get Trans-Pacific Partnership done. Ain't happening. I was talking to the Japanese Prime Minister just a week ago, and this was one of the questions he had for me. And no, I mean, believe me, our allies would love it if the U.S. would come in. It's not going to happen. On the Iranian nuclear deal, the JCPOA, the Biden team would really like to get the Americans back into it. But the question is, would the Iranians accept that? Not clear to me for two reasons. One is that when we did that deal, we unfroze a lot of Iranian assets. Well, that offer is already, it's gone. That horse has left the stable. So we don't have as much leverage to get in. Also, the Iranian elections are coming up in 2021. I don't think the supreme leader is going to want to give a win to the moderates, to the Iranian president in the run-up. So I think it'll be some time and will require some fairly onerous negotiations before we might be able to get back into a new Iranian deal that will look a little different than the old one.
Ian, those of us in the United States are preoccupied, I think it's fair to say, with the election this week. There was another story that was not related to the election that was actually in its own way a very big one. That was the Ant Financial IPO that didn't happen. We have Jack Ma there who were trying to take out Ant Financial. They were on track for a very, very large IPO. And at, I think, the 11th hour, Beijing said, no, not going to happen. We're going to suspend that. I couldn't figure it out, but then I read about a speech that Jack Ma had given in late October, very critical of the way that Beijing was regulating their financial markets. What is going on there?
Yeah, Jack Ma has upset the chief Chinese regulators and those running economic policy in China, including Wang Qishan, personally. And this is not the first time he's been in the doghouse in China. You remember that he was forced to basically step down from his role in Alibaba and said that he was going to focus on educational issues. And that was also because his wings needed to be clipped from the Communist Party's perspective. So in part, it's because you have this very charismatic, very powerful Chinese entrepreneur in a state capitalist authoritarian system that has no interest in that. But it's also because Ant Financial is the most important fintech company in the world. It's massive in terms of its power and consolidation. And the Chinese government understands that is strategic to the future of China, especially in an environment where the Americans are going guns blazing against companies like Huawei. I mean, Ant Financial really matters for data. And if we have a technology Cold War, the Americans have the potential to fight that organization. So the Chinese want to make sure that that is doing what the government wants it to do. I think you're right, David. If it wasn't for the U.S. election this week, the decision to basically forestall what would have been the largest IPO in world history is the most important geopolitical issue of the week.
But does it also raise a fundamental issue for the Chinese government? Maybe it's always been there, but can it have it both ways? Can it have the sort of command and control that it appears to want over its economy and still grow as robustly as it wants, particularly in areas like tech?
Depends on how much you think labor matters. I mean, there's a big debate right now, David, about whether or not the future of artificial intelligence is going to be driven primarily by having the best entrepreneurs or by having vastly more data. China is the largest data market in the world by a large margin. I mean, first, because there's no privacy constraints. You think in the United States we don't have privacy. No. In China, you have no privacy. People don't use credit cards. They don't use wallets. Everything is through their smartphone. And it's consolidated through a couple of super apps, of which Ant Financial and Alibaba control some of the most important. And so, if the future of deep learning and AI and figuring out, your consumer behavior is all about just having that data and being able to sift through it, then the Chinese are going to win. Now, if it turns out the future of AI and technology innovation is mostly about having extraordinarily capable entrepreneurs and scientists, then the Americans can win. But it's not that the Chinese scientists and entrepreneurs are no good, but your point that in a command economy, that some of the best entrepreneurs that China could have and develop will leave China. Yeah, they will. And let's keep in mind that Biden, as president, one of the first things he's going to do will be to make the visa regime feel friendlier to the high-profile, high-talent workforce. Sorry, Canada. Sorry, France. Sorry, China. And that will be important to the United States. So if it's all about the scientists and the tech gurus, I feel pretty good about the United States.
Ian, is always such a treat to have you. I learn every time I talk with you. That's the truth. Thanks so much to Ian Bremmer. He's president of Eurasia Group and G0 Media. Coming up here, we'll digest the latest jobs report with Diane Swank, chief economist at Grant Thornton. This is Balance of Power on Bloomberg Television and Radio.
Welcome to That's Debatable, an interactive series on today's most pressing issues. The resolution this time, is a U.S.-China space race good for humanity? We'll hear from both sides.
The competition, if you look at the past, led to innovation.
A whole new arms race could start.
And we'll get your perspective too, with help from the artificial intelligence of IBM Watson. I'm John Donvan. Join us for That's Debatable, presented by Bloomberg and Intelligence Squared, Friday on Bloomberg Television.
This is Balance of Power on Bloomberg Television and Radio. I'm David Weston. In the midst of a continuing drama over the election, we heard from the Federal Reserve yesterday and got U.S. jobs numbers for October this morning, which were significantly stronger than expected. Here for a review of the state of the economy is Diane Swank. She's chief economist at Grant Thornton. So sooner or later, the new president, whoever it is, whether it's Donald Trump or Joe Biden, is going to have to deal with the economy. But first, let's talk about where the economy is, Diane. Was the Fed meeting was basically forgettable?
Well, it was forgettable in the sense I think they didn't want to make any news amidst all of the noise that we're seeing with regard to the election. That said, there were some tells from Chairman Powell. He's clearly concerned about how inhibited the recovery could be if we do not get a fiscal stimulus package. He didn't go into as many prescriptive issues as he has in the past, not wanting to step out of his lane at this particular meeting, but he has already stepped out of his lane in terms of calling for fiscal stimulus and what could be needed in terms of helping households and transfers to the states. And I think it's important also his tell that, the asset purchase program will stay at least at the $120 billion per month we see, which was a tell that the Fed's willing to go farther in that. And although that doesn't seem to be needed today, what the Fed is clearly concerned about, and he talked about at some length, was that the resurgence in COVID cases will determine the course of the economy, and it's much worse than it was during the summer and global in scope. That means its economic consequences could be much greater, and that's something the Fed is clearly looking at as they look at what they may need to do next at their meeting in December.
So what kind of a tell did we get out of those jobs numbers this morning? As I say, they were significantly better than expected, and particularly, I guess, when it comes to the private sector employment.
They were better than expected, about the same pace as we saw in the month of September, close to 900, a little over 900,000 on the private sector, with losses in the state and local and in the public sector. The federal government lost many of those census workers. 147,000 rolled off. The temporary hires due to the census, more will roll off in the month of November. What's important is the headwinds in the state and local sector. We lost more jobs and education in response to both the constraints on budgets and the inability to reopen both schools and universities. So the headwinds on those state and local jobs, that's something we're going to be watching very closely, because that's the primary reason we had a subpar recovery, was a lack of money by the state and local governments and cuts at those levels during the recovery in the wake of the 2008-2009 expansion. Other issues, other details of the report, great that we saw the job gains we did, but they still are diminished from what they were, of course, back in April and May. And the scarring, the sort of wounds that were created by COVID are beginning to fester. We saw the ranks of the long-term unemployed surge above 1 million. That's people who are unemployed more than 27 weeks. The unemployment rate for the permanently unemployed held at 6%. That's up dramatically from what we saw in April, when almost all the unemployment was more transitory and temporary in nature. Those are things that we worry about, because the longer people are unemployed for means the harder they have getting reemployed. And when they do get reemployed, they often get reemployed at a lower wage. They also suffer mental and health challenges as they have longer unemployment, which spills over to family structure and the well-being of children. This is all sort of exacerbating those wounds and deepening the scars of the crisis at a critical time when aid has lapsed. So as good as the numbers were, we're still in the hole by over 10 million jobs from the peak in February, which is 15% more than we lost during the height of the Great Recession in 2008 and 2009.
Well, exactly. And we've bounced back. We had several months of good jobs numbers, but at the same time, as you point out, we're still over 10 million people who are unemployed that were employed before the pandemic. So that raises the necessary question, what do we do to change that? And I guess I will come back to the election in this sense. As you look at a second term of President Trump, or what seems more likely at the moment, a new President Biden, how would their approaches to that question, how do we get those people back to work, how would it differ?
Well, one of the biggest issues, and that's not been discussed, is that policy around COVID is actually economic policy. It's a point that Jay Powell, Federal Reserve Chairman Jay Powell, made yesterday. We need a national policy that is not only better at ramping up testing and tracing and containing, mitigating the spread of the virus, but also treatments, therapeutics, and the distribution of the vaccine, and restoring the trust that a vaccine will be actually safe. And that's really important, because the uptake on the vaccine matters as much as the fact that it might not be as effective. Of course, it won't be as effective as a measles vaccine. And I think that's really important, because we've seen actually people saying their willingness to take a vaccine despite these horrific losses we've experienced due to COVID, regardless of your political stripes, have fallen by the same amount since May. And now only about half of Americans say they're willing to take a vaccine. And that's going to be critical to being able to get the kind of immunity we need to be able to reopen the economy more freely. And I think that's very important to remember. So that's number one, and that's an important issue. The other issue is fiscal stimulus and fiscal aid. We need the aid right now to mitigate those wounds that are festering. And Mitch McConnell did say that he was more willing to cut a little bit bigger deal, although it's a skinny deal compared to what Mnuchin and Pelosi were discussing. But I think that's important as well, is that we look at now, we're now talking about aid, and we're going to need more than just one round of it, I fear. And much will depend on the composition of the Senate. But no matter how it ends up getting determined with the runoff races in Georgia on the Senate composition, the Democrats that come into place in the Senate are going to be more conservative than their House counterparts and not be as willing to open the spigots. But I do think under a Biden win with a little bit of a Democratic-leaning Senate, you get more stimulus on the other side of this. But what we really worry about is what we can get now, because the longer we wait, the more we're going to need.
So we clearly need more fiscal stimulus. Everyone seems to agree on that to keep us going. But as you point out so well, you put it well, basically economic policy has become public health policy in the day of the pandemic. What do you as an economist conclude about what can be done, how much can be done? As you look at, let me give you 3 examples. You've got the United States on one side, Europe on the other. We thought they were doing it quite well. They're really struggling as well now. But then you have a Taiwan or a South Korea that seem to have managed it. Is there anything we can learn from those 3 examples to help us find a path forward?
Absolutely. I mean, I think it's really important to remember that what happened in Europe is, one, they bent the curve and they were more conservative about reopenings that gave them some wiggle room over the summer. But also, Europe doesn't have as much air conditioning as the United States. And that was the Achilles heel, actually, of the Sun Belt cases that we saw surge over the summer, is rapid reopenings of restaurants and bars and people showing up inside those en masse without masks is where the spread originated. That wasn't as likely to occur in Europe. And as we started to move indoors, of course, Europe realized that although they had bent the curve, they hadn't gotten rid of the virus, and contagion picked up again, and they let their guard down. And I think that's really important to understand, is we saw the heat wave in Europe actually kill more people due to heat exhaustion than it did in the United States because of that differential in air conditioning. But the COVID virus far overshadowed that in the United States, and Europe didn't have that over the summer. So that's one issue. The issue with Asia, economies as developing as Vietnam did much better by the simple effort of wearing masks. Ramping up testing and tracing is really important across the board. A national mask wearing effort where that is something that is accepted and not politicized is really important moving forward as well, because as we go through the winter, this right now is moving up at an exponential rate.
Exactly, exactly. Thank you so much, Diane. Always great to have you with us. That's Diane Swank. She's chief economist at Grant Thornton. Coming up, we're live at the Biden headquarters. This is Balance of Power on Bloomberg Television and on radio.
Mostly, I'm confident because we have so many shots on goal, really an unprecedented number so quickly. So I think science will win in the end. It's just hard to pick the winner at this point in the horse race.
This is Bloomberg Best, your weekly review of the most important business news, analysis, and interviews from Bloomberg Television around the world.
Ken Burns, welcome to Bloomberg Big Decisions.
We have always been a mixture of things. We are always stronger for that mixture.
Growth is a way to stay competitive, delight more and more consumers.
Welcome to the Best of Bloomberg Technology. I'm Emily Chang.
They've moved the needle by acknowledging that they have to monitor the content.
What is one word of advice you'll take with you?
Learn how to listen. And that is certainly something that has served me well.
Ankiti, where do you go from here?
It's a huge market. It's a huge opportunity. I want to go 100x from here.
Our philosophy is to partner where we can and stand apart when we should.
This is Balance of Power on Bloomberg Television and radio. I'm David Weston. Former Vice President Biden continues to gain in the key states of Pennsylvania and Georgia and holds on to narrow leads in Arizona and Nevada. For the view from the Biden campaign, we welcome now Bloomberg's Emily Wilkins, who's been there reporting right throughout. So, Emily, give us a sense of the spirit. I understand the former Vice President may come out and speak again tonight. He did it last night. I think it was about 30 seconds worth.
Yeah, we are expecting to hear both from Biden and Senator Harris later this evening. It's going to sound like both of them will be making remarks, and it sounds like this might be a little bit more substantial than the short remarks we've been seeing from Biden in the past couple days. But the message here in the Biden campaign is still optimism, as well as telling people to wait, but we're also seeing them maybe get a little bit more aggressive about the fact that they are in the lead in so many states. We had one Biden campaign staffer say today that if Trump doesn't want to concede or get out of the White House, that the U.S. government knows how to get trespassers out of the White House.
I actually saw that. I wondered whether former Vice President Biden approved that statement or not, because it was a little bit on the aggressive side. The Vice President's been consistently counseling patience. Is there impatience growing within the Biden camp, though?
You know, someone pointed out today that Biden launched his first presidential run 3 decades ago, 30 years ago. And at this point, what's another couple hours for him? But Biden does really have to be careful here. I mean, his message to the American people has been to not let Donald Trump just unilaterally declare a victory. And he's put that same standard on himself. He has said neither Trump nor I can be declared the winner of this election. We have to be declared. We cannot declare ourselves.
What about a court declaring the winner? I mean, we have an awful lot of lawsuits either pending or threatened by President Trump. How seriously is the Biden camp taking all those? They have a lot of lawyers out working?
Thousands. They have thousands of lawyers out. They have a legal defense fund. But it's also important that we take a little bit of a closer look at these lawsuits. A few of them have already been dismissed. And I was looking over them today. A lot deal with sort of transparency for counting the votes. We have seen a few, but not a lot of lawsuits yet alleging that fraudulent or illegal ballots are being counted at this point, which is a main talking point you've seen from Trump. But the lawsuits at this point don't appear to be backing that up yet.
Okay, Emily, great to have you with us as always. That's Emily Wilkins of Bloomberg Government reporting for us in Wilmington, Delaware at Biden headquarters. Coming up, Balance of Power continues on Bloomberg Radio and on television. We're going to have the latest from Pennsylvania with Joe Watkins, former White House aide to President George Herbert Walker Bush. And this is Bloomberg.
Women leaders were actually better at controlling the deaths from COVID-19. Do you think out of this pandemic, we'll see more countries be willing to elect female leaders?
When we look at women leaders, we tend to project on them baggage that they shouldn't bear.
Women are given an opportunity when no one else wants to do the job.
Women had a very clear objective. They wanted to save lives.
The women leaders, if you look at their careers, have also built up a level of trust.
In fact, women have to be better at communication in order to be elected as leaders, whereas this doesn't hold true for men.
We need to get those sexist stereotypes out of our head and give women a fair run for leadership.
Trying to change the stereotypes about women is not only the business of women, but men have to be part of it.
From Bloomberg World Headquarters in New York to our TV and radio audiences worldwide, I'm David Weston. Welcome to the second hour of Balance of Power, where the world of politics meets the world of business. Well, it ain't over yet, but it's coming down to only a few votes in a few states. And Pennsylvania is at the top of the list, with former Vice President Biden pulling ahead of President Trump in the vote count by a narrow margin, with a fair number of votes yet to be counted. To take us through where we are, we welcome now the Reverend Joe Watkins of Philadelphia. Mr. Watkins served in the White House of George Herbert Walker Bush and is host of the streaming program State of Independence at joewatkins.org. And with us throughout our political coverage has been our political contributor, Jeannie Zaino of Iona College. So, Joe, it's all down to Pennsylvania and maybe Philadelphia, your home city there. Tell us what you know about what's going on.
Well, they're counting the votes as we speak, and Philadelphia and the surrounding counties are ending up playing a large role in this national drama as the votes are being counted. But right now, as expected, Joe Biden has taken the lead, and I think that lead is going to continue to build. I don't think there's any drama about that. I think most of us who have been in politics for a long time know exactly what those mailed-in ballots are going to yield. And right now, it looks like Joe Biden is going to broaden his lead in Pennsylvania.
So, Jeannie, we want to count all the ballots. We all agree with that. But we just heard Joe say it's sort of pointing in one direction. As you know, we talked to Ed Rendell, the former governor of Pennsylvania, yesterday, who said that he thinks in the end it's going to be 80,000 margin for Vice President Biden. From what you know as a former pollster and a political scientist, does that sound plausible?
I think it does. I think Joe Biden could win with even a larger margin than Donald Trump won Pennsylvania in 2016. And I think the number that he gave you yesterday is sounding about right. We know that the ballots that are being counted now, these absentee mail-in ballots, are going, in the 70-80% range for Joe Biden. And so those are lifting his numbers. That's why we've seen him come what seemed to be a deficit all the way to being in the lead. And so as much as we've been talking about how the pollsters got it wrong, and they did get it wrong in some ways, in terms of the red and then the blue mirage, we have seen that effect play itself out. In the midst of this pandemic, Democrats tended to vote by mail, absentee, those votes being counted last in states like Pennsylvania. So what seemed red is now merging to blue, and that's why we're in the position we're in right now.
Joe Watkins, when you talk about those absentee ballots, I'm mindful of the fact that there is a legal dispute, a really legitimate legal dispute pending in Pennsylvania about which ballots that are absentee get counted, specifically those that are postmarked by the 3rd of November but didn't get received until within 3 days afterwards. If, in fact, that does proceed and it goes up to the Supreme Court, maybe the Supreme Court takes it up, could it make the difference here?
I don't see it really changing the outcome of this. I think at the end of the day, the hope is, I think, for everybody who did vote, was that their vote will be counted. That's what makes America the special place that it is that we all have a right to vote, and every one of us has a right to be heard through our vote, and our votes are supposed to be counted. So at the end of the day, I suspect that this won't change the outcome of it. Those ballots that have been coming in have been overwhelmingly for Biden. The ones by mail have been overwhelmingly for Biden. And again, I don't see anything happening but seeing his lead grow in Pennsylvania. I think Governor Rendell was right that we could see a significant lead up to maybe 80,000 votes at some point by the time it's done.
So, Jeannie, as much as some of us would like this to be over, it's not over, and we got a ways to go until we really know the final answer. At the same time, I think it's time to start thinking about what comes next. Let's assume for the moment that Vice President Biden does become the next president of the United States. Let's further assume that the Senate may well not have a majority of Democrats. What does that say about the policies that a Biden administration could and would pursue?
Yeah, and I think both of those are fair assumptions at this point, and the types of policies they would be able to pursue would not be the ones that the Democrats necessarily wanted them to be able to pursue. So, if you're thinking about something like a Supreme Court appointee, even progressives on a President Biden's cabinet, those things are probably going to be off the table with Mitch McConnell controlling the Senate. Also things like potentially a Green New Deal. So I think we're left more with things that they can agree to, the Republicans and a Biden White House, things like infrastructure reform, maybe some type of tax relief for the middle class. But the sort of taking back what Donald Trump did in terms of taxes in the sort of concerted way Joe Biden was talking about it, a Medicare for All plan. Those things are going to be very difficult for him to get with Republicans in control of the Senate. And I have to say, I think Democrats are looking at a long haul, several years, before they have an opportunity to take back the Senate if they don't get it in 2020. And I think that's a fair assumption that doesn't look like they're going to at this point.
Joe, whatever happens to specific numbers here at this point, I think it's fair to say one thing, which is that we have a divided country. I mean, those who thought that there was going to be an about face here, an abrupt about face away from Donald Trump and conservatives more toward the little area, are being disappointed. The question is, can we bring the country back together in the center? If, as Jeannie suggests, it's going to be almost impossible to do anything without doing that, is there some hope? Is there some prospect here for actually governing from the center for President Biden if that happens?
You raised an excellent point, David, and it's the point that I was making in the weeks leading up to the election. I predicted that the election would be a lot closer than anybody thought it might be because the polls weren't accurately taking into account blue-collar whites, non-college educated whites, whose support for President Trump remained and still remains very, very strong. The country, he did do better, by the way, among African Americans. He got about 12% of the African American vote. And I had said earlier that if he was able to improve on that number from 2016, that would make the race closer as well. But not enough to I don't think, to win the election. Joe Biden is going to be the next president of the United States. And I was encouraged by his words when he said a couple of nights ago that he may be elected if he wins as a Democrat, but he will govern as an American president. And that's the hope for the country, that we can come together, that we can learn to care about each other, to love each other despite our differences in politics, our differences in policy, and then work together. That's kind of what I wrote about in my little book, The New PC. But that's the hope for America. I hope that we can get that done. And certainly Joe Biden is saying the right thing, I think.
Jeannie, finally, do we have reason to believe that the Republicans would be willing to move toward the center and get along? I mean, I don't know where President Trump will end up. I mean, maybe he'll still win, but assuming he does not win, I don't see him particularly joining hands with Joe Biden. But what about other Republicans up on the Hill, other leaders of the Republican Party? Is there any reason to believe or hope that they might say, look, it's time for us to try to come to the center and agree on some things?
You know, I would hope so, and I echo Reverend Joe's words. I am not convinced we're going to see that. I think we may see, I mean, the big question now is, do we see Mitch McConnell saying what Republicans said when Barack Obama got in, which was, we will say no at every turn? And I think we may see that again. There's not a lot of incentive for them to do much beyond what is in their benefit, things like infrastructure reform, or like I said, some mild tax reform, those kinds of things. So I'm not convinced we're going to see some sort of kumbaya between the Senate and the president. I'm really sorry to say. I think we know how divided government looks. We've been in it for a long time, and I'm not convinced we're going to see much different. And by the way, I also think to an odd extent that helps Vice President Biden if he becomes president, because he's going to have a reason to resist that progressive push that would have come if the Democrats take the Senate or took the Senate.
Well, Jeannie, you saved the audience from hearing Joe and me start singing Kumbaya, which is a service to the audience, no question about that. Many thanks to Jeannie Zaino, Bloomberg contributor, and to Joe Watkins, former White House aide to President George Herbert Walker Bush. It's time now for a check on the markets, and for that, we turn to Scarlett Fu.
And David, we have a pause on the global equity rally, at least for today. For the S&P 500, look at that. That is the smallest move since mid-October. All this week, we've seen the move be at least 1% for the major benchmark index. There was negative breath on Tuesday, which meant that there were more decliners than advancers. That rally broadened out on Wednesday, and now it's kind of petered out. Not so for the NASDAQ. It's holding up better, as you can see right now, consistent with what we've seen all week. Notably, volume in the S&P and Dow is below average, while it is way above average for the NASDAQ 100. Now, as big as when you look at the NASDAQ, it's up about 9% for the week, set for its best week since April, but that comes on the heels of its worst week since March, and that followed disappointing, less than perfect earnings from 4 of the 5 biggest tech names, as well as a sense that the rally went too far too fast. Now, as big as the equity rally has been this week, the U.S. actually trails global equities. Look at that. The S&P 500 up 7.4%. MSCI World Index, excluding the U.S., is up 8%. The European stocks 600 is up 7%, but it's actually outperforming the S&P 500 when you account for currency moves. And that's because the U.S. dollar has been on a steady decline all this week. It's weaker by 2% versus the euro. It's down at least 1.4% against the G10 currencies. Now, the biggest mover this week, I saved the best for last, are bond yields. The 10-year yield has gone all over the place from 94 basis points, as you can see there on Tuesday, a 5-month high, to as low as 72 basis points. People were positioning for this blue wave. That showed up as unprecedented short positions on Tuesday on treasuries. Then as election results rolled in and it became apparent that the Democrats were not going to take control of the Senate, and they didn't certainly increase their lead in the House, those bets were unwound. So it was a washout. Yields moved higher yesterday and today, but you're still looking at a big swing there. We're going to end the week right around 82 basis points, it looks like. David?
Okay, thank you so much to Scarlet Fu. That's very helpful. Coming up, the virus continues to spread. Daily cases have now topped 126,000 in the United States. We're going to speak with Dr. Amesh Adalja of Johns Hopkins about how to get it back under control regardless of who holds the White House. This is Balance of Power on Bloomberg Television and on radio. I am David Weston. Bloomberg Television is reinventing one of the most iconic brands in financial television for a new audience. Join me to see the news program for the clever investor. This is Bloomberg Wall Street Week. I am David Weston. Bloomberg Television is reinventing one of the most iconic brands in financial television for a new audience. Join me to see the news program for the clever investor. This is Bloomberg Wall Street Week. This is Balance of Power on Bloomberg Television and Radio. I'm David Weston. We're going to turn now to Mark Crumpton for Bloomberg First Word News.
David, thank you. Elections officials in Georgia say they will likely need to recount all votes cast in the presidential race. President Trump and Democratic rival Joe Biden are separated by about 1,500 votes, with Mr. Biden holding the lead. State law permits a candidate to request a recount when the margin is within 0.5 of a percentage point. Each county will have to certify its results, followed by an audit before any recount begins. That process could take a while. Georgia officials say the race may not be certified until the end of the month. House Speaker Nancy Pelosi is urging Republicans to come back to the negotiating table to try and reach agreement on a coronavirus stimulus package. Speaker Pelosi says she prefers an omnibus bill rather than a stopgap measure to complete government funding for the rest of fiscal year 2021. During her news conference today, the speaker also expressed confidence that Joe Biden would win the presidential election. Officials will take another crack at reaching a Brexit trade agreement this weekend. UK Prime Minister Boris Johnson and European Commission President Ursula von der Leyen will speak by phone Saturday. After 14 straight days of negotiations, the two sides are blaming each other for the lack of progress. The discussions are stuck on three big issues: the so-called level playing field for business, access to British fishing waters, and how any potential deal is enforced. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Mark Crumpton. This is Bloomberg. David?
Thank you so much, Mark. If there's to be a Biden presidency, one of its first missions will be to address a COVID-19 that is strengthening and spreading throughout the country and in much of the rest of the world. To talk about what comes next in public health, welcome now Dr. Amish Adalja. He is senior scholar at the Center for Health Security at the Johns Hopkins Bloomberg School of Public Health, a school supported, of course, by Michael R. Bloomberg, founder of Bloomberg LP and Bloomberg Philanthropy. So, Doctor, thanks so much for being with us. No matter who is the president after January 20, it looks like we're going to have to be dealing with COVID-19. Do you have any sense of what yet needs to be done, what changes need to be made, and whether Joe Biden is likely to take us in that direction?
There are a lot of changes that need to be made and a lot of actions to be taken. We still simply lack the ability to test, trace, and isolate. We don't have public infrastructure to be able to contact trace. There are certain states that are telling people, contact trace yourselves. We're hearing about hospitals that are already compromised in places as far as away as El Paso, Texas, and in Wisconsin. We need to really work on our hospital system's ability to respond. We also have nursing homes, again, getting engulfed. So there are many different challenges that we're going to face, and the next president or the current president still has a lot of work to do to get this under control. And I do think there is an opportunity, if there is a change in administration, to get this on a better track, because there's much more willingness to relook at these policies and realize how disruptive this virus has been to our lives.
So how much of a role can the president and the administration play with respect to, for example, the CDC, NIH, things like that? How important is who the president is to that question?
It usually isn't something that comes down to who the president is, but for the last 4 years, we've seen some of these public health agencies, and especially during the pandemic, be really having to express fealty to the president rather than fealty to the facts. And we've seen the CDC, at least since February, be put in a backseat position and basically handcuffed, where everybody second guesses their guidance because they wonder if they've been politically manipulated with. We've seen the Food and Drug Administration see the process with hydroxychloroquine and convalescent plasma have interference from the president. And we've seen the NIH's National Institute of Allergy and Infectious Disease Director, Dr. Fauci, be attacked continually. That's not something that normally happens, and this can be changed. This can change overnight with a change in leadership, where expertise is actually respected, where the scientists are able to actually put together a plan that can be followed and not be something that's got a lot of politicians' hands all over it. So that part of it is very, very easy to fix. And I think it would go a long way, because people would then trust the process, and we would have a coordinating agency like the CDC being able to advise states the way they have done with infectious diseases time and time again.
So, Doctor, what about the vaccine development? We have the Operation Warp Speed, I believe it's called by the president. He's put an awful lot of time and effort and money, as I understand it, into developing a vaccine as quickly as possible. Is there any risk that, in fact, a Biden presidency might back off of that, might delay the time for a vaccine?
Hopefully not. Operation Warp Speed is one bright spot of the administration's response to this pandemic. This is something that many of us in the field have been arguing for, a program like this that would actually accelerate the development of countermeasures against infectious disease threats. This is something we want to see fortified, and we actually want to see it expanded to other infectious diseases other than COVID-19. This model does seem to work, and I hope that the Biden administration, if there is to be a Biden administration, actually puts resources into it and actually scales Operation Warp Speed and makes it more of a paradigm for how to respond to infectious disease threats.
So we've watched a resurgence of COVID-19 in Europe, where they don't have a President Trump. President Trump's not responsible for that. Does that tell us anything about the difficulties of getting our arms around this disease? And is part of that compliance?
It is partly compliance, and this is a tricky disease because it spreads so efficiently from person to person, many of whom who have no symptoms at all or have very mild symptoms. That makes a virus almost uncontainable by definition. So the key thing is to think about a sustainable approach. And what we saw in Europe and many of the countries is over-reliance on shutdowns, thinking the virus was magically going to disappear, not realizing that this virus is with us. So the key to moving forward is developing a system, an infrastructure to be able to take care of these cases as they come and keep them at a pace that doesn't overwhelm overwhelm hospitals. So we have to develop a sustainable process of testing, tracing, isolating, of developing new medications, better diagnostic tests, something that allows us to live with this and gets us away from this false alternative of shutdowns on the one hand and letting the virus run rampant and put hospitals into crisis on the other.
What explains what's going on, for example, in New York? I mean, let's make this local to us, okay, here in New York, because we're seeing an uptick as well. I just actually went on the site, as I understood it, our R0 number is now like 1.13, the highest it's been since May. And yet we have a Governor Cuomo, who's been pretty aggressive in trying to limit our activity, where there are hotspots, also wearing masks, things like that. Why is it not working better in New York right now?
Well, you have to remember that even though New York got hit very hard, you guys didn't reach herd immunity. There were not enough people infected. So the virus was going to come back if people started to let their guard down. And we do know, for example, in certain of those neighborhoods that became hotspots in Brooklyn and in Queens, that there was very low compliance with masks, that people were having gatherings together where the virus was spreading. People are letting their guards down. And I think that's what's happening. The virus isn't going anywhere. So we have to be vigilant until we have new tools. So the key thing is just trying to remember that we're in a pandemic and taking the common sense actions of wearing face coverings, avoiding crowds, washing your hands a lot. That's how we get through this, along with testing, tracing, and isolating.
As I mentioned in the introduction, I think we're up to 126,000 new cases a day now in the United States. Are we heading in a direction where we're going to have to take more draconian steps? And let me be very specific. We got Thanksgiving coming up. What are the chances that we're going to have a national lockdown?
I do not think we are going to have a national lockdown. I think that the only reason that lockdowns happened was because we were in a very, very bad place in March and April, where we had no ability to know who was infected, who wasn't infected, because of failures of the federal government in January, February, and March. We have, even though our testing isn't perfect now, we have much more testing to be able to at least have some understanding of what the spread is in a community. We have the ability to do some contact tracing and understand what's driving infections, and we can do targeted public health. So we can intervene only on those activities that are spreading the infection rather than blanket types of procedures. So I don't think we're going to return to any kind of national lockdown, and I would not recommend it or think it's advisable because of all of the cascading negative impacts on the healthcare system in terms of psychiatric care, cardiovascular care, as well as the fact that eventually the economy does boil down to people's lives, and we cannot sustain that type of an approach. We have to build the infrastructure to live with this virus, and I think that's going to be testing, tracing, isolating, while protecting vulnerable populations like nursing homes, and at the same time making sure that the population is following those common sense recommendations that we've been pounding over their heads since the very beginning. That's the way forward.
Doctor, so great you could join us today. Really appreciate it. That's Dr. Amish Adalja of Johns Hopkins University. And this is Balance of Power on Bloomberg Television and Radio.
I don't remember a time, and I've been investing for over 50 years, I don't remember a time when I've seen such volatility as we see today.
This is Balance of Power on Bloomberg Television and Radio. I'm David Weston. Let's get a check on the markets now. We turn for that to Scarlett Fu. Scarlett?
And you would think, given the news flow today, that we'd have bigger moves in the major indexes with a better than expected jobs report, as well as incremental progress on the vote count across battleground states. But you're not seeing much of a move at all in the S&P, Dow, and NASDAQ. Today's action is actually kind of a sideshow compared with what we've seen this week. Tech has really been the star. The NASDAQ started the week with a 0.3% gain. The advances got steadily bigger. For the week, it's going to close up around 9.5%. And what markets have decided is that gridlock is good. Historically, the S&P 500 gains about 12.5% annually when you get a divided government. A blue wave, in which Democrats control the Oval Office and Congress, results in a 12% gain, and the red wave, the smallest move. Of course, that's price action. Then there's also flows. For the first 4 days of the week, we actually saw a lot of money move into healthcare and financials, which is interesting because this might reveal more about how people were underweight the financial sector more than anything else. Although Betsy Graysock of Morgan Stanley did say banks will thrive with political gridlock. Healthcare, of course, the thinking there is that a divided government benefits them because there won't be any movement on drug pricing and Obamacare won't necessarily be replaced. Let's look at the dollar, too. That's been the other big theme for this week, a down week for the U.S. dollar. Joe Biden is seen as negative for the U.S. dollar. We had heard earlier that a Trump victory re-election would have been positive for the dollar. On top of that, you have the Federal Reserve earlier this week. It was just yesterday, in fact, signal that it will, of course, make a monetary policy as accommodative as possible, given the fact that they see more potential weakness for the economy ahead, especially with another wave of COVID around the corner. David?
Okay, thank you so much for that report on the markets from Scarlett Fu. Up next, Vice President Biden may have won the presidency, but the American electorate pretty much rejected the more progressive policies that some within the Democratic Party were pressing. We talk with the former head of Hewlett-Packard. She's Carly Fiorina. We're going to talk with her about what that could mean for American business and for the country. This is Balance of Power on Bloomberg Television and on radio.
explore the trends, investments, and competition of the European ETF industry. Join us on Bloomberg ETF IQ Europe.
This is Balance of Power on Bloomberg Television and Radio. I'm David Weston. For Bloomberg First Word News, we go now to Mark Crumpton.
David, thank you so much. Democrat Joe Biden has taken the lead in Pennsylvania over President Trump, putting him on the cusp of victory in the presidential race. With 20 electoral votes, Pennsylvania is the biggest remaining prize on the map. President Trump cannot win re-election without it. And as the battle for the White House continues, the Trump campaign has filed at least 6 lawsuits in battleground states since Election Day to challenge the ballot counts. Republican and Democrat activists have also filed suit, but only a few of the cases may have a real chance to affect the final outcome, and only if the races remain extremely close. House Speaker Nancy Pelosi says in a press conference that she wants Republicans to come back to the table and discuss the coronavirus stimulus package for enactment this year. She also expressed her confidence in Mr. Biden winning the presidential race.
Pretty soon, the hyphen will be gone from Vice President to President-elect Joe Biden. It's a happy day for our country because Joe Biden is a unifier, because he is determined to bring people together, because he respects all points of view, and as he has said, I ran as a Democrat, I'll govern as president for all of the people, whether they voted for me or not.
And Speaker Pelosi added that the election has been, in her words, a life or death fight for the fate of our democracy. The U.S. labor market got stronger in October. Employers added 638,000 jobs, beating estimates, and the unemployment rate fell 1 full percentage point to 6.9%. That was double the prior month's decline. Still, the number of long-term jobless Americans surged and now makes up a third of those out of work. Global news 24 hours a day on Bloomberg Quick Take and on air, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Mark Crumpton. This is Bloomberg.
Thank you so much, Mark. We don't really have the results fully from Tuesday's election, but the one thing that seems clear is that there was not the great blue wave that some people had been predicting. Well, what does that mean for economic policies going forward? What does it mean for American business? Carly Fiorina ran Hewlett-Packard before she ran for president herself against Donald Trump in 2016. She is the founder and chairman of Carly Fiorina Enterprises and Unlocking Potential, and we welcome her back to Bloomberg. Carly, it's always such a treat to be able to talk with you, particularly on a week as important as this week is. I'm curious about your take. Does it look to you as if, as is likely, we have a Vice President Biden, now president, and perhaps a Senate controlled by the Republicans, that we will have to govern from the center whether we like it or not?
Well, I think that's exactly right, David. Good afternoon. Always a pleasure to be with you as well. You know, you and I had a conversation, perhaps it was as recently as last week, where we talked about the fact that the more people participate in the democratic process and vote, the more centrist policies necessarily need to be. And I think that's what we're seeing. I mean, when few people participate, then the more extreme activists in both parties have more sway and more power. One of the inspiring things about this election has been how many people participated and came out and voted. And while the blue wave didn't occur, I personally think divided government is always the most productive form of government because, frankly, less gets done in Washington. And I think, in general, less should be done in Washington. That's my personal view. But I think Biden clearly understands that given the coalition of voters that he put together to win, and given the number of voters who still voted for President Trump, knowing everything but clearly not being attracted to or comfortable with more progressive Democrat policies, I think President-elect, if that's what he becomes, Biden, understands he actually does have to govern as an American president. He does need to unify the country, and he does need to steer steer the nation down the middle.
So it strikes me, Carly, that there's a delicate balance here between, on the one hand, a divided government that's more moderate and a do-nothing government on the other side. There are some things I think we need from the government right now, whether it's more fiscal stimulus that we've talked about, or more important perhaps, a real approach to dealing with COVID-19. Is it possible to be effective as a leader in Washington today from the center?
Well, let us hope that we relearn that art of actually collaborating and governing from the center, because I do think, generally speaking, it's what has worked best in our history, but I also think it's what the American people want. And yes, you're right. We need a stimulus package now. Despite the better-than-expected jobless claims and all the rest of it, it's also true that the labor participation rate is falling, that there are hundreds of thousands of men, and particularly women, who have given up on the labor force altogether, that the long-term unemployed are rising. So we've got a lot of issues with our economy. We need an approach to COVID. My goodness, we are in literally out-of-control community spread at this point, passing record after record after record, day after day. And we also have some unfinished business. We need an infrastructure plan for this country, for example. President Trump talked about it in 2016, never did it. Joe Biden has talked about it. We actually need to get around to doing it. So, yes, there are some things that government needs to come together on. Republicans and Democrats need to come together on and get done.
So before we can get to governing from the center, we need to get past this election. And a big question is, can we pull the country back together again? I dare say that Donald J. Trump, the President of the United States, will have an important say in that. We now have a statement that's just come out from President Trump in which he says that Americans, quote, deserve to have full transparency. And he also says he will pursue this process through every aspect of law. Now, it is certainly within his right, maybe his even obligation, to make sure that this is all done properly. Transparency we have to agree with. I wonder if maybe the president is backing off just a little bit from it's all a fraud.
Well, I certainly hope so. I certainly hope so. Of course, we want this process to be transparent, which is why there are counting observers from both parties in every single place where votes are still being counted and where they were counted on Tuesday. That's always been the case. And of course, any illegal irregularities need to be investigated and need to be resolved if they exist. But as I tweeted this morning, you know, in our country, if you study history, passions have always run high, and divisions have been real, and protest is a legitimate expression of grievance. But never before in the history of our republic has an American president declared an election a fraud or demanded that election officials stop counting legitimately cast ballots. A president of the United States should not do that. It is deeply divisive. And so let us hope that the president is backing off. Joe Biden will have his hands full. I remarked recently that the single biggest issue facing our nation is our unity, and I believe that. It's why I endorsed Joe Biden way back in June. But it is also true that democracy is working. And while the president's words count, citizens' votes count more, and democracy appears to be working, actually, extremely well.
And finally, Carly, I want to come back to your expertise in leadership. You have that weekly LinkedIn newsletter. The one this week I read carefully is about the essence of leadership, the essential qualities of it, and talk about it in connection with this issue right now. And I'm going to quote from Senator Roy Blunt. As you know, he's senior Republican senator from Missouri, a member of leadership, the Senate Republicans. And he said today to reporters, if they, referring to President Trump's campaign, have a case to make, there's a process where they make that. I don't think it's unreasonable to allow the president to wait for that number to be apparent. I also don't think it's unreasonable for the Vice President Biden, to accept the unofficial result and do whatever he thinks he should. You know, part of the obligation of leadership is you should always have in your mind, how do I leave? How does that fit with your notions of leadership?
Well, I do think that leaders think about their legacy. Leaders think about what they're going to leave behind. And so, yes, thinking about when and how to leave is an incredibly important part of a leader's legacy. The reason I wanted to remind those who subscribe to my LinkedIn newsletter, and I'm very grateful for all my subscribers, I wanted to remind them what the essence of leadership is. A leader serves. A leader solves problems. A leader changes the order of things for the better. A leader collaborates with others. A leader has character. A leader has candor. A leader has courage. All these things matter. And so, there are a lot of people with position and title and power and money and fame who don't lead, even though they could from where they sit. Leadership is not about position or title or power or money. It's about how you behave, the legacy you leave behind, the problems you solve, and whether you serve others or think only about yourself.
Carly, as I say, it's always a treat to get to talk to you. Thank you so much. That's Carly Fiorina. She's founder and chairman of Carly Fiorina Enterprises and Unlocking Potential. Now, some breaking news. New COVID-19 cases in the state of New York have just gone over 3,000. That's the most since early May. Governor Andrew Cuomo says that upstate New York is actually driving most of the case count right now, which is a switch from around New York City. Coming up, we'll get a view from the critical state of Pennsylvania with Congressman Dwight Evans. This is Balance of Power on Bloomberg Television and Radio.
This is Bloomberg Best, your weekly review of the most important business news, analysis, and interviews from Bloomberg Television around the world.
Ken Burns, welcome to Bloomberg Big Decisions.
We have always been a mixture of things. We are always stronger for that mixture.
Growth is a way to stay competitive, delight more and more consumers.
Welcome to the Best of Bloomberg Technology. I'm Emily Chang.
They've moved the needle by acknowledging that they have to monitor the content.
What is one word of advice you'll take with you?
Learn how to listen. And that is certainly something that has served me well.
Ankiti, where do you go from here?
It's a huge market. It's a huge opportunity. I want to go 100x from here.
Our philosophy is to partner where we can and stand apart when we should.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
There are $3 billion being prepared. So the lending program has increased. So that's the very important feature we did not expect.
This is Balance of Power on Bloomberg Television and Radio. I'm David Weston. We spent much of today focused on the key state of Pennsylvania and what it could mean for the selection of the President of the United States. For a view from the Commonwealth of Pennsylvania, we welcome now Congressman Dwight Evans, a Democrat representing the state's 3rd district, which includes the west side of Philadelphia. So first of all, Congressman, congratulations. You had a win, as I understand it. That's decided, wherever we are with the presidency. But give us a sense of where we are in Pennsylvania with the presidency right now. A lot of it's important for Philadelphia. Where do you think we're coming out in Philadelphia, in Pennsylvania?
Well, the vote is still going on. There's about 100,000 votes that still have to be counted. So that has to be completed before there is an official call. But I think that basically people are excited that, finally this is over. and we can get to the real work, work of healthcare, work about police reform of violence, issues about economic development, jobs, things of that nature. I mean, I think people want to get to work. The people have spoken, they have given their point of view, but it's now time for us to get to work and try to bring people together. We had an election, a very dynamic election, no matter what side you was on. We have to get together and try to make a difference. And that's why I think it's in the best interest of not just Pennsylvania, but America in general.
So let's talk about that work and how you get it done. The people have spoken, and basically, I think at least what they've said is we don't want it to be all red, we don't want it to be all blue. We're sort of 50-50 here, which would tend to indicate, I think, perhaps a move toward moderation. Some of the most progressive policies appear to have been rejected. We now have perhaps a President Biden, a Democrat in the White House, perhaps a Republican Senate, and a House that has fewer Democrats he had before. Is it possible to get things done, to get that work done, if you really have to come to the center?
The answer is yes. It's in the interest of the voters. There's this title in the Constitution says, "We the people," and we have an obligation to get something done. I mean, we have some real challenges. The chairman of the Federal Reserve said we should go big and go bold. I don't think he's a Democrat. And the fact of the matter is that's something he says. So when we look at this economy in terms of the virus, the connection of the virus in terms of how it affects our economy, that can't be ignored. I don't think that's Democrat or Republican. And I think that soon-to-be President Biden has it right that you have to address the healthcare issue, and then addressing the healthcare issue, you address the economy. You can do both. See, I think you can do both. I don't think it's an either or. I think for those who think it's either, that's a mistake. We got to do something about jobs. We got to do something about business development. I'm fortunate enough to sit on the Ways and Means Committee, and I'm vice chair of the Small Business Committee. And I understand the importance of making this economy work. That's the name of the game. How do you make it work? How do you bring people together to make it work? And I like to hope that I can contribute to some way to find towards being result-oriented.
So, Congressman, maybe there's a little bit of a pathway laid out, although it didn't get done. In the legislation that was being talked about, certainly was proposed by Nancy Pelosi, the Speaker of the House, and I think was being considered seriously by Secretary Mnuchin. It included both money for COVID-19, the healthcare issue, what needs to be done there with testing and tracing, things like that, and money for small business to get the economy going. At the same time, they couldn't come to agreement. They couldn't come to agreement on how much and exactly what to go for. What are your hopes for, let me start with the lame duck. Do you think it's realistic to get something done before the first of the year?
The answer is yes. And I said it to you because, just as you just said, the groundwork has been laid. The Speaker of the House, the Secretary of Treasury, they laid the groundwork. I don't think we have to start all over again. I think we should build on what we have. That's how we should do. We should build on what we have, move towards when President Biden becomes President of the United States. Look, America is the greatest country in the world. And we need to build on. We need to stress to people the importance of working together. And I believe that was very much what Vice President, soon-to-be President Biden talks about. He talked about the soul of America. And I believe that bringing that stability is a very important element. It's not to be taken lightly. I mean, democracy is an adult behavior that we have to have. And what that means is we all have to be in this together. We can't be spectators. You can't be spectators in democracy. That's why you vote. And then after you vote, there's things we do in our communities, our neighborhoods, all across America. We try to find ways to be supportive. We try to be our brothers and sisters' keeper. Some are doing well, some need some help. So you can't leave those people out who need help. And we had an election. It was a whole year. We had all kinds of debates, all kinds of things, but the voters have spoken. We must do the complete count everything, and then that the count should be the determining factor about who's in a particular position. There's an election right around the corner. I don't want to shock anybody. There'll be another election. So with these elections, you got to keep them in perspective of the challenge we have. And it's not just the challenges in America, the challenges that we have in the conjunction of the world. We can't forget about the world and the rest of the world. That is also very important.
Okay, Congressman, a real treat to have you with us today. Thank you for taking the time. Once again, congratulations on your victory. That's Congressman Dwight Evans, Democrat of Pennsylvania. Coming up, how did workers contribute to the outcome of this election? And what does it mean for workers now that it's over? We ask Richard Trumka, president of the AFL CIO. This is Balance of Power on Bloomberg Television and Radio.
Give you a sense of the real-time action. The 10-year yield tumbling now 11 basis points, so continuing in this knee-jerk risk-off feel.
This is Balance of Power on Bloomberg Television and Radio. I'm David Weston. A key part of the Democratic strategy for this election was rebuilding the so-called blue wall across the Rust Belt, and it appears to accomplish that task, with Wisconsin and Michigan going for former Vice President Biden and Pennsylvania apparently headed in that direction. Welcome now someone who was committed to having Midwestern workers turn out and vote for the Biden-Harris ticket. He is Richard Trumka. He's president of the AFL-CIO, which represents over 12.5 million workers nationwide. So Richard, welcome. It's great to have you here. So is it too simplistic to say, in fact, you got that blue wall back up?
Well, look, member support for Biden grew overall, and in specific states, Pennsylvania, Wisconsin, Minnesota, Michigan, Arizona, and Nevada were also very, very strong. And in the battleground states, David, union members made the difference. Trump's support stayed about the same, but the support for Biden grew in this election, and the numbers grew as well.
It's fascinating. So do you have a read yet from your members about why they turned out to vote? What did they care about the most?
Well, I think there's a number of things they cared about. The first thing they cared about was their health and safety. The essential workers that are still on a job are worried about COVID and their safety. They've not gotten the help from OSHA or this administration that they should have. I think members are also concerned about jobs. We're still down 12 million jobs from where we were, and unemployment is, about to expire. So they're looking for COVID relief in that and their health and safety, both of them.
Let's talk about the world going forward. There were people who were talking about a blue wave in which the Senate would go Democrat, that is to say majority would be Democrats. The House would certainly hold, or actually they talked about adding seats, and a Democrat in the White House. That did not happen. It looks like the Senate at best will be 50-50, quite possibly will have a majority of Republicans. The Democrats lost seats actually in the House of Representatives. What does that tell us about the American people and what they want?
Well, look, if you look at, compare this to 2018, the results weren't that much different. In 2018, we said it's a great blue wave. Now I think expectations for this election were set high, probably way too high. But what you have is over 4 million, a vast majority of people in this country voted for Biden. They said they want to change the direction. He's going to win the Electoral College. They said they want to change the direction. And I think what they want is somebody who's going to work on the problems. First, solve COVID. Second, help with the economy, get people back to work. Third, attack systemic racism so that we can have a fair system that works for everybody. I think that's the general want of union and non-union members across this country, and I don't think it varies much with the region of the country.
One of the things you and I have talked about a fair amount, Richard, is a fourth round of fiscal stimulus that did not get done before the election, despite a lot of efforts in that direction. Does this result of the election make that number, how many dollars are appropriated, a lower number?
No, I don't think so. You have to find out what's going to work. You know, if it takes, and I'll just use an arbitrary figure, if it takes 10 to defeat COVID, doing 6 isn't going to help you. So you have to actually look at what we need. We need help with unemployment insurance. People are hurting. Their unemployment insurance is about to expire. State and local governments need help. We need to get them something. Education needs help. You're seeing more schools closed down right now that were opened up because we haven't been able to conquer COVID and send them back safely. And so all of those things need to be taken into effect. The good news is yesterday Mitch McConnell said that COVID-19 relief is going to be his top priority. So hopefully when the Senate returns next week, the HEROES Act should be at the top of the agenda, and they'll look at what's best for the country. We can now say, okay, politics are over. Let's look at what's best for the country. Let's solve COVID. Let's protect the workers, essential workers that are out there. Let's help those people that are unemployed. Let's stimulate the economy so we can create jobs and get people back to work.
Richard, finally, and very briefly, when President Biden, if that happens, calls you into the Roosevelt Room and says, okay, what's your number one thing you want me to do? What's he going to say?
Help us solve COVID, protect workers on the front line, because that's the only way you're going to get to the other problems. You can't open the economy until you keep workers safe, and students and teachers safe in schools.
Thank you so much, Richard. Always a delight to talk to you. That is AFL-CIO President Richard Trumka. A programming note now, stay with Bloomberg for the latest numbers in the presidential race as more votes trickle in from the remaining states where no projection has yet been made. And former Vice President Joe Biden inches closer toward the magic number of 270. This is Balance of Power on Bloomberg Television and on radio.
going into the fourth quarter, we're going to have to see how healthcare systems grapple with the next wave of the pandemic. But I believe that healthcare systems have now learned a lot, learned how to manage the cases better. So overall, we're cautiously optimistic.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
I'm Mark Crumpton with Bloomberg's First Word News. President Trump says the American people deserve to have, quote, full transparency. In a statement, the president said this isn't about any single election, that it's about, quote, the integrity of our entire election process. He added that his campaign will pursue the process, again quoting, through every aspect of the law. The president's trailing Joe Biden in several key battleground states, making his re-election look increasingly unlikely. Georgia election officials say they will likely need to recount all votes cast in the presidential race. President Trump and Joe Biden are separated by about 1,500 votes, with Biden holding the lead. State law permits a candidate to request a recount when the margin is within 1/2 of a percentage point. Each county in Georgia will have to certify its results, followed by an audit before any recount begins. The process could take a while. Georgia officials say the race may not be certified until the end of the month. Upstate New York is driving a new phase of the coronavirus pandemic. Governor Andrew Cuomo says the state saw more than 3,000 new cases in the past 24 hours for the first time since May. Hotspots have cropped up in western and central New York, as well as along the Pennsylvania border. Governor Cuomo says residents in those areas haven't been following social distancing or mask guidelines. Luxury fashion boutiques and jewelry shops in the financial capital of Italy have been shut down. Milan is one of several regions ordered to undergo a partial lockdown aimed at stopping the spread of the coronavirus. The new restrictions aren't as severe as the country's near 10-week lockdown in the spring. Many European nations have been reluctant to reimpose those kinds of lockdowns because of the massive economic damage that resulted. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Mark Crumpton. This is Bloomberg.
2 p.m. in New York at 7 p.m. in London, live from Bloomberg's World Headquarters. This is Bloomberg Markets The Close. I'm Caroline Hyde.
I'm Romaine Bostick.
And I'm Taylor Riggs.
And the rally, it cools. After a dramatic few days, the S&P 500 clinging to small gains, but still on track for the best week since April. Treasuries sell off. So too does the dollar. Meanwhile, we keep on counting. Joe Biden overtaking President Trump in the vote count by razor-thin margins in Georgia and Pennsylvania, while maintaining the lead in Arizona and Nevada, putting the former vice president on the cusp of victory. But the race, it's not over. That's the message from President Trump's campaigners. His advisors promise legal challenges that could draw out the results. The Biden camp dismissing accusations of voting irregularities as the former vice president prepares to address the nation tonight. All that and so much more coming up, Romaine.
Yeah, so much more, of course. As we get any sort of results out of this election, we will bring them to you. But right now, take a look at what's happening in the market. Yes, the rally did cool, Caroline, but you still talk about $4 trillion added to this market over the course of the week, setting us up for what is going to be the best week for U.S. equities going back to April here. That rotation that we saw earlier in the week, it pretty much became a broad-based rally this week. Today, the only thing really even keeping us in the green right now is healthcare and a few of the big cap tech names. The real story of the week, though, and probably the story that's going to be talked about a lot over the next few weeks and months, is really the dollar and the trajectory of the dollar. Dollar weakness once again today. That appears to be the general sentiment right now in betting markets right now as to where the dollar will end up over the course of the next administration, whether it is a Trump administration or a Biden administration. But all told here, Taylor, you're talking about a week that is ending here on a somewhat muted note, with volatility dropping all the way back down to 25.
And it's Jobs Day. Did we forget about that?
I did.
It was Friday. It is Jobs Day. Let's just quickly take a look at the data, which sort of sets us up for where we are today. Job gains still good. This is according to analysts. It's above expectations. You had revisions higher for the previous month, 638,000. Unemployment rate also much better than expected and lower than many analysts had frankly forecasted even by the end of the year. Underpinning that is some moves that we're seeing within the 10-year yields. Flip up the board here. This is as some of the economic data is taking perhaps maybe a back seat, Caroline, as we focus on the push-pull of stimulus, reflation, do we not? We were at 87 basis points last week. We're at 82 basis points today. So despite all the whipsawing that we saw throughout the week, we are down an additional 5 basis points again on the day, 82 basis points, as we try to figure out, of course, where we stand within all of that.
Still biggest drop in yields that we've seen since June on the week. Taylor, what a great setup because we can't forget that it's jobs day. And let's dig into those job numbers. Let's dig into the economic road ahead in terms of whomever wins the election. Julia Coronado is with us, president and founder of Macro Policy Perspectives. Joining us from Austin, Texas. Julia, your perspective on the eco data first and foremost, because where did you see the surprise coming from? And is it sustainable, particularly the travel, the leisure parts?
Yeah, I mean, so I think there was a lot of cross currents in the jobs numbers. Overall, the gain was solid. We're still making progress. The drop in the unemployment rate, very impressive, and it did not come at the expense of labor force participation this time. So all of that's good news. But even while this is a very robust pace of job gains, it's a lot slower than it has been in the summer months. And we've only regained just over half of the jobs we lost in March and April. So great news, but we still have such a long road ahead of us. And your question is perfect. Is this sustainable? And that really comes back to both the public health response and the evolution of the pandemic, as well as the degree of fiscal support. The sectors that still are furthest behind are those most impacted by social distancing. Leisure and hospitality had a gain, but boy, they're still deep in a hole. Airlines lost jobs. State and local governments lost jobs. That's where we see the fiscal bite. So it's not clear that it's sustainable at this pace, probably not at this pace without further support and or breakthroughs on the public health side of things.
So, Julia, I mean, there are still some encouraging signs here, at least in terms of the actual employment itself. Talk to me a little bit about the wage numbers and what sort of we can read into the potential for what direction that wage growth might go, given the general state of the jobs market.
Yeah, I mean, we see what is a unusually high pace of wage growth for a recession. Normally, we see downward pressure on wage growth in a recession. What this reflects is that it's sort of a composition effect. The job losses have been dramatically skewed towards lower wage workers. So they've effectively dropped out of the pool of wages that we're using to calculate wage gains. That accounts for about half the gap. We've lost a bunch of rank and file workers that earn lower than average wages, and that makes the overall wage picture look sort of artificially high. So that's sort of a distortion. We would expect that to see some of that downward pressure as these lower wage workers get reconnected to the job market and to employment. Since they're the ones that left. So that's the hardest tea leaf to read in this report. We have to look towards other surveys that control for composition of jobs to actually determine how much cyclical pressure there is on compensation.
On that theme, you're seeing temporary layoffs fall while permanent layoffs rise. And I'm wondering if that is a structural shift where a post-COVID economy and those jobs available are very different than what we've seen pre-COVID.
Yeah, that's exactly what we're seeing. We are nearing the end of that reopening, reconnection dynamic. And what we're starting to see, which has also been reflected in a lot of the earnings reports lately, you know, the businesses are streamlining and right-sizing their business towards a more subdued demand picture. So we are seeing permanent layoffs pick up. Right now, the level of permanent layoffs looks about on par with the 2001 recession. So we're not anywhere close to the Great Recession. We're more in a garden variety recession. dynamic, but it is a recession dynamic. And so those jobs are going to be harder to regain. That's not just a shutdown, reopen dynamic. That's a cyclical lack of demand dynamic. And again, that takes us back to how does the pandemic play out? How much fiscal support do we have to keep demand on track as we move into 2021?
And the bickering about that fiscal stimulus continues between the White House, Nancy Pelosi. We're still no clearer on what that looks like. Julia, what we are clear on is the Federal Reserve is there to ensure monetary policy stability is there. Are you seeing anything in terms of, what are you factoring in terms of how much fiscal or monetary support we get from here on out?
Well, it's becoming pretty clear we're going to have a Biden administration. And it's also becoming pretty clear that we're probably going to have a Republican-controlled Senate, although those two Georgia races could give control to the Democrats. That runoff is going to be in January. If we have a divided government, we're already seeing the politics play out with Republicans reconnecting to their fiscal discipline roots and blocking or insisting on less fiscal support. That's not good news for the recovery. I think that the Biden administration will bring a more coordinated federal response on the public health side of things. That could actually be helpful to businesses if there's widely available, affordable testing and tracing, PPE support, et cetera. That could be marginally pretty helpful to businesses that are trying to navigate life in a pandemic. So I'd say there's a mix of news from that. We know the Fed is determined to provide whatever support they can. They'll step in and provide more if there's going to be less fiscal support. But monetary policy is much less effective than fiscal in this environment.
All right, Julia, always great to get your thoughts. Have a pleasant weekend. Julia Coronado, president and founder over at Macro Policy Perspectives. And of course, as she was talking about, we are still awaiting the final results of not only the presidential race, but of course, those Senate races as well. Right now, Biden taking the lead in Pennsylvania and Georgia, but we're still waiting, of course, on the official tally. We're going to talk about that coming up next. We also are going to talk about what's been going on over at CVS. A new CEO over there. We're going to talk about how the pharmacy chain making an interesting decision here that could potentially be shifting the business over towards insurance. Plus, tech jobs standing strong. We're going to talk about why technical services and software developers are among the top industries hiring during the pandemic. All that and more coming up next. This is Bloomberg.
Women leaders were actually better at controlling the deaths from COVID-19. Do you think out of this pandemic, we'll see more countries be willing to elect female leaders?
When we look at women leaders, we tend to project on them baggage that they shouldn't bear.
Women are given an opportunity when no one else wants to do the job.
Women had a very clear objective. They wanted to save lives.
The women leaders, if you look at their careers, have also built up a level of trust.
In fact, women have to be better at communication in order to be elected as leaders, whereas this doesn't hold true for men.
We need to get those sexist stereotypes out of our head and give women a fair run for leadership.
Trying to change the stereotypes about women is not only the business of women, but men have to be part of it.
Do you think you'll have to produce less beer in 2021?
No, I don't think so. I think consumers will find a way. But I mean, if there are restrictions, but consumers, of course, are smart and they'll learn to live with those restrictions, I think some occasions will migrate.
We really are looking to the bond market at this point to glean any indication of what may happen, not only with the election, but then the Senate. We've had this big reflation trade, of course, that has been in place. We thought there was a blue wave. Some of that unwound earlier this week. Yields now back up on the 10-year, an additional 6 basis points today remain. I think as the market tries to digest what this week means, of course, for any higher taxes, what the composition of the Senate may be, where we are on stimulus, and then, of course, that jobs number that we got this morning.
Yeah, a lot to parse here, and, of course, hard to parse that when you don't necessarily know the outcome. But Wall Street, of course, already making its bets, weighing the possibility that it will be a Biden administration come January 20th. But, of course, there is still that contentious congressional race out there that could create more uncertainty with regards to whether legislative policy gets passed. Joining us now, we want to bring in Cowen CEO Jeff Solomon, and we also want to bring in our Bloomberg Wall Street correspondent, Sonali Basak. Sonali, take it away.
Thank you, Romaine, and thank you, Jeff, for joining us. You know, for all the talk of election uncertainty here, investors reacted so strongly to the Senate. And when you look at this potential Georgia runoff here until January, what are the uncertainties that people are still baking in?
Well, I mean, obviously, people are concerned that if there is a Democratic majority, that we'll have higher taxes. But I've always said, even if that happens, we'll just have higher spending. And I think people tend to parse the both sides of the fiscal scale instead of looking at them collectively, like higher taxes, higher spending. So when you net it all out, it's probably pretty good, even if you do end up with 2 Georgia seats going to the Democrats. So the market will probably freak out about a little bit because it'll presume that we'll have much higher tax rates. But you know, eventually it'll get around to realizing we're going to have a lot bigger stimulus if that happens. Yeah, I'm wondering about the balance out there, Jeffrey, because, I mean, the last 4 years, it was kind of dominated, at least for markets, it was kind of dominated by this discussion of lighter regulation, a lower tax base for a lot of corporations out there, and that sort of underpinned valuations out there. Even if you do get a higher tax rate in some fashion here, if you get the fiscal stimulus and you get the economic growth, presumably, that would go along with it, is that going to be enough to sort of cancel out the bite of higher taxes? Oh, I think it will. I mean, listen, if we get a tax increase, which, again, if it's a Republican-controlled Senate, I don't think we will. But if we got one, you know, we're talking about basically some return to what it was like before the Trump tax cuts. There could be some higher capital gains rates. That probably means people will become longer-term investors rather than monetizing stocks and doing fast trading. So I actually don't think a capital gains rate necessarily impacts the bottom line as much. But, you know, we'll have some sort of a return to the way it was under the Obama administration, which was actually pretty good for stocks. So, again, I think there's these narratives out there that, you know, Republicans are great for equities and Democrats are not. And that's just not true. I mean, we look at all of that. It really doesn't much matter who's in the White House or who's controlling the houses. You got to figure out how to navigate it. But at the end of the day, the fundamental economics are really what drive markets. And, you know, we've got to come off the back of this downturn. It's virus-induced. The virus will end at some point. We will get back to some new normal, and economic activity will continue to pick up. And when that happens, you know, we'll be back to the race. You know, I think the market's actually looking through that already.
Jeff, it's Caroline here, and what's interesting to me is it seems that lawyers always win in some way, shape or form. But prior to the election, it felt like M&A lawyers in particular were just working their guts out because everyone was trying to get ahead of potentially a Biden administration. Now we're going to have lawyers involved probably for all manner of matters. But your perspective in M&A going forward and business confidence going forward if we do indeed get a Biden administration?
Well, I think, again, I think people will do the things they need to do in order to advance their businesses. And they just need to understand the regime and the framework under which the regime operates. So at these moments, these inflection moments where you might have a change in administration and a slight change in direction, it takes a while for people to figure that out. But then once they do, they go right back to doing what they need to do to drive their businesses. Seldom do you have an election that completely turns things so inside out that people get frozen for extended periods of time. Listen, we as humans and as creatures of the market are incredibly adaptable. If 2020 has taught us anything, we've seen highs and lows. We've seen more right tail, left tail events this year than most of us have seen in a lifetime, and we're doing okay. Again, from the market standpoint, I think it's a little different if you're running a small business. But even there, I think once we get fiscal stimulus, which I expect to actually happen by the end of the year, I do think that McConnell probably gets something limited done in lame duck. You know, my expectation is that small business will begin to think about rallying sometime in 2021 as things get back to a more normal economic cycle.
Jeff, you know, I think we're all looking forward to looking past the next week here. But when we're looking into December, we've had some of our guests talk about some concerns about liquidity conditions, funding conditions. Do you share any of those concerns?
I don't. I mean, you know, Jay Powell told you all you need to know we're standing here hosting down the runway. I've said all year long, they did a great job in March. You know, better maybe than any other Fed in history at making sure that there was liquidity in the market and lubrication in the market, so that banks could continue to do basic things like overnight funding to limit unnecessary panic. And that's really what enabled everybody to have an opportunity to breathe and do normal, ordinary business, even as we were trying to figure out what to do a longer term with regards to the impact of the virus on the economy. So I don't expect there to be funding challenges. The Fed is at the ready. They've got many tools and really high caliber staff that is on the lookout with better information than we had even in 2008 to navigate this. So not expecting it at all.
Jeff, given this is the best run we've seen in the S&P since April, what can upset this rally?
Well, I mean, you know, if I had a crystal ball, I don't know. Well, I mean, I do think right now we're focused a little bit more on the election than on the virus. The virus continues to do what it does, which is to replicate itself in as many different humans as possible. And I think that's going to have a chilling effect. Once things get settled out, we get back to taking a look at the devastation that's happening, as you'll see episodic lockdowns and things like that. That could obviously be a problem. And I think if there is any sort of a hang up in this idea about fiscal spending, I think that could be a problem, because the market is anticipating, and I think rightly so, that there will be a fiscal package here to help small businesses to really navigate the next 6 to 9 months, 12 months until we return to some sort of more normal economic activity.
Mm-hmm. Jeff, thank you so much for joining us. That was Cowen CEO Jeff Solomon. Caroline, back to you.
Sonali, we thank you as always. Now, coming up, with the race for the White House building to a pretty dramatic close, we go live for our report from Biden headquarters. That's next. Stay with us. This is Bloomberg.
Welcome to That's Debatable, an interactive series on today's most pressing issues. The resolution this time: is a U.S.-China space race good for humanity? We'll hear from both sides.
The competition, if you look at the past, led to innovation. A whole new arms race could start.
And we'll get your perspective too, with help from the artificial intelligence of IBM Watson. I'm John Donvan. Join us for That's Debatable, presented by Bloomberg and Intelligence Squared, Friday on Bloomberg Television.
We explore the trends, investments, and competition of the European ETF industry. Join us on Bloomberg ETF IQ Europe.
The VIX curve also giving us some insight into the volatility around this election. Big drop in spot November, December contracts. Spot VIX down 2 points now to about a 25 handle. So we've really migrated from a 40 all the way down to a 25 handle here. For more on this, I want to bring in Emily Wilkins, who's been covering the Biden campaign for us on part of our Bloomberg government team here. Emily, fast moving situation. What's the latest? We are still waiting for counts in Pennsylvania, in Arizona, in Nevada, and in Georgia. Biden is either in the lead or has pulled ahead to the lead in all of those states, but he doesn't need to win all of them, only a handful to be named the next president of the United States at this point.
Yeah, Emily, I guess the question everyone wants to know is which one of those states are we going to get first?
A lot of us are looking at Pennsylvania right now. They've been moving through the count pretty quickly at this point. We did hear a Georgia official say that they might potentially need to go to a recount. We won't know that one for sure, but that could take another couple weeks. And look, Pennsylvania's big. That's 20 electoral votes. That is enough to get Joe Biden over the 270 threshold.
Meanwhile, the latest headline is Pennsylvania Republicans are filing a new request with the Supreme Court. Emily, so much talk of legal action. Any of it stick?
We will see. There have been a couple lawsuits already that have been dismissed in a number of states, but the Trump campaign has already laid out their strategy here. They are going to be taking this to the courts. The Biden team is ready. They have thousands of lawyers all over the country, a defense fund set up. And so at this point, we are sort of looking at the courts to see which of these cases might wind up having legs.
All right, our very own Emily Wilkins, Bloomberg Government, out there in Wilmington, Delaware, keeping us updated on what's going on. And of course, as we get any news about the results of those races, we'll bring it to you directly.
And here's what the market's baking in. Well, caution right now. Yesterday, there was an embracement of uncertainty. Today, we hold on to gains just slightly. Big tech, healthcare, once again, doing pretty well. We're just up 10 points, though, on the NASDAQ. But this has been a risk-on flow throughout the week. What catches my eye, Taylor, is the MSCI All Country World Index up 7% this week. Again, the most since April. Some of the moves, the Nikkei 225, the highest in 29 years. The world liked the factoring in of this election.
Yeah, and you know, Romaine, it could be the fact that at least the vote is behind us. We're trying to get some clarity, of course, on the actual results, but the fact that we're closer and closer, we think, to what might be a resolution here, certainly giving the markets a pause here and some excitement to move forward.
Yeah, you're definitely seeing in the price action right now a market that has basically decided that it thinks that the outcome is what it is. Of course, you know, it's not final yet, but again, is this sort of a bet on the future, Carolina Taylor, or more an unwinding of some of those trades that we had leading up to the election?
Yields up 5 basis points, but remember, over the course of the week, we've had them set for their biggest drop since June. This is Bloomberg.
This is Bloomberg Best, your weekly review of the most important business news, analysis, and interviews from Bloomberg Television around the world.
Ken Burns, welcome to Bloomberg Big Decisions.
We have always been a mixture of things. We are always stronger for that mixture.
Growth is a way to stay competitive, delight more and more consumers.
Welcome to the Best of Bloomberg Technology. I'm Emily Chang.
They've moved the needle by acknowledging that they have to monitor the content.
What is one word of advice you'll take with you?
Learn how to listen. And that is certainly something that has served me well.
Ankiti, where do you go from here?
It's a huge market. It's a huge opportunity. I want to go 100x from here.
Our philosophy is to partner where we can and stand apart when we should.
What is happening today in India is actually a determination to rebuild our economy.
India has an opportunity not only competing in the space of the factory of the world, but a very big opportunity to compete in being the office of the world.
I'm Mark Crumpton with Bloomberg's First Word News. Democrat Joe Biden has taken the lead in Pennsylvania over President Trump, putting him on the cusp of victory in the presidential race. With 20 Electoral College votes, Pennsylvania is the biggest remaining prize on the map. The president cannot win re-election without it. Officials will take another crack at reaching a Brexit trade agreement this weekend. British Prime Minister Boris Johnson and European Commission President Ursula von der Leyen will speak by phone Saturday. After 14 straight days of negotiations, the two sides are blaming each other for the lack of progress. The discussions are stuck on three big issues: the so-called level playing field for business, access to British fishing waters, and how any potential deal is enforced. Russia is seeing its worst coronavirus numbers since the pandemic began. The country reported more than 20,000 new infections today. Authorities insist there's no need to impose a second lockdown or shut down businesses nationwide. They claim the healthcare system is capable of handling a surge in infections. But Russian media have reported on overwhelmed hospitals, drug shortages, and inundated medical workers. Hong Kong leader Carrie Lam says whoever wins the U.S. presidential election should end what she called the totally unreasonable interference in the internal affairs of her city and in China overall. Wrapping up a 4-day visit to Beijing, Lam accused the Trump administration of repeatedly interfering. She pointed to U.S. sanctions on officials, including herself, and the suspension of special trading conditions previously granted to Hong Kong. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Mark Crumpton. This is Bloomberg.
This is Bloomberg Markets to Close. I'm Romaine Boston.
I'm Caroline Hyde.
I'm Taylor Riggs.
Let's get you caught up on where we stand here in commodities. Market settlement of NYMEX crude today coming in right at $37.14. A down day here for NYMEX crude oil, but still actually going to be an up week, though. You can see where we stand right now. Not really giving you much movement out of that range that we've been stuck in now for quite some time. Copper right now headed for its biggest weekly gain in about a month. And take a look at what's been happening in gold. Gold finally did manage to break out of that trend line that it had been in for quite some time. 1954 is where we stand right now in the next session, which has already started trading.
And Romaine, don't forget that it is jobs day this morning. We heard from Julia Coronado. While the top number certainly looked good, this is an interesting chart for me because it shows temporary layoffs falling, good. Permanent layoffs, though, rising, not good. And that's something, at least, that she was saying, Romaine. This is about the structural shift that we're seeing within this economy in this post-COVID-19 world.
Yeah, for more on this, let's bring in Irina Novoselsky. She's CEO of online hiring platform Career Builder, joining us right now. Irina, great to have you on. We all know, of course, the headline numbers here that we saw today. I guess an improvement, and for some people, an encouraging sign. 638 underneath the hood. There were also some signs here that certain sectors of the job market are still lagging. What are those sectors?
Yeah, well, some of them are lagging, but one of the things that we've seen, as you say, underneath the hood is not only the over 600,000 jobs created, but actually over 900,000 jobs created in the private sector. And one of the things that we continue to see in the top 10 job categories is retail trade, which is a new one that we have not seen in several months. And so it's exciting to see progress in that industry that has fallen behind in the previous months in the beginning of COVID. Well, another one that we continue to see taking up several of the top 10 is in the healthcare space and continued really focus around the stability that insurance and financial services have. However, there were some interesting stats on the race and gender stats when you look underneath the hood as well.
A leading question. Before we go there, I want to, Irina, look at how sustainable those number tick-ups are, because Romain was asking you about where the weaknesses are. You talk about the strengths and that being in retail, but as we head towards further pickup in COVID cases, is that going to be reliable in the future months, do you think?
It depends. One of the things that we've continued to see just this past week is the jobless claims number came down again. That's the 9th consecutive week that we've seen that under 1 million jobless claims. It's still a large number. One of the things that we have seen is that companies have geared up hiring in anticipation of the seasonal holidays. It's most likely will not be what we've seen historically, because today's seasonal hiring is going to look very different than it was before. But we are continuing to see strength in logistics, manufacturing, construction. And so it's hard to tell where the uncertainty will take us, but we've continued to see pretty consistent progression in the right direction. It has been coming, Caroline, at a shorter and not as aggressive clip as early COVID. So the trajectory of the stabilization has slowed a bit.
So I will ask the leading question. Talk to us about the underlying trends that you see within race and gender. While all were spiking, they've all come down, though, but at different rates. In terms of unemployment rates, I'm sorry.
One of the things that we're really excited about to see for the first time since COVID started is women's unemployment rate for the first time surpassed men's unemployment rate. So the unemployment for women is about 6.5%, which is lower than 6.7% for men. That was the case pre-COVID, and after several months, we finally got back there, which was exciting to see. The Hispanic population, for the first time since COVID, has gone into single-digit unemployment. It's still high, but it is now under 10% and has seen about a 15% improvement month over month. However, there is still troubling signs for our Black community, where unemployment continues to be about almost 2 times that of white community. And that's similar to the ratio that we saw in pre-COVID.
Yeah.
However, the absolute number continues to be double digits.
So one thing, so let's step back then and look at the broader picture again here, Irina, because when we talk about the jobs now that are, I guess, technically being created, we're pretty much just sort of refilling the hole that COVID sort of put us in. I'm curious that when you look at the new online listings that are coming in here, are these just the same jobs that were lost, meaning, you know, one for one, the jobs that people got laid off from back in March, April, et cetera, now those folks are being rehired? Or are we seeing actually new jobs, new forms of employment sort of being listed out there right now?
There's a shift in the weight of where they're coming. One of the things that we're seeing is much more oriented towards the tech space and having tech skill sets. We are still continuing to see that COVID-related industries are not hiring in the same numbers that they were pre-COVID, so that continues to exist, remain. But one of the things that you're highlighting is there is going to be a shift, and really it started pre-COVID where the high-paying jobs were growing, the low-paying jobs were growing, but it's that middle that was really getting hollowed out, and that really takes us into a conversation around upskilling and reskilling, that it's going to be important in order for candidates to take advantage of the open jobs, because they are going to look different than how they looked before.
Irina, great to get under the hood of these numbers with you. We thank you for the insights. Irina Novoselsky, career builder, CEO. Great to have some time with her. Now, coming up, Election Day becoming Groundhog Day. We get a check on where things stand in the electoral count next. Guess what? They haven't moved much. This is Bloomberg. So, of course, the results still trickle in from Tuesday's election. And we spent much of today focused on key states, Pennsylvania, Nevada, Georgia. And they're still tallying the votes there. But almost more importantly, the Senate races as well. Joining us for an election update, Bloomberg's David Weston, of course, host of Balance of Power, the hardest working man in Bloomberg media right now. Purdue, interesting update in terms of the Georgia Senate races. It looks like for a second runoff, Purdue saying he's looking forward to a runoff in Georgia.
Yeah, not a big surprise. David Perdue, the incumbent Republican senator from Georgia, a businessman, by the way, the only person in Congress who was the CEO of a Fortune 100 company. And it turns out that he's going to have a runoff. He's conceding that now. So we will have not one but two runoffs in the state of Georgia, which makes Georgia what it's all about. Because right now we're at 48-48 in the Senate race, but that includes two Republicans who are ahead in North Carolina and Alaska. They're expected to prevail. So if the Democrats are going to get to a tie, which would mean that if they get the presidency, they have one extra vote. If they're going to get there, they have to win both of those runoff battles.
All right, so that's some of the horse race that's going on. There was also an interesting election out there in Arizona with regards to the Senate races. And I'm curious, David, if you could shed a little light on sort of what's been happening with sort of the electoral map and some of the changes and maybe the ways people are voting this time around.
Well, it's a fascinating question, Romaine, because we've seen this in 2 or 3 important states, and Arizona is certainly one of them. And it all has to do with Maricopa County, which is the largest county in the state, by far the most important. It has shifted dramatically in the last 4 years, even the last 2 years. The demographics have shifted. Also happened in Georgia, also happened in North Carolina, and you're seeing a very big difference. So you're now seeing the Navy captain astronaut, Mark Kelly, who is now going to be the new senator from Arizona, beating another aviator, a Marine aviator actually, out there for the Senate seat.
David, I'm curious if it's too early to talk about some of the analysis that we've seen in the geographic shift from COVID-19, the flight out of cities into suburbs, how that has changed some of the counting underway, the flight out of California into states like Arizona, New Mexico, what that has meant sort of long term for geographic changes.
Well, it'll take time to figure out what it means long term, but one of the things we do know right now is that the Trump campaign has been suggesting that there are some votes in Nevada, which is still open and could be a key state, that should not be counted because people had moved away and were voting from out of state back into Nevada. So it may become an issue even with some of the disputes. But the important thing, I think, maybe is the President of the United States, Donald Trump, came out with a statement today that most people take as his conceding the only way he's going to win this is in the courts.
All right, David, we're going to let you go. We know you're busy. Of course, that's David Weston. He hosts Balance of Power here on Bloomberg Television, Wall Street Week as well, and of course leads most of our political coverage. Definitely check him out throughout the day here. Now let's get over to Taylor with the Business Flash headlines.
Let's get to it, Romaine. People, they may tell you they're drinking more at home during the pandemic or, well, maybe during the election. Still, that hasn't helped the makers of beer, wine, and liquor. Dow Jones looked at some of the major players. Diageo, the maker of Johnny Walker, and Smirnoff, they're down 16%. The owner of Corona Beer and Robert Mondavi Wines, Constellation, it's down 4%. Analysts say the companies won't recover until restaurants and bars completely reopen. Standard Chartered CEO Bill Winters says that a President Biden would be more likely to engage with China. Bloomberg spoke with Winters on the sidelines at the Hong Kong FinTech Week.
I'm an optimist. My hope would be that with an element of engagement, that China and the U.S. would begin to act on what they both recognize to be the underlying case, which is that the world and each country is better off cooperating rather than purely competing. But we don't think that competition is going to go away completely either.
And another big stock we're following this hour, quarterly sales, they more than doubled at Square, the San Francisco-based payments company. Well, they said that they underscored a surge in demand for stock purchases and other financial transactions by customers cooped up during the pandemic. They were using Square's peer-to-peer payments application called Cash App. It lets users send money to friends, buy stocks, and store money like a bank account. That's your Business Flash update, Romaine.
Yeah, Square shares up 15% at a record high. Another stock at a record high today, T-Mobile. It's our stock of the hour. Shares trading up here after the company setting a new subscriber high mark. Bloomberg's Dave Wilson here to tell us a little bit more about what's going on. T-Mobile, is this all about Sprint or is there something else here?
Well, it's about Sprint to some extent, no question, because, you know, they spent tens of billions of dollars on the company. It's helping them with their growth. The company had been looking to add 1.9 million subscribers in its third quarter, and it got just above that, 2 million. So what they ended up with as a result is more than 100 million total customers for the first time. And, it also helped in terms of their top and bottom lines. Revenue up 9%, surpassing $19 billion, $1 billion more than analyst average estimate in the Bloomberg survey. And in fact, that was the biggest peak in percentage terms since 2011 for any quarter. Now, as far as earnings go, you're talking about more than double the average estimate of the analysts that we survey here at Bloomberg. So, things are working out for them so far. And beyond that, it's not just about growth in the business. It's also about bringing these two companies together and being able to cut costs. And now T-Mobile is going for $1.2 billion in reductions this year. That was double their original forecast. So on the cost-cutting side, things are going their way as well.
I wanted to follow up there, Dave. On the cost-cutting side, you think synergies, where are we within the T-Mobile and the integration and the synergies and the cost-cutting when it comes to Sprint?
Well, things are coming along, Taylor. In the latest quarter, T-Mobile said 15% of the customer calls from Sprint subscribers were handled on the T-Mobile network. They're in the process of starting to move customers over from Sprint to T-Mobile. They've actually split up the process of integrating their networks from integrating their billing so they can kind of move that along. And, it helps to some extent that, you've got this wholesale shift going on to 5G wireless service at this point. And their CEO, Mike Sievert, talked about on a conference call about how that build-out is, quote, tracking well ahead of schedule, end quote. So that puts them in a better position to be able to move over the Sprint subscribers and realize those cost savings that they were looking for, and maybe then some.
All right, T-Mobile here. Our stock of the hour up pretty strongly here on the day. Bloomberg's Dave Wilson, have a wonderful weekend. We're going to go from one stock of the hour to another big stock out there moving right now. CVS Health, their shares right now on pace for its biggest intraday gain in 7.5 months. This after the company making a very interesting pick for CEO, the former president of Aetna, now going to lead CVS Health. What does this mean about the strategy for the company going forward? We're going to talk about that next. This is Bloomberg.
Mostly, I'm confident because we have so many shots on goal, really an unprecedented number so quickly. So I think science will win in the end. It's just hard to pick the winner at this point in the horse race.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising. All right, time now for top calls to look at some of the movers on the back of analyst recommendations. We're going to start off with Roku, getting praise across the street today after those Q3 results that beat expectations across the board. Benchmark raising its target to a street high, matching $300 a share. The analyst saying that success Roku is having with its partnerships is helping combat negotiating leverage concern. Shares here up 12% on the day. Next up, we're going to take a look at Uber. That price target being lifted over at Morgan Stanley despite some lackluster results in the third quarter with that ride-hailing business, but the analyst staying bullish on platform growth and sees a clear path to profitability ahead. Shares here up 6.5%. And finally, take a look at JP Morgan lifting its price target on Peloton to $145 from $125. This despite some of those supply and cost issues that the company talked about. Those long delivery times, those long customer service waits, and the cost to fix supply chains. The analyst says those are good problems to have. It's a sign of strong demand. Shares of Peloton today up about 1% on the day, and those are some of your top calls. Caroline?
Romaine, let's look at another company that's on the green side. CVS Health climbing after the pharmacy chain named Karen Lynch as its next CEO. It's a sign that it could be shifting towards the insurance industry. Of course, she came from Aetna, which the company purchased. CVS also boosted its full-year forecast as it prepares to play a role in vaccinating people for COVID-19. Let's get more analysis on this business. Brian Tankerud is with us. Jefferies healthcare services analyst, has a hold rating, $66 price target on the stock. And Brian, I always like stories where you see another woman helming an S&P 500. I'm biased, obviously, but she's important because of the insurance side of her remit, of where she comes from. What does it say about where CVS is going?
Hey, thanks for the call, Caroline. Nice to chat with you today. But yeah, to answer your question, I think it's very, I share your sentiment. It's nice to see Karen take over the reign for CVS. But as I look at the strategy, I think one of the key things for CVS is that they're certainly pivoting from just being a retail pharmacy chain, from being focused primarily in the pharmacy business with their acquisition of Caremark, PBM back in 2008. By acquiring Aetna, it was a clear sign that they were pivoting the strategy to go into healthcare much deeper. And so I think giving Karen the CEO spot is very strategically aligned with what they're trying to do, that this is their key focus now. This is where the industry is going, and we think that we need someone with experience and knowledge base in the healthcare space to run the company. So I think it's a great it's a great promotion for Karen, and I think it'll be great for CVS.
So with regard to the speculation now about where CVS goes as a company, the idea that they move a little bit deeper into being a healthcare provider, potentially, a lot of folks, of course, speculating about the insurance angle of this, given the background of the new CEO. Is there a sense here that CVS is maybe entering into, I guess, a more competitive landscape? Are you concerned here that they are maybe creating a little bit, maybe too much competition for themselves?
Yeah, that's a great question, right? I mean, if you think about it, the base of the strategy is still the fact that CVS owns, almost 10,000 retail stores around the country, and that you are building a healthcare offering off of that footprint, right? So if you think about what they've done over the last few years, adding the Minute Clinic to the offering on the retail side. I mean, before that time, there wasn't really much retail-based, clinic businesses in the U.S. other than your physician's office. So I thought that was a good strategy. And then now they're adding what we call the health hubs, where, we call it jokingly the genius bar of healthcare, right? Where you can get people with chronic diseases, you can get people with sleep apnea, you can basically throw a lot of care delivery and care management beyond just your flu shots and getting checked for strep or the flu at the Minute Clinic, right? So it's still a retail-based strategy. And if you look at that, I mean, there is not a lot of differentiated competition in that space. I know you have you'll have the One Medicals or the Oak Streets of the world, which are care delivery platforms with physicians and nurses, but this is more of a consumer experience, retail-driven strategy centered on healthcare. So I actually think they're differentiated in that regard.
Brian, within your coverage universe, is CVS set up nicely, given the retail footprint that you mentioned, the health insurance services that you mentioned? Can they appropriately take advantage of this pandemic relative to some of the other companies that you like?
No, that's a great point, right? Because I think that what they've shown is that retail actually during the pandemic has played a key role, right? I mean, if you think about testing, CVS has administered 6 million COVID tests already, and they were one of the tools that the government essentially was able to use to accelerate COVID testing. So I think they've cemented their place in the healthcare ecosystem and how important they are. So that's number one. But as I look at to your point, I think that the key topics in healthcare today are consumerism, home or alternative sites of care, and CVS has a footprint there through their core home infusion business. So they've got their toeholds in the areas that matter and are growing in healthcare. So I think they're in a very good position. It's just really a question of getting out of the COVID pandemic to drive demand for the pharmacy side of the business. Seeing what happens with commercial enrollment, their ability on insurance, and then their ability to continue to gain share in the Medicare Advantage side as a demographic shift that's happening in the U.S. Drives enrollment in these Medicare Advantage plans as we get more seniors.
Yeah, interesting story developing here. Of course, CVS investors seem to like what they see. Brian, really appreciate you taking time to break down your call here. Brian Tanquilut, he's Jefferies Healthcare Services Analyst. All right, let's get a check on what's happening in the broader markets here. We are a little softer here on the day, but this is still going to go down as one of the best weeks that we've had here in U.S. equity markets going back to April. Right now, Caroline, the S&P 500 up 7% on the week. The NASDAQ Composite up 9%.
Dollar, lowest weekly level that we've seen since April 2018. What a move in terms of FX. What a move in terms of VIX, Taylor, now at a 25 handle.
The migration downward has been stunning this week from a 40 to now a 25. This is Bloomberg.
So when you went to Baltimore, you went initially to be an anchor woman, and then it didn't quite work out.
Yeah, I got fired.
Well,
demoted. I was
got demoted, but they didn't. They had a contract, so they didn't say goodbye. Yeah. And then, how did you work out to be on a afternoon show where you actually got to be an interviewer? How did that actually happen?
Well, what happened was this is what I now know with age and perspective, that many times getting demoted is an opportunity for something else to show up, or getting fired. Lots of people I've interviewed over the years who have these stories about the best thing that ever happened to you. It puts you in the next best place. I was not a good television reporter. I was too emotional. I was making $22,000 a year, and my best friend Gail, who I met there at the time, she was also working there. She said, "Oh my God, you're 22, making $22,000. Imagine when you're 25." Then you're 30. So I'd be making 60 about now. It'd be good, 62. Once I got demoted, they didn't want to pay out my contract. I was making $25,000 a year. They didn't want to pay me the $25,000. Right. So they kept me on and said, "We'll put you on this talk show just to run out your contract."
I'm David Weston. Bloomberg Television is reinventing one of the most iconic brands in financial television for a new audience. Join me to see the news program for the clever investor. This is Bloomberg Wall Street Week.
Give you a sense of the real-time action. The 10-year yield tumbling now 11 basis points, so continuing in this knee-jerk risk-off feel.
I'm Mark Crumpton with Bloomberg's First Word News. President Trump says the American people deserve to have, quote, full transparency. In a statement, the president said this isn't about any single election, that it's about, quote, the integrity of our entire election process. He added that his campaign will pursue the process, again quoting, through every aspect of the law. The president's trailing Joe Biden in several key battleground states, making his re-election look increasingly unlikely. Georgia election officials say they will likely need to recount all votes cast in the presidential race. President Trump and Joe Biden are separated by about 1,500 votes, with Biden holding the lead. Georgia law permits a candidate to request a recount when the margin is within 1/2 of a percentage point.
We're investigating any credible accusation with any real evidence behind it. But let me tell you one thing.
So quick.
When you have a narrow margin, little small things can make a difference. So everything's going to have to be investigated to protect the integrity of the vote. Our office intends to do that. And like I said, if you get a wide margin, it doesn't matter as much. A narrow margin, it does.
Each county in Georgia will have to certify its results, followed by an audit before any recount begins. That process could take a while, and Georgia officials say the race may not be certified until the end of the month. Upstate New York is driving a new phase of the coronavirus pandemic. Governor Andrew Cuomo says the state saw more than 3,000 new cases in the past 24 hours for the first time since May. Hotspots have cropped up in western and central New York, as well as along the Pennsylvania border. Governor Cuomo says residents in those areas haven't been following social distancing or mask guidelines. The U.S. labor market got stronger in October, and employers added 638,000 jobs, beating estimates. And the unemployment rate fell 1 full percentage point to 6.9%. That was double the prior month's decline. Still, the number of long-term jobless Americans surged and now makes up a third of those out of work. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Mark Crumpton. This is Bloomberg.
We are counting you down to the close. Just 1 hour left in trading on this Friday. I'm Caroline Hyde.
And, of course, markets softer on the day, but a monster week here. The S&P 500 up more than 7%. I'm Romaine Bostick.
And I'm Taylor Riggs. Like you said, let's just get right to it because it is Friday. We have 57 minutes left, and then we are almost there, you guys, after what has been just a crazy week with the elections and some of the economic data that we've gotten this morning. As you take a look at the individual sectors, some of that risk-off tone that you mentioned, Romaine, on the individual sector certainly playing out, where you have staples, you have tech sort of leading the way. Some of the more cyclical sectors like energy and the financials are some of the big underperformers today. What is interesting is we are not seeing that in the bond market. Yields are higher on the day. We're up 6 basis points, but for the week, we're actually down 5 basis points. So we're all over the map. Generally, the trend has been up. Some of the economic data remain this morning stronger, and you wonder if some of that reflation trade's trying to be priced back in within the bond market.
Yeah, and we should point out that the market moves this week aren't necessarily an endorsement of a Biden victory per se. It's more of an endorsement that an outcome itself will be known, and you could actually see this reflected in some of the FX volatility, which really sort of dropped here over the last couple of days. You get a sense here that when you look at some of the main JP Morgan FX Global FX Volatility Index, which shows you that drop, it gives you a sense here that folks really have an idea that at least the outcome itself will be known, and that provides a little bit more uncertainty. Whether it is Trump, whether it is Biden, at the end of the day, you can make a decision about how you feel about policy decisions going forward and work that into your bets, Caroline.
But can you work in where stimulus bets go? At the moment, the bickering continues between the White House, Nancy Pelosi, and we've heard from her a little bit earlier.
We must also move swiftly for a new coronavirus relief bill. To continue that, we want the Republicans to come back to the table, the White House, the leadership, whatever. 100 for 2 days in a row, over 100,000 cases were reported.
Lest we forget, COVID still an issue. Lest we forget, fiscal stimulus still an issue. But of course, we got to, with that labor data that you smartly mentioned, Taylor, maybe the pressure comes off of such a big stimulus deal in the lame duck session, even though we see like some moves from Mnuchin, from even Larry Kudlow speaking that a deal is still wanted.
The market's certainly hoping for any indication of what and when and what type of stimulus that may be, Romaine.
Yeah, so you have to start looking forward here. And who better to do that with than with Christina Hooper? She's the Chief Global Market Strategist over at Invesco, joining us today from Greenwich, Connecticut. Christina, happy to see you here on this Friday. Let's start off, I guess, with Congress, with Washington, which, of course, has been on everyone's mind now for the past few months. The general idea here is that we are going to end up with a divided Congress in some form or another. Is that actually a net positive for the markets?
That is definitely a net positive for the markets over the long run. What we know historically is that when we have divided government, that's when the stock market tends to perform better. So I think it's a positive in the long run. However, it could be problematic in the short run if we can't get a fiscal stimulus package. We know we need it. We know that COVID infections are on the rise, but there seems to be a real reluctance. And so I think that could be something of a negative in the short run, but again, positive over the longer run.
And that's exactly what we were just hearing from Pelosi, talking about the need within COVID to get a fiscal deal done. But that data that we saw earlier today, Christina, talk us through it, the jobs data. How much are you baking that into actually a better picture in terms of the economy? And how much is sometimes good news, bad news, because it takes the pressure off a bigger fiscal package?
Well, we have to recognize that every jobs report we receive, we're looking in the rearview mirror, right? And so what we have to look forward to, unfortunately, could be a more difficult environment, just given where COVID-19 infections are going, which is on the rise. Unfortunately, all we need to do is remind ourselves of what happened this past spring, where what was happening in Europe was the near future for the U.S. What we see in Europe, of course, is a very significant rise in COVID-19 infections. And of course, they've been forced to have some significant lockdowns, even though there was great reluctance on the part of leaders to do that. So that could be our near future. And so we need to think of the COVID-19 infection crisis as one that necessitates regular tranches of stimulus. Almost think of it as coupon payments on a bond. Until we get a vaccine, we need to have some level of stimulus to keep businesses and households afloat.
Christina, big swings in the bond markets this week. What are 10, 30-year treasuries telling you at this moment?
Well, they're telling us a different story, right? What we're seeing is different factors impacting the 10-year, different factors impacting the 30-year over the course of this week. We saw pretty wild swings as expectations changed. But I think what we're hearing is that rates are likely going to remain very low. And while we expect economic growth, and so we've seen some kind of increase in the 10-year, we're not expecting robust economic growth in the short run. We're not going to get a big fiscal stimulus package. So it's certainly a reflection of the changing views and expectations over the course of this week.
And so if we don't get that, I mean, let's say you're a corporate CEO now. You're trying to sort of look out over the next couple of years, get a sense on what customers are going to be spending, whether it's consumers or whether it's business clients. Is there a general sense here that that type of spending, where both consumer spending and business spending, can at least sustain itself at sufficient levels to justify the valuations that have been baked into this market?
Absolutely. I think what we can expect, first of all, we are very lucky in that this pandemic is occurring now as opposed to 25 years ago, when you couldn't make purchases on the internet, when we didn't have such a robust digital economy. So that the inability to get out and be mobile really meant an enormous drop in demand, an enormous drop in economic activity. That is not the case today. So that as long as households have some level of income, whether it's from employment or government subsidies, they can continue to purchase goods. So even if the situation gets worse, even if we see mobility go down, we'll see some level of economic activity driven just by the internet. So this is not as dismal a picture as it could be in a different era. And that's one thing to keep in mind. Also, we recognize that many households are getting more optimistic. Now, that could change as the pandemic wears on over the winter, but it may not. It could be that households are looking forward to the real potential of having an effective vaccine arrived at and ready for mass distribution by mid-2021. So I think this creates an environment where there are short-term headwinds, but there is likely going to be a very robust recovery once we get past that.
Christina, has there been one market move that's led you to scratch your head and not quite get this week?
Well, the dramatic run-up that we've seen over the last few days has been a head-scratcher, just given that there has been, these are very slim margins. We're still in the contested phase of the election. So it's not an all clear signal that we know a decisive winner. This could drag on for weeks, as it did with the 2000 election. So I am surprised with just how robust the stock market gains have been this week. That, to me, has been the big head scratcher.
Embracing uncertainty. Who'd have thought it? The market did. Christina Hooper, wonderful to have some time with you. We wish you a happy and healthy weekend. Chief Global Market Strategist at Invesco. For more market coverage, make sure you stick with us, Bloomberg, and of course tune in to Wall Street Week. David Weston, he's on telly again. He's a busy man, and that's at 6 p.m. Eastern tonight. Coming up, though, it's a green landslide. One certainty we saw from Election Day was cannabis companies. Well, they're getting many states voting for legalization. We'll speak with Curaleaf Chairman Boris Jordan on that. Plus, a surge for Square, why the company's potential development of a super app has the shares rallying after earnings beat estimates. And hopes of a reflation trade, do they dwindle? As the likelihood of a split Congress and a more modest stimulus increase, investors are losing their bets of a return for inflation. But what then of the latest Georgia news and the runoff? We'll discuss all of it. This is Bloomberg.
Women leaders were actually better at controlling the deaths from COVID-19. Do you think out of this pandemic, we'll see more countries be willing to elect female leaders?
When we look at women leaders, we tend to project on them baggage that they shouldn't bear.
Women are given an opportunity when no one else wants to do the job.
Women had a very clear objective. They wanted to save lives.
The women leaders, if you look at their careers, have also built up a level of trust.
In fact, women have to be better at communication in order to be elected as leaders, whereas this doesn't hold true for men.
We need to get those sexist stereotypes out of our head and give women a fair run for leadership.
Trying to change the stereotypes about women is not only the business of women, but men have to be part of it.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
I don't remember a time, and I've been investing for over 50 years, I don't remember a time when I've seen such volatility as we see today.
You guys, we are just 46 minutes away from almost the home stretch. What has been an exhausting week within the markets, exhaustion here at Bloomberg TV, but we are almost there. And here are some of the big movers on the week that we have been watching. Caroline, for me, it's always been about these pot stocks because you did get some legalization in New Jersey, Arizona, but if you get that Republican-controlled Senate, you may not get a big national expansion and a national reform. So what we're hearing from analysts, Caroline, that if you're a Canadian company, for example, you might not be doing well. Some of these individual individual companies who have a big presence in states like New Jersey and Arizona. Stifel analysts saying Curaleaf, one of those to watch with big potential.
Big potential, and we speak now to someone with big potential over at Curaleaf. It is Boris Jordan, Executive Chairman. What a week. You call it a green landslide. We're still uncertain where the Senate falls, but talk to us about what this means just for the legislative moves we've seen in 5 states.
So I think this has been a tremendous week for our sector. I think that it's a further validation. Early on in COVID, we were made an essential service, and now 5 major states, including both blue states and red states, have approved adult use cannabis. Of course, the most important of them being New Jersey, Arizona, South Dakota, approving both medical and adult use, and Mississippi approving the more liberal part of the ballot on medical. So this has been a very, very good week for cannabis. But most importantly, as I said, has been the New Jersey decision, because immediately following the New Jersey decision, which passed with a tremendous majority, you had both Governor Cuomo and Pennsylvania come out and say, we have to move towards adult use because they don't want the problem in interstate traffic between the 2 states. And obviously Connecticut would follow. Yeah. And for Curaleaf, our company, this is a great moment because we're the largest operator with a 40% market share in Arizona. In New Jersey, we're the 30% biggest operator in New York, biggest operator in Pennsylvania, Connecticut, and the second biggest operator in Arizona, which is one of the larger cannabis markets in the market. So it's been a very, very good week for us.
Yeah, Boris, a great weekend. I mean, obviously, I guess the social mores have changed enough where voters out there are willing to sort of embrace the legalization and decriminalization of something that was demonized for so many years. You still don't, though, have a coherent sort of federal approach to marijuana and cannabis legalization, particularly when it comes to financing some of the companies out there that are doing business.
So, we have the HEROES Act, which your previous speaker talked about. The safe banking is part of the HEROES Act. So if they do return back to the HEROES Act, we suspect, especially if you get a Biden presidency and a Democratic House, we suspect the pressure on Mitch McConnell in the Senate will be to pass the HEROES Act in some form. And at the moment, there's no guarantees in Washington, as we all know. We can see it right now. But that the Safe Banking Act would be a part of that. That would absolutely transform our ability to raise capital and, more importantly, bring down the cost of capital dramatically.
If you start to think of this as a basic commodity with supply and demand, I'm curious about how you look at that. Is there an oversupply? How do you think about that strategy if it really is a supply and a demand market?
So the difference between the U.S. and Canada is that we are massively undersupplied in the United States, largely because the cost of capital was very expensive in the early days of this industry, continues to be very expensive. And so very few players had the wherewithal to go out and build the infrastructure to supply the products to the customer base. And so today, in every market we operate, and I literally say that in every single market, we are undersupplied with cannabis products, whether it be highly formulated products or whether it be plain flower. There just isn't enough. And so the market continues to grow exponentially. Curaleaf is showing tremendous growth numbers of 30+% on a quarterly basis, and it will be several 100% on an annual basis. So I think that we're going to be in that position for a while until the federal government steps in and decriminalizes, and more importantly, reschedules THC from a Schedule 1 to Schedule 2 drug. And then I think what will happen is more players will get involved. The commodity will drop in price because there'll be more of it available because more money will pour into the sector. And that will stabilize and normalize, I'd say, the situation. But at the moment, every market we go into that goes from medical to recreational, like New Jersey and Arizona, usually has a threefold increase in demand. And prices tend to go up rather than come down because there isn't enough product to supply the marketplace.
Interesting then. Boris, you've said it before that you don't mind new entrants, you don't mind the competition that's out there, because for you the biggest competition is actually the illegal side or how does that end up looking? How does that square itself in a state like New Jersey?
So it's very difficult to compete against the illegal market for two reasons. Is our cost of capital is high, and we basically pay around 50% taxes. Because of the 280 tax, which is a tax on any Schedule I drug, which the US government put in place back in the 1970s, never anticipating that this structure of cannabis would come about as it has in the last 10 years. And that hasn't been removed. And because of that, the cost of our capital is, low teens, and the tax rates are around 50%. And so we have to basically sell our products at such a margin in order to be able to cover all of that, to eke out, even a small profit. Now, we anticipate that with these things will change. We think that the 280 tax regime will change. The MORE Act, which has been approved by Congress twice, removes 280E and puts an excise tax similar to the one you have in the tobacco industry on cannabis. That would change the picture quite dramatically for cannabis companies and free up a tremendous amount of cash flow for investment.
Okay, so Boris, then, what's next here? I mean, we've pretty much have, I guess, the general trajectory here for regulation, for legislation, and even a path here, I guess, at the federal level. There is a sense here that even if you sort of get all of the roadblocks cleared here, there is still the question of demand. We saw that some of the loftier expectations in Canada with regards to demand and consumer demand didn't necessarily materialize. What are you expecting there?
So I disagree with that. Canada's problem has nothing to do with demand. Canada's problem has to do, again, with over-regulation and over-taxation, which hasn't given them the ability to compete with the black market. New Jersey is an example of a state that's doing it right. It's starting out at a low tax rate in order to give the companies the ability to compete with the black market, squeeze the black market out, and then you can start to increase taxes. California did it exactly the wrong way. They started with very high taxes, and actually the black market has flourished under that tax regime. And so what's very important is to liberalize the industry, give the operators an ability to compete and squeeze out the black market, because the black market is why we had the vape crisis.
Yeah.
The black market is why we have drugs being sold or cannabis being sold to minors. We need to squeeze the black market out. And that's why I'm so concerned about decriminalization. Because if you have decriminalization before you have legalization, you're going to only help the black market. You're not going to help the legal players that are regulated and are selling safe products to adults. And I think that's a very, very important point here. But you'll find that New Jersey was the tipping point. And I think that as New York and Pennsylvania go recreational, 80% of the US population will have access to adult use cannabis. And no matter who's president and no matter who's in the House and Senate, they will be forced to address the issue of federal regulation of the cannabis industry.
Boris Jordan calling it here. Curaleaf Executive Chairman, great to have time with you. We thank you. From New York, this is Bloomberg.
We explore the trends, investments, and competition of the European ETF industry. Join us on Bloomberg ETF IQ Europe.
We have some breaking news around Biogen. Shares have been halted pending further news, but the news that we have right now is that their study has failed to show Alzheimer's effectiveness. This is from an FDA panel which had voted 8-1 against backing the study's effectiveness. We do know that they're going to vote on 3 more questions related to Biogen's drug. For now, shares halted. We'll bring you more news as we get it. Time now for Options Insight, though. I'm going to be looking at the rally in tech and here to help break it all down, Kevin Kelly of Benchmark Investments. Kevin, Q's really been on a tear this week. What's your takeaway from big tech?
Well, what's interesting about big tech right now is you're seeing about 2 times the amount of puts being traded with an elevated volatility of about 31 versus what's happening with S&P 500 VIX at 25. So that's pretty telling that there's anticipated to be more volatility over the next month in technology. And that's pretty telling given the fact that we've seen sector correlations come down actually over the last month. So if you think about tech in general, it only has a 0.53 correlation to financials. And financials, are having a tough time after the election. So that's pretty telling about what's going on with different correlations amongst the sectors.
Kevin, we only have 45 seconds. What's your trade around Square, big earnings that we've been watching?
Yeah, big earnings, but it still has high implied volatility at 58. So what you could do here is you could actually purchase the stock just under 200, sell the December, 42 days left, 210 call, get $11 for that. Your cost basis is 189. You have upside to 210. And we are seeing about 2.5 times the amount of calls being traded today, post-earnings versus put. So that's very bullish sentiment.
Kevin Kelly of Benchmark Investments, thank you for joining us for Options Insight today. And we're taking a look at markets getting a little bit of a leg lower here as we head into the close. We will be watching, of course, news around Biogen as well. This is Bloomberg.
This is Bloomberg Best, your weekly review of the most important business news, analysis, and interviews from Bloomberg Television around the world.
Ken Burns, welcome to Bloomberg Big Decisions.
We have always been a mixture of things. We are always stronger for that mixture.
Growth is a way to stay competitive, delight more and more consumers.
Welcome to the Best of Bloomberg Technology. I'm Emily Chang.
They've moved the needle by acknowledging that they have to monitor the content.
What is one word of advice you'll take with you?
Learn how to listen
And that is certainly something that has served me well.
Ankiti, where do you go from here? It's a huge market, it's a huge opportunity. I want to go 100x from here.
Our philosophy is to partner where we can and stand apart when we should.
There are $3 billion being prepared. So the lending program has increased. So that's the very important feature we did not expect.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
I'm Mark Crumpton with Bloomberg's First Word News. The battle for the White House continues. The Trump campaign, has filed at least 6 lawsuits in battleground states since Election Day to challenge the ballot counts. Republican and Democrat activists have also filed suit, but only a few of the cases may have a real chance to affect the final outcome, and only if the races remain extremely close. House Speaker Nancy Pelosi says that she wants Republicans to, quote, come back to the table and discuss the coronavirus stimulus package for enactment this year. She also expressed her confidence in Mr. Biden winning the 2020 presidential election.
Pretty soon, the hyphen will be gone from Vice President to President-elect Joe Biden. It's a happy day for our country because Joe Biden is a unifier, because he is determined to bring people together, because he respects all points of view, and as he has said, I ran as a Democrat, I'll govern as president for all of the people, whether they voted for me or not.
Speaker Pelosi added that the election has been, quote, a life or death fight for the fate of our democracy. Officials will take another crack at reaching a Brexit trade agreement this weekend. The British Prime Minister Boris Johnson and the European Commission President Ursula von der Leyen will speak by phone on Saturday. After 14 straight days of talks, the two sides are blaming each other for the lack of progress. The discussions are stuck on 3 big issues: the so-called level playing field for business, access to British fishing waters, and how any potential deal is enforced. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Mark Crumpton. This is Bloomberg.
Just half an hour left in the trading day. This is Countdown to the Close. I'm Caroline Hyde.
I'm Romaine Bostick.
And I'm Taylor Riggs. Like you said, Caroline, we're almost there. We're at 27 minutes, and then we can hopefully breathe a big sigh of relief, as this has been certainly an exhaustive week. But let's get right to those markets, because on a sector basis, Romaine, you do have a little bit of a defensiveness feeling underway. You have staples and tech, sort of the big defensive plays, the big outperformers, and on the bottom, some of the more cyclical sectors like financials and in energy. Healthcare right there in the middle, Romaine, and that's interesting given some of the moves that we are seeing in individual stocks.
Yeah, one of the biggest movers of the week in the S&P 500 was Biogen, up 30% on the week. It looks like that might actually change right now. You're seeing unchanged on your screen. Those shares are halted, expected to be released before the close of trading. Right now, an FDA panel is actually voting on the effectiveness of that Alzheimer's drug that Biogen had been developing, voting 8-1 against backing the study's effectiveness. There are 3 more votes addressing basically the validity of this drug that have to be decided at some point today. Remember, this is just a panel vote, so the FDA itself still would have to make a final decision in March. But remember, these shares had rallied 40% a couple of days ago on a report that came out that seemed to suggest the FDA was actually leaning towards approving the drug. But so far, this first vote that we have out right now, taking a little bit of optimism here off. You see its Japanese partner here, those ADRs down 20%, and Eli Lilly, which is developing a competing Alzheimer's drug, down 2.5%, Caroline.
Romaine, it's quite nice to remember that there's corporate news, there's corporate stories out there today, hey? And I'm going to go back to what's actually happening in terms of earnings season. Remember, we're still in it, and for today we get a bit of a pause in the numbers. Of course, it's a Friday, but look at how good they have been. Of the about, 400 or so, 431 companies, in fact, that have given us their earnings in the S&P 500, 86% have beaten in terms of EPS, about 65% have beaten in terms of revenue. It's healthcare, it's technology that have been outperforming there, Taylor.
Well, and I'm taking a look at another stock, of course, that we're following today. It's shares of Square hitting a record after quarterly sales more than doubled, underscoring a surge in demand for Bitcoin trades, stock purchases, and other transactions by customers all cooped up during the pandemic. For more, let's bring in Julie Charel, Senior FinTech and Payments Analyst for Bloomberg Intelligence. Julie, just reading through the analyst notes today, it seemed like this, quote, super app is really going to be the future of Square. What is a super app?
Yeah, absolutely. So it's called Cash Card, and Cash Card really is essentially a digital wallet. And what Square has done really masterfully over the last few years is add more and more products, more and more functionality to this digital wallet. More products means more engagement by their customers, right? Getting to daily use, daily openings of this app. And then that means more transactions and more revenue. And we really started to see all these different services come together nicely to generate revenue in the third quarter.
It is notable that, of course, Jack Dorsey, the CEO, that and Twitter, of course, has been a big believer in cryptocurrency, has been buying it himself, of course, about 50 million the company has bought of Bitcoin. How much do you think we will see perhaps a bit too much enthusiasm because of the crypto element, or how much do you think that the share price rally has been vindicated?
Yeah, so the key to their offering in crypto, and it's Bitcoin specific, the key to it really is about bringing more users to the platform. It's not so much about just racking up profits. It's actually a very low profit margin business for them, but it grew tremendously. So they're getting now about $1.6 billion in revenue. Only about 2% of that comes out as profit. But what it does do is bring users to the platform. And when those users come to the platform and they come to the app, they may trade their Bitcoin, but they'll also do a lot of other things that they can do on the app, like getting a debit card, spending with that debit card, maybe putting their direct deposit of their payroll into the Cash App wallet, doing stock brokerage transactions, fractional investing, lots of other things that they can do once they get there. And that's really what's been the key to Cash App's great growth.
Yeah, Cash App, phenomenal growth here, but there's also some concerns here, Julie, about competition. I mean, there are plenty of competing platforms out there. Of course, PayPal, Apple developing its own as well, and there's nothing really to stop any of the traditional banks from getting in on this should they decide to do so. Why should Square investors not fear that competition?
Yeah, I mean, this is going to be a competitive space no matter what. You know, COVID-19 has brought along online shopping. It's brought along with it this goal for contactless payments. And wallets, these digital wallets, are going to be the way to make that happen. To Square's benefit, it's been ahead of the game in adding new products and services to its wallet. So it has really the most robust wallet out there in terms of the variety of things you can do. But for sure, the competition is on its heels. Probably closest is PayPal between its own wallet and then its other product, Venmo, which is a big P2P payments app. So PayPal absolutely is going to be digging in hard. They did just announce a crypto product a few weeks ago. So the competition is coming. You know, the hardware providers like Apple, Samsung, Google on the phone side do have some of the embedded advantages of being able to pay with the wallet right with your phone very quickly. But not nearly the services that we're looking for yet.
Julie Chariel, what an interesting story. We thank you for shining light on Square. Of Bloomberg Intelligence, happy weekend. From New York, this is Bloomberg.
All right, it's been almost 3 days since polls closed here in the U.S. to decide, of course, the next president of the United States. That vote count still not done. Joining us right now is Bloomberg's Greg Giroux to give us a little bit of an update here on where we stand. Greg, right now, all eyes on 3 states pretty much right now: Arizona, Georgia, and Pennsylvania. Start with Arizona. Where do we stand there?
Well, in Arizona, Joe Biden had a lead there on election night, and that's one state where President Trump has been whittling away at Joe Biden's advantage, but not by the margins that the president needs to overtake Biden in that state. 11 electoral votes are at stake there, and we still have a lot of votes left to cast, especially in Maricopa County, which is the largest county in Arizona. It includes Phoenix. But the president would have to dramatically increase his percentage of votes that he wins in those outstanding ballots to have any chance at overtaking Biden in Arizona. I think Biden merits the edge right there, right now.
Sticking with just the presidential race, it seems to hinge on Pennsylvania to a large extent. With that, all bets are off, right, because of the amount of the electoral votes?
Yes, Pennsylvania has 20 electoral votes, so if Joe Biden wins Pennsylvania, it's over. If he's currently leading in Arizona, Nevada, Pennsylvania, and Georgia. If he wins all 4, he'll finish with 306 electoral votes, well above the 270 needed for victory. In Pennsylvania, Joe Biden took the lead this morning, and he'll continue to increase that lead, most likely because he's doing quite well, winning more than 70% of the vote in the mail-in ballots, and about half of the 113,000 or so mail ballots left in Pennsylvania are in very strongly Democratic areas like Philadelphia and Pittsburgh.
And Greg, you mentioned Georgia. We now have 2 confirmed Senate runoffs now that we'll get in that state come January.
Yes, it's really extraordinary. The Senate right now, it could be 50 Republican, 48 Democratic. And so you'll have those 2 runoffs in Georgia that will be January 5th of 2021, which is also the week that the electoral votes are counted and that the new Congress will convene. And the only way that Democrats can forge a tie in the U.S. Senate, presuming that the Republicans also hold on in Alaska and North Carolina, the only way that Democrats can get to that 50-50 tie in the Senate is if they unseat Republican senators in both Georgia runoffs, and if the Biden-Harris ticket wins, because then a Vice President, Kamala Harris, could act as a tie-breaking vote in a 50-50 Senate.
So, Greg, of course, as we count all these votes, there are still legal challenges out there, primarily from the Trump campaign. What do we know about the state of those challenges right now and whether they are likely to be successful?
There's a dizzying amount of litigation. It's typically a very litigious period, right after the elections, and we have close races like this. I think the Trump campaign has failed more than they've succeeded in some of these legal challenges right now. But there may be a recount in Georgia, but even there, where Biden has a very small lead, recounts very rarely change the outcomes of elections. I think that Biden is up there by about 1,600 votes. I believe that the Trump campaign would also want to seek a recount in Wisconsin, a state that's been called for Vice President Biden, but he's up by about 20,000 votes there, and I don't think a recount would alter the outcome of that election as well.
Greg Giroux, thank you, as always, for giving us some of the latest analysis. We want to stay with the election. Part of that comes from New Jersey, which has now seen its credit rating cut to BBB plus from single A minus. This is from S&P. They've maintained that the outlook is stable. We will dig into why a little bit more, but it does look like you have a downgrade from S&P on New Jersey, now down to a BBB plus. I want to stay with the election and sort of stick with bonds, as we've been talking about, and do that with Sarah Ponzak. And Sarah, it's interesting, we've been seeing a little bit of this reflation trade. We're up 6 basis points again on the 10-year to an 82. Is that what's driving higher yields?
Well, the expectations around the reflation trade this week have certainly changed. It's been a bit of a roller coaster. Yes, we do see higher yields today, but on a net basis, 10-year still lower this week and much lower than where we were on election night at 95 basis points. For example, at one point we were talking about 1% yet again. So really the expectation here is that we will not get as large of a fiscal package as was previously presumed. That means that we might not get that big pickup in growth and inflation as expected. That has ripple effects for the stock market as well. If you look at the NASDAQ, for example, this week, week. If you continue to have low interest rates, well, that bodes well for tech. The NASDAQ up close to 10% this week, up 10% this week. That just about matches the best week in over a decade. Pretty unbelievable as of right now, the best week since April. Though at the same time, though, there are some strategists out there at Barclays, at Citi, who say don't count the reflation trade completely out yet. In fact, they say that what this means is that if you don't get the fiscal side of the equation, the Fed is going to have to step in with further asset purchases, and maybe we will still see this reflation trade take hold. Therefore, Citi does look at tips, for example, and Barclays is also looking at value in small caps. Caroline.
Sarah, great breakdown from that. We thank you, cross-asset reporter. Let's just return to the breaking news of New Jersey being cut in terms of its credit rating profile by Standard & Poor's. BBB+, still well in investment grade, but only a couple of marks off now. And it seems to be the concerns about how the structural deficit has been hit by COVID-19. Remember, they just passed the Marijuana Act. They're going to be hoping to boost revenue through that. But as now, it seems as they're less creditworthy. 30 minutes to the close. This is Bloomberg.
The big concern is climate change. We can see the global warming accelerating at the moment, and the goals that we must hit are so ambitious. It's 1.5 degrees by 2050, being climate neutral in terms of emissions by 2050. That's a huge challenge. We have to reduce emissions by 50%, 2030, 2040 again. It's very, very ambitious, and mobility plays such a crucial role in there. One thing is to do it in developed countries. I think we're going to get there by 2030, but then the rest of the world, and that's just as important. If you look at developing countries, emerging countries, that's where probably the biggest challenge we are going to face, to also deploy EVs there and make mobility greener in those countries. I know it's possible to move mobility forward fast enough to be able to do its part in this fundamental threat that we're facing.
Give you a sense of the real-time action. The 10-year yield tumbling now 11 basis points, so continuing in this knee-jerk risk-off feel.
This is Countdown to the Close. I'm Caroline Hyde.
I'm Taylor Riggs.
Romaine Bostick.
Just 10 minutes. Let's look at your majors, because it has been quite the week. Look at how we have stepped up day after day. Big moves in these benchmarks. Your outperformer has been the NASDAQ, up 9% over the course of the week. Best week since April. But the S&P 500 not far behind, up 7.5%, having its best week since April. They've moved in lockstep. Today, bit more of a cautious tone from investors, but overall they have embraced this uncertainty.
Yeah, I mean, we were down for a good portion of the day. Actually starting to see some bids come in here in the final 10 minutes of trading. The major indices moving into the green. When you look on a sector basis here, you can see the materials leading here on the day for the most part. This is actually the third biggest gainer on the week, the S&P 500 materials. You really saw people move back into these names, the chemical companies like Albemarle, the miners like Freeport-McMoran. You had Vulcan, the asphalt maker, even a lot of the packaging companies like Amcor, all up double-digit percentages on the week. Your healthcare sector, that was your second biggest mover of the week behind tech. You had like Mettler Toledo, you had the drug distributors, you had the hospitals, and of course you even had the biotech names, which had rallied hard. Biogen was up about 30% here on the week. Shares halted on this day. Some of those gains could be pulled back on that news that we learned in the past half hour here. Then at the bottom of your screen, I just want to turn your attention here to one of the main indices that tracks a lot of the video game makers. Really diverging stories here. You had EA out with earnings, disappointed to the downside. You had Take-Two out with earnings. That actually surprised to the upside. And then you had some of the mobile makers like Blue Mobile really just knock it out of the park. Those shares up 20-something% here on the day, Taylor.
And what a week it has been. Let's get right to the analysis. And for that, we're joined by Larry Adam, Chief Investment Officer, Raymond James Private Client Group. Larry, I am wondering if you have been surprised by the resiliency of the equity markets this week, given that we don't have a clear resolution on who the president will be, and arguably more important for the markets, what composition the Senate may look like.
Yeah, so I'm not surprised that we've had a rally. I would say I'm surprised by the magnitude of the rally. I mean, if you think about it, if we close here right around where we are right now, we'll be up over 7% for the week, and this would be the best election week that we've seen for the S&P 500 since 1932. And just to give you a little bit more flavor of that, historically, you're only up about 0.4% during the election week. So this has been a pretty significant rally. As far as the composition goes, you know, I think that this is actually a best case scenario longer term for the market, because I do think that if you have split government, it does take some of the policy risk off the table of those significant changes, for example, with taxes down in Washington.
But, I mean, the race isn't over, particularly we're in it until January for the Senate race over in Georgia. So why is the market getting so upbeat that it will be a divided Congress?
So I think it's more about the Senate than right now the presidency, and it does look as if there's a pretty high probability that the Republicans do maintain the Senate. However, even if the Democrats were to get those additional 2 seats and get a 50-50, I'm not so sure that that's the blue wave where you could have a significant mandate and have big changes. I think when you look at the facts are that the House narrowed its majority for the Democrats. The Senate would then be 50-50. And if you look at the president's run here, it's still pretty close. You know, it hasn't been a landslide by any stretch of the imagination.
Yeah, well, that's the understatement of the day, Larry. Of course, a tight race that still is undecided, despite the fact that we talk like it is right now. I am curious, though, about going back to the Senate makeup and the potential that we're going to end up with a very narrow Senate control, whether it's the Democrats or Republicans. I'm wondering, though, I mean, the upside of that is, of course, yeah, you can't sort of slam through any major policy changes with a divided Congress that way. But at the same time, you can't slam through any sort of potentially upside sort of policy changes, such as things like fiscal stimulus and the like, without just all the politicking that has sort of delayed it already.
So the one key point I've been making is that I don't really think that this is going to be gridlock. I think it's going to be more of a split government. And the little nuance there is that I do think that if it is a President Biden, I think that he will work fairly close with, Senate Majority Leader McConnell to get things done. If you look at their history, they have gotten some significant deals done through the years, especially when Vice President Biden was with Obama. And I think you could get some things done. By that, also, I would say that when you look at the potential of what's going to drive the economy, a lot of things aren't going to change. The Fed is still going to be as aggressive under whichever scenario unfolds.
Yeah.
When you look at the COVID-19, people think that it'll be a bigger response from Biden. I think at the headline level, it might be better, as he might be a little bit more heavy-handed in having maybe a national mask mandate. But the reality is that from an economic perspective, the shutdowns are controlled by the state and local levels, not necessarily the national level. So I don't think there's as big of a difference as people are making it out to be.
Yeah, a lot to parse here. Larry, stick with us here. Larry Adam, Chief Investment Officer at Raymond James Private Client Group. He's going to help us count down to the close here with a little less than 5 minutes to go. Taylor Riggs, you're at the board. What's going on?
Yeah, well, like you said, we've been talking so much about the U.S. markets, but you know what? It's Friday, so go big or go home. So we're going to take this conversation global for just a few minutes. We do that with this chart. We've just posted the best week for global equities that you've had all the way since April 9th. Remember, we bottomed out March 23rd. So you've had 2 big weeks of big gains right after that in April, and you are getting that again. So it sort of seems like the markets really wanted any excuse to rally, and one of the big excuses, of course, we got behind us this week. I do want to flip up the board because there's a big major downside loser today. That's Electronic Arts. They're down 7%. They certainly did not inspire analysts with their earnings report. They lowered their full-year outlook for expectations. Analysts citing greater player and payer churn within some of their core franchises. And that sort of brings us back into some of the tech markets. And Larry, I want to bring you back into this conversation. I don't know if you can see the chart, but let me walk you through it. You're seeing big outflows from the triple levered big tech Qs, but then big record inflows into the short Qs. So you're seeing a big reversal here into people really now trying to short some of the big tech markets. Is this just getting too far ahead of us? Are we concerned about valuations? Where are you within momentum in big tech?
No, I still like big tech. First of all, if you look at this earnings season that we've come through, they've had one of the most impressive earnings seasons that we've seen. You know, they're coming in much better than expected, like 7 or 8% better. And I think that that actually offsets some of that valuation concerns that you just mentioned. I think it's also important to keep in mind that regardless of who wins, I think you're going to see infrastructure in the form of broadband being rolled out and 5G. And that's going to continue to lead to even more visibility into the earnings for the tech sector. And then the other point that I would make is that while I do look at fund flows, I'm not as concerned necessarily about fund flows that people are. When you talk about the biggest, most liquid markets in the world, they don't have as big as an impact. I mean, just look at the equity markets overall. Since the last couple of years, we've had net outflows, but the equity market has continued to go higher. So if this was a small market, a small sector, maybe emerging markets, I'd be a little bit more concerned, but I'm not as concerned with the size of the tech space overall.
Interesting points there, Larry. Let's get across asset as well, because I like the way Taylor took us global. I want to go into the bond market, which is also Taylor's favorite. But what do you make of the yield move that we've seen, like today, bouncing back higher, but over the course of the week, we've grinded tighter? Are we still in some sort of range from here on out with the Federal Reserve's consistency, or will it have to be based upon fiscal?
So when I look at interest rates, I was actually surprised when interest rates were moving because of the threat of a blue wave. Yes, there was going to be more debt, more issuance, so maybe that would help modestly send it higher. But if you look back over the last couple of years, the more debt we've had to issue, it hasn't taken interest rates higher. They've actually gone lower. To me, ultimately what will drive interest rates higher is if we can see this economic momentum continue to build. That is what will ultimately take interest rates higher. And if you look at our target, we think that rates will be at about 1% by the end of this year, 1.4% over the next 12 months, reflecting that better economic data.
All right, we're speaking here with Larry Adam, Chief Investment Officer at Raymond James Private Client Group. Counting you down to the close here, a little bit less than a minute to go, guys. And it looks like we are going to finish pretty much flat on the day. But of course, as Larry was pointing out, I mean, this is still shaping up to be a phenomenal week against the expectations, I think, of a lot of folks.
Yeah, what a week. If you think about it, up almost 9% on the NASDAQ, almost 7.5% when you look at the S&P 500. Whether or not the rotation has been on, whether or not it's been a look at earnings or the like, Taylor, whatever the case, markets seemingly liking uncertainty more than anyone had factored in before.
And I would argue maybe it was economic data this morning, it was jobs day, and can we not forget Wednesday and Thursday we had a Fed decision as well, so it's been Fed day as well. And this is really where I'd like to bring back in Larry Adam, who's still with us, the Chief Investment Officer of Raymond James. Because, Larry, you were mentioning yields going up to 1%, but I am curious, Jay Powell's at the helm. He keeps things calm no matter what goes on within the fiscal side of things. Would he even let yields get up to 1%, or is he the calm that is pushing these markets higher?
Yeah, I think you bring up a great point. One of the reasons why we don't think rates go north of 1.5% is because this economy is so much more interest rate sensitive than it has ever been. So just a modest uptick in rates will all of a sudden start to cause things to slow down, particularly, for example, the housing market. And that, by definition, would then cause rates to come back down. So I think there's this self-correcting mechanism, if you will, that rates really can't afford to go significantly higher. And then you combine that with the fact that we're going to continue to be issuing record amount of debt. We really can't afford for those rates to go higher. And people don't really necessarily look at this, but not only are we issuing new debt, but over the next 5 years, 2/3 of all outstanding Treasury debt will need to be reissued. So we have to keep rates lower for longer.
Taylor takes us to bonds. Let's get it back to the equity market. Romain, dig beneath some of these indices, though, because I know you love to find the key movers on the day. And it was all about biotech almost, wasn't it?
Yeah, I mean, biotech was on fire this week, but we kind of forget, I mean, and Taylor touched on a little bit earlier about some of the earnings we got this week. I mean, we're still seeing very positive growth out of a lot of companies, and not only in terms of revenue, but also even in terms of some of the EBITDA measures, not necessarily the GAAP measures. But you had names like, well, yeah, I mean, GAAP it's non-existent. Did they still teach you that in CFA school?
They're killing me.
Anyway.
I just died.
Well, well, I mean, real quickly here, though. I mean, you had, names like Trade Desk, of course, a big online advertising platform. I mean, we had seen some of the social media companies when they reported earnings saying that the ad market, the digital ad market was good. Trade Desk, that's the one that funnels a lot of those ads onto those platforms. Those shares were up 27% on this day today. You had Palantir, of course, that big IPO had a phenomenal week, was up strongly yesterday. It gained another 16% today. And then Zillow, again, another online platform here that, of course, has been at the center of the big housing market boom over the past few months. Those shares are rallying 14% here on the day.
Zillow acting like a Zoom. I mean, geek out for us, Taylor, because what do you...
Don't go Gap on us, though.
Don't go Gap, but do go like... That was what really stuck out to me. Some of the earnings numbers, the fact that we're beating on an 85% basis, basically, in terms of EPS, the fact that we're beating on revenue 65%, it's just interesting as to when we get back to those sorts of fundamentals and we're not dictated for once more by macro policy or indeed political policy.
And Romain, how much of this was we'd gotten too bearish, right? And we're finally getting some big guidance from analysts. And frankly, all the earnings, like you said today, really looked good and strong. And does that fuel big tech rally that we continue to see in some of those big high flyers that sometimes continue to push higher?
All right, well, I want to get the thoughts here of Larry Adam on that, I guess, bearish sentiment. The idea here that a lot of people all year long, Larry, have really been calling for the sky to fall. Obviously, we had that big swoon in March, but the resiliency of this market overall has been, I guess, not only, I mean, I don't want to use the word surprising, but it's certainly been a little bit interesting to see just how much these names have continued to move higher, just how much investors are not only willing to embrace big tech stocks, but also the mid caps, the small caps, and everything in between.
So I think a couple of things. I think just getting back to your earnings points, keep in mind that when we came into third quarter earnings season, the estimates were for earnings to be down north of 21%. Right now, as we sit here, that's been revised higher to only being down about 8.5%, and we're not even done. So that's a significant beat. So that's been very helpful to help boost, some optimism for as we go into the fourth quarter and then next year. As far as fund flows, as we mentioned, I think that kind of marries very nicely with a lot of this bearish sentiment out there. And believe it or not, I actually think that that's a contrarian positive. If you look year to date, I think we've had over $300 billion come out of the equity market. Well, that's not a sign of complacency. That's not a sign of uber optimism. And the market does tend to climb that wall of worry. So if, in fact, some of that money comes back into the market from sitting in cash, I think that could help propel it even higher as we go into next year.
And then some. There has been so much talk about the cash sat on the sidelines. Larry, I'm interested in the great US dollar and its demise this week. I mean, the fall in that, it's been basically the only asset that has gone down. And I'm interested in what this means, the ripple effect for some of the US big exporters, or indeed whether it feeds into your analysis at all.
It does feed into the analysis. And, our expectation is that the dollar will weaken. Under a President Biden, it may weaken slightly more than under a President Trump, because if you look at what is likely to happen, you're probably likely to take some of the edge off of the trade rhetoric. And that'll help facilitate a little bit more trading, if you will, and trading relations. Now, from a U.S. perspective, a weaker dollar, in my opinion, actually helps bolster earnings. Because remember, we do still get about 40% of our earnings overseas. And if the dollar weakens as we bring them back, it's actually worth more to those multinational companies. So for large cap, that weakening dollar will continue to be a good catalyst for better earnings into next year.
Larry, Adam, getting us back to the fundamentals of what's actually happening in businesses amid all this political instability. Chief Investment Officer at Raymond James Private Client Group. It was great to have you with us for the close. Happy weekend. Stay well. Now, more markets coverage coming right up on Bloomberg Markets at Close. We're going to talk, in fact, jobs data. We're going eco for you. This is Bloomberg.
Women leaders were actually better at controlling the deaths from COVID-19. Do you think out of this pandemic, we'll see more countries be willing to elect female leaders?
When we look at women leaders, we tend to project on them baggage that they shouldn't bear.
Women are given an opportunity when no one else wants to do the job.
Women had a very clear objective. They wanted to save lives.
The women leaders, if you look at their careers, have also built up a level of trust.
In fact, women have to be better at communication in order to be elected as leaders, whereas this doesn't hold true for men.
We need to get those sexist stereotypes out of our head and give women a fair run for leadership.
Trying to change the stereotypes about women is not only the business of women, but men have to be part of it.
So do you get tired of people calling you a jazz legend? You feel older when they say that to you?
Yeah, I like the word jazz. I don't like the legend.
What a week for politics. What a week for the markets. And despite the uncertainty, we went significantly higher when you're looking cross-asset. And on the equities front, S&P 500 closes up 7.3% higher on the week, up 9% on the week on the NASDAQ, just inching into the green on the day, just 4.3 points. It was much quieter in terms of the amount of trading and the risk-on attitude, but nevertheless, the week that was one where we embraced uncertainty, Taylor.
And it was a week and a day that was Jobs Day. Let's not forget that. Some of the economic data that we started the show with a few hours ago highlighted a pretty good picture. The numbers looked better than expected. Unemployment rate fell faster than expected. But underneath the surface, and Romaine, this is where I really like the chart, it does show that struggle where you have permanent layoffs are falling. Let me say that again. Temporary layoffs are falling, but permanent layoffs are rising. That is the concern with a structural change that we are seeing in COVID-19.
Yeah, a lot of changes here going on, and it'll be interesting to see the pandemic, of course, not over, something that we should always point out consistently here. But we do want to talk about the jobs market a little bit more, and we want to bring in Elise Gould. Of course, she is the Economic Policy Institute senior economist, of course, keeps a very close eye on the health of the job market. The report today, Elise, seemed to show a job market that was, I guess, in some stage of recovery, but I guess longer term, there seem to be some issues that we need to parse.
That's absolutely right. So the top line number suggests some growth, strong growth in other times, but actually a slowdown in growth. We look at it over the last few months, and that means that a full recovery is years off.
Years off, and years off from some more than others. And he's stripped back some of the numbers and tell us who's hurting the most at the moment.
Well, right now, the recovery seems to be stronger for white workers than for Black workers and Hispanic workers in terms of where they can get back to. Their employment rates are still very depressed, particularly for Black and Hispanic workers. Young workers are still suffering. Obviously, there's still a huge jobs deficit in leisure and hospitality. State and local governments continue to see job losses, even as the overall numbers continue to rise.
On that theme, you're seeing a similar rotation, if you will, of women also being hurt harder because they're in part having to stay home and help keep their children in school, and that school is remote. What is the solution? If we're not opening schools, do we need to start to? How do we help support women so that they don't permanently drop out of the workforce as well?
Yeah, it's a great question. What do we do when we need to meet the needs of the students? We need to meet the needs of the teachers. And honestly, I'm not an education expert, so I'm not sure. I'm also not a health expert, so I don't want to speak out of turn. But I am very concerned, like you are, that as women continue to be pushed out because they have to take care of their kids who are doing virtual school at home or maybe other caregiving responsibilities, that could have a long-term devastating impact on their participation in the labor force, on what we already know is a sizable gender wage gap in the economy.
Before the COVID-19 pandemic, when you looked at the job market, we were still sort of shaking off, I guess, the final remnants of the big global financial crisis and the recession that grew out of that. There was a sense there that a lot of the minority populations, Blacks, Latinos, women, et cetera, we're finally starting to catch up. We're starting to close the gap on wages and other sort of metrics here. Even if we do get a job recovery on the top line that brings us back up to pre-COVID-19 levels, is there a sense that those wage gaps and other gaps that we were dealing with prior to COVID-19 will be wider once we get to the other side?
Well, they were wide, and I think that there is reason to believe that they may be wider. We are already not seeing a broad-based recovery. One of the statistics, it's a fairly small number that came out that I noticed today, was the unemployment rate for white women is now down to 5.6%. And the Black men workers, their unemployment rate before all this began in what we might call the before times, it had gotten down to 5.8%. So now for white women, it's below the lowest we had seen for Black men in a long time. And so that inequality is already striking, and those disparities are already apparent in the economy as the recovery continues. So we have a lot of work to be done to get back to the pre-COVID economy, and then to try to really claw back those gaps that have been so persistent for decades.
What, as Romaine rightly pointed out as we headed into this segment, is that COVID is still rife. The numbers amidst the political furor that we're seeing at near record highs in the United States. Certainly we've seen them starting to ease off the very worst that we've seen in Europe. But what does that spell for you, do you think, in terms of how much longer this pain is going to be here?
Well, it is really up to the health experts and all the epidemiologists and all of those that are finding a vaccine to see how this can play out. But it is very clear that in the meantime, policymakers can do a lot more to provide relief to workers and their families. I'm very concerned as we head into winter, as the pandemic numbers continue to climb, that more people will literally be out on the streets. We're going to have the unemployment insurance, both the enhanced and the extended benefits are all due to expire at the end of December 26th. And we have long-term unemployment on the rise. And what are we going to do? Those people need the money, they need the relief, and we need the stimulus for the economy.
Lisa, I think some of the concerns, big picture, coming out of the 2008 financial crisis was what seemed to be sort of a slow recovery. We can't afford that. People can't afford that this time around. They need a recovery and they need it fast. Regardless of who's president, we'll keep politics out of it. What is the best prescription for a fast growth recovery going forward?
Spending. We need to spend. We need to literally put more money in the hands of workers and their families who have been devastated by this. We need to put more money to state and local governments. That relief will help get this recovery moving. Why the recovery was slow before is that after the initial stimulus in the aftermath of the Great Recession, we pursued austerity at all levels of government across the country. And in those states that didn't, they actually saw stronger wage growth and stronger job growth, And so we need to listen to those lessons that we learned and not go down that same path. Otherwise, it will be long and it will be devastating.
All right, Elise, always great to get your thoughts here. Have a wonderful weekend. That's Elise Kuhl, Gould, a senior economist over at the Economic Policy Institute. And guys, you know, she brings up a great point too. I mean, we, of course, this week so focused in on the numbers with regards to electoral politics, numbers that still haven't been resolved. This is also a day, Caroline, where we're seeing a record number of daily infections in states like Ohio, states like South Dakota, and states like New York. The COVID crisis is still alive and well, and of course, heading into these colder months, there's a concern that those cases will increase to the point where it could sort of impair economic activity.
And we just look over to where I come from, the United Kingdom, in lockdown once again. It re-entered that 1-month lockdown yesterday. And in unison, we saw fiscal policy and monetary policy work together. When will we see that perhaps in the United States? Because at the moment, fiscal policy is still being quibbled over, Taylor.
Yeah, everyone on Twitter is going to hate me for this. And of course, rising cases is not good, but you have to take a look at the death rate as well and how hospitals are finally being able to maybe start to understand how to treat. So that, Romaine, can be also, you know, just another data point that we can continue to follow. We will continue to keep covering all of this. This is Bloomberg.
The Boston Symphony Orchestra presents BSO at Home. While you stay inside, enjoy a curated collection of archived concerts and behind-the-scenes stories from BSO musicians. BSO Homeschool provides lessons for music lovers of all ages. New performances and messages from musicians are added regularly. Enjoy these selections and much more at bso.org/at-home.
Going into the fourth quarter, we're going to have to see how healthcare systems grapple with the next wave of the pandemic. But I believe that healthcare systems have now learned a lot, learned how to manage the cases better. So overall, we're cautiously optimistic.
I'm Mark Crumpton with Bloomberg's First Word News. President Trump says the American people deserve to have, quote, full transparency. In a statement, the president said this isn't about any single election, that it's about, quote, the integrity of our entire election process. Mr. Trump added that his campaign will pursue the process, again quoting, through every aspect of the law. Pennsylvania Republicans have asked the U.S. Supreme Court to order the state's counties to segregate mail ballots arriving after Election Day. They claim state officials haven't gone far enough to make sure those votes can be invalidated if the GOP wins a legal challenge. Joe Biden has taken the lead in Pennsylvania over President Trump. With 20 Electoral College votes, it is the biggest remaining prize on the map. President Trump cannot win re-election without the Commonwealth of Pennsylvania. Georgia election officials say they will likely need to recount all votes cast in the presidential race. President Trump and Joe Biden are separated by about 1,500 votes, with Mr. Biden holding the lead. State law permits a candidate to request a recount when the margin is within 1/2 of a percentage point.
We're investigating any credible accusation with any real evidence behind it. But let me tell you one thing. When you have a narrow margin, little small things can make a difference. So everything's going to have to be investigated to protect the integrity of the vote. Our office intends to do that. And like I said, if you get a wide margin, it doesn't matter as much. Narrow margin, it does.
Each county in Georgia will have to certify its results, followed by an audit before any recount begins. That process could take a while. Georgia officials say the race may not be certified until the end of the month. House Speaker Nancy Pelosi is urging Republicans to come back to the negotiating table to try and reach agreement on a coronavirus stimulus package. The Speaker says she prefers an omnibus bill rather than a stopgap measure to complete government funding for the rest of fiscal year 2021. During a news conference today, Speaker Pelosi also expressed confidence that Joe Biden would win the presidential election. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Mark Crumpton. This is Bloomberg. Romaine?
All right, welcome back to Bloomberg Markets to Close. Day 3 here with the election count continuing to go right now. It does appear that Joe Biden is taking a small lead in Pennsylvania over President Donald Trump, of course, one of the pivotal swing states that will decide the outcome of this election. For more, we want to bring in Jeannie Zaino. She is a Bloomberg contributor and an Iona College professor. Jeannie, thanks for being here today. This is a very slow motion count at this point. Not really clear when we're going to get the final results from these key states, whether it's Georgia, whether it's Pennsylvania, whether it's Arizona. We've been talking about Joe Biden as if he is going to win this. Let's start from the opposite end of the spectrum. Is there a path to victory right now for President Trump?
You know, there is a path until anybody reaches 270 or we realize nobody can. So I would say yes, but the path is incredibly narrow. And that's obviously why we've all been talking about it as if Joe Biden is likely to get there. And this has been the case for several days, but increasingly so. You know, when you see Joe Biden go ahead, even narrowly in a state like Georgia, go ahead of the president in a state like Pennsylvania, double digits in Nevada at this point, double his lead in Nevada. That's an indication that very, very tough for the president. And we should be very clear that if Joe Biden captures Pennsylvania, and that's still a big if, then the president has no path forward on this. So that's where we are at this point. Again, there is a very, slim chance, but unlikely the president can catch Joe Biden, again, unless there is some kind of recount or overturning of what we've already seen out of the states that have already been decided.
It was about 24 hours ago that the Vice President Biden took to the stage to try and speak of unity, a realization that this is a country divided, almost split entirely down the middle. And he wants to sort of work to that and speak to that. But there is still the question of Congress looking pretty split at the moment. We have these runoffs in Georgia. Out until January, we won't know the way the Senate falls. But how important is that?
It's critically important. You're absolutely right. Joe Biden's entire campaign message has surrounded this issue of unity. He has been frustrated by the way the president has led. He said that he got into the race because of what happened in Charlottesville. He has continued to pound this message. He has said character is on the ballot. So this message of unity is one he has run on. Now, one thing we always say in my profession is that it is one thing to campaign for president and it is another to be president. So while his message in campaigning has been one of unity, the ability to fulfill that is going to depend in part on what you're talking about, which is who controls the Senate and can he bring together a Mitch McConnell-led Republican Senate with a Nancy Pelosi or another Democrat-led House and him in the White House to come together and move forward on important policy issues. And, we remember back to when Barack Obama was elected and Republicans said that they were going to say no when he tried to move forward. And Joe Biden may, and we don't know yet, face something similar. But at the very least, we do suspect that if we have divided government, the big policy issues that Democrats have wanted to move forward on, the Green New Deal, Medicare for all, a more progressive tax policy, those things are going to be much harder to achieve with a Republican Senate. And of course, Joe Joe Biden also has to handle what is an increasingly big and diverse Democratic Party with many progressives and many moderates to contend with, in the same way Nancy Pelosi has had to contend with those contingencies in the House. So he's got his work cut out for him if indeed he is elected president, to fulfill this sort of unity message he's been talking about.
Yeah, Jeannie, talk to me more about that, particularly the mandate, what that is going forward, particularly as you mentioned, you have Mitch McConnell, you have Nancy Pelosi, and the House Democrats lost seats in this. What then does the composition, what is that mandate to lead going forward?
Yeah, a very tough loss for Democrats. And I'm so glad you raised that, because one of the things that pollsters got wrong was most of the prognosticators said that Democrats would pick up at least 0 to 10 seats in the House and certainly continue to control. Well, we wake up and they have lost, I think the last count I saw was 6 seats, and I hope I have that right still. But they have lost seats and retained control, but much narrower than they wanted or thought. And it does raise questions. We've heard some grumblings from some of those people who lost their seats that Nancy Pelosi and the Democratic leadership moved too far to the left, making it impossible for them to hold seats in more purple districts. And that's something I think Democrats are going to have to contend with as we move forward. How do you keep this big, diverse caucus together, have so many progressives and liberals with a lot of energy, and we hear a lot from them, but you also won in 2018 if you're a Democrat in those purple states, and they have a very different constituency. And melding those two is tough. Nancy Pelosi has faced it, and now if Biden becomes president, he's going to face that as well, coming out of the House, and maybe to a certain extent from Democrats in the Senate, although it looks likely they will be in the minority again.
Jeannie, do you think the Democrats at the moment realize to the extent that they've lost? I feel like there's going to be triumphalism, but do you think that will be dialed back?
You know, I do think that Democrats have to contend with the fact that Donald Trump did get a historic number of votes, second most in history. Obviously, under these circumstances, Joe Biden got the most. So it is not as if we saw huge numbers of Americans repudiating Republican policies. They may not have liked the way he handled COVID. They may not have liked his tweeting and his personality and character. But a number of them seem to like some of his policies, and Democrats have to contend with the fact what they're talking about in some cases is too far to the left, and the special election in Georgia is going to put this to the test for them.
So smart. Jeannie Zaino, Iona College professor and Bloomberg contributor, thank you as always for joining us. I'm done, but stay tuned. What'd you miss? It's still coming up next.
Bye, Taylor.
This is Bloomberg. This is Bloomberg Best, your weekly review of the most important business news, analysis, and interviews from Bloomberg Television around the world.
Ken Burns, welcome to Bloomberg Big Decisions.
We have always been a mixture of things. We are always stronger for that mixture.
Growth is a way to stay competitive, delight more and more consumers.
Welcome to the Best of Bloomberg Technology. I'm Emily Chang.
They've moved the needle by acknowledging that they have to monitor the content.
What is one word of advice you'll take with you?
Learn how to listen. And that is certainly something that has served me well.
Ankiti, where do you go from here?
It's a huge market. It's a huge opportunity. I want to go 100x from here.
Our philosophy is to partner where we can and stand apart when we should.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan. We did see some pressure on the futures. That is now being reversed.
From Bloomberg's World Headquarters in New York, I'm Caroline Hyde.
I'm Joe Weisenthal.
I'm Romaine Bostic. Let's get you caught up on where we stand in U.S. financial markets. A flat day here on Wall Street, but that obscures what is turning out to be the biggest one-week rally for U.S. equities since April.
But the question is, what do you miss?
That rally, that monster week for assets, nearly all assets, pretty much everything roared higher, all except the US dollar. But why is an uncertain election spurring such investor appetite? Is the blue wave trade on or is it off? It certainly looks like the Democrats still have a crack at taking the Senate as Georgia moves to a runoff. But with Biden inching to the White House, what policy making is the market baking in? Joe, again, uncertainty reigns, but the buying has taken many by surprise. What grabs your attention?
The real winner this week, not Biden, not Trump, not anyone else, but the good old 60-40 portfolio. Everybody had left it for dead not long ago. What's it going to work? One of the best weeks for the 60-40 portfolio in a long time. The end of the election volatility shooting the stocks component up. The fact that we're not likely to get a big stimulus, shooting the treasuries component up. The diversified investor wins again.
Yeah, and another big winner here on the week, Joe, of course, was anyone who was shorting volatility heading into this week. Remember, most volatility measures had really started to pick up. The idea that we were going to get a contested election, an election that might not be decided for weeks, if not months, at least as of today, it looks like we may get a result here in days and maybe even potentially hours. And that seems to have settled the market a little bit here. Some clarity of who the next president might be, some clarity as of what Congress will look like. And you see there your main measures of market volatility in equities, your main measures of FX volatility, and your main measures of bond market volatility, all moving lower.
Diversification is key, and I bring you the asset class has actually, for the year now, beaten all of them. And it's crypto. Who would have thought that actually slowly but surely the election week would have made people look into Bitcoin a little bit more? But we're now at like 15,000 at the moment. We haven't seen that sort of number since all the way back in 2018. 14.2% is how we rallied in Bitcoin over the last 5 days. Stealth, but it was there, so it seems pays to be diversified right now, hey, Joe?
Yeah, admit it, Joe. You thought she was going to say the pound or something, right?
Pretty impressive there. All right, for more on this week's market moves, let's bring in Bloomberg cross-asset reporter Katie Greifeld. Katie, what are you watching?
Well, I mean, just it was mentioned in the intro that you've seen everything rally this week, which is especially crazy to me when you consider that we're currently in what was supposed to be the worst nightmare for markets. We don't officially know who won the presidential election, and it's fairly clear at this point that we won't see Democrats take both houses of Congress. There's still some runoff races to get through, but it's pretty consensus at this point. Yeah. And again, this was supposed to be the sort of poison to the stock market. You know, we're probably not going to get as big of a fiscal package as we hoped. And still, you're seeing the NASDAQ 100 up more than 9% this week. That's the best week since April. So, I mean, this is the question I've been asking since Tuesday. What is going on? How do you justify this rally? Of course, there's a lot of backfitting going on, but it seems like the explanation is that gridlock is good. Gridlock is good. We're not going to see that huge increase in taxes. Probably won't hit S&P 500 earnings as much. And not to mention, we've got a Fed that's prepared to buy bonds and for as long as needed, pretty much.
Well, I guess talk about the Fed here. I mean, who's more important right now to this market? Donald Trump, Joe Biden, or Jay Powell?
It seems like it's Jay Powell is the what we're hearing from investors. We just put out a story on the terminal, actually, that at the end of the day, we don't know who the president is, but we know that Jay Powell is ready to step into markets at any point. Even though bond buying has slowed a little bit, you heard this week from policymakers that they're thinking about shifting purchases further out the curve. And when you think about the ripple effects in the stock market, that's great news for the winners. That's great news for tech companies, for growth companies. The fact that we could see the Fed try to tamp down longer term rates, that's just going to help justify just lofty valuations in the tech space, if you can call them that.
Katie, I brought up Bitcoin earlier, but interestingly, people think it's rallying not because of the election uncertainty, but because of COVID. And it almost feels like we've lost that train of thought in this week. We've lost a lot of trains of thought this week. But what about COVID and what about the need for further fiscal stimulus if we're going to be starting to see these record numbers really start to slow down and grind us in terms of the labor data for today?
So I'm not quite ready to call Bitcoin a haven, but I think the point about COVID is very important for what we're seeing in the stock market. Because again, I mentioned that the NASDAQ 100 is having its best week since April. It's 2 percentage points ahead of the S&P 500's weekly gain. And again, this is the trade that has benefited during COVID. That, these stay-at-home tech behemoths with these strong balance sheets, these are the type of companies that would continue to probably fare better than others should we see an environment of slowing growth, which it's very possible we're heading to if we don't get that stimulus deal as big as we had hoped. And not to mention the numbers that we've seen this week in terms of case counts. They've been very worrying. We got another scary headline out of New York City just a few hours ago. So that's kind of been the underappreciated boogeyman in the back of markets, that COVID is still a real issue.
Yeah, it's still a real issue. Of course, the market really looking for cues from wherever it can get it. The headline of your story, which I just looked up, stocks show Jerome Powell is still Wall Street's head of state. So I guess we should put some Powell 2021 flags on the back of our F-150s or something. All right, Bloomberg's Kitty Greifeld, have a wonderful weekend, cross-asset reporter for us, breaking it down in a wild week here in markets. And we're going to continue this conversation about the wild week that went on in the Treasury market. We saw that reflation trade actually bubble up. Then we saw it dwindle. The ride that interest rates have taken, the benchmark Treasury rates have taken this week, really remarkable. We're going to break it all down with our next guest, Guy Labat. He's Janney Montgomery Scott, Chief Fixed Income Strategist. He's going to be joining us next. This is Bloomberg.